The whole thing about Bitcoin from the very go was it's anti-government. The price you pay is extremely important in this game. Do not let anyone ever tell you it doesn't matter, just buy it, it's got great growth. The only people saying that are people that don't know how to run valuations, and they're likely saying it during a peak euphoric bull market. When you see the money that Google is spending, Amazon is spending, Meta is spending, the thing with these sorts of companies is it's not like they don't have the money to spend on it. That's the thing. The commercial side is always the side of the business that for me has been the huge opportunity. Countless business models and countless economies around the world, and like this is the biggest thing to ever happen in human history. It's always darkest before the dawn. Might not be true, by the way. Why is Nvidia gone sour on OpenAI? Here's my personal opinion on how I read this situation. You gotta be flipping my flapjacks. Last night I posted this on my X page. I said, can I take your order? I was working at McDonald's. But then after today, I officially quit my job at McDonald's. We're looking good, ladies and gentlemen, okay? All right, in all seriousness, we got a lot to get into here today, okay? We're gonna talk about a lot of stocks, opportunities I see out there in the market. A lot of people are curious. Today's insane bounce, which it was massive, right? Look at the Russell Wilson, up 3.6% here today. IGV, the software ETF, up 3.5%. The Dow Jones Industrial Average up 1,200 points. People are like, is this real? Is this just a dead cat bounce? Like, what's going on here? I'll share my opinion and perspectives on if this is real and lasting or not. Then I want to share another perspective on something very important I think everyone's missing out there right now, okay, in regards to where the market's headed, the economy's headed, all those sorts of things, okay? After we get done going through that, 50 minutes ago, Tom Lee went on, spoke about his views on the market, crypto, all that good stuff. I want to react to that. They had all the big dogs on going on today on CNBC. Ed Yardeni Research, speaking about his views on the market from here. So looking forward to reacting to that one. And then we're going to get into Richard Bernstein here and his opinions on where this market's headed, all that good stuff. Okay, a lot to get into here today. It's been an action-packed week. It's been an insane week. I hope you appreciate me trying to keep you guys up to date with everything going on between this channel, the reaction channel, and then my main channel as well. I've been trying to keep you guys up to date. I've even uploaded a few shorts this week, all that good stuff, man. One thing, all I need from you guys, if you could just smash that little like button for me, I appreciate you. For everybody that's already done it, thank you for doing that. Additionally, make sure you got notifications on for this channel so you can be notified every time I drop a video, which, man, in this market, you never know. Like, things could shift in a second and I got to release a 1 a.m. short. Like, you never really know what's going on, right? So, yeah. And then additionally, very important, first time announcing this, but the gold tier in my Patreon, it's the highest tier in my Patreon. That tier is usually $145 a month. We're doing a 1-day sale on Valentine's Day. Okay, that's just about a week from now, essentially. Okay, 1-day sale. If you want to get access to the gold tier for $49 a month, it's usually $145 a month, and that will include my Become a Master Stock Market course, see the stocks I'm buying and selling each week, access to that Patreon Discord chat, all that good stuff. Okay. That will be the pinned comment down there. You can click on that and put in your email, put in your number, and we'll either text over the deal or email over the deal when it drops. That's the only way you'll be able to get that deal because I'm not recording a video on Valentine's Day. I'm going to be with my wife. It's on Valentine's Day is on a Saturday. I'm going to be long gone, okay? So the only way you can get the deal is if you enter in for the deal, essentially. So do keep that in mind. And that will be the pinned comment down there, okay? Alrighty, guys. So listen. Do we want to start with AMD? AMD. This is like the best news ever for AMD, okay? I mean, you know, first off, AMD's been an incredible stock over the past year. It's up 89%, right? That's very strong, like Donkey Kong performance. But listen, you hear Google saying they're going to spend $200 billion, right? You hear Meta talking about 115 to 135 billion. You're talking about Google saying $180 billion, right? Just understand this is a huge year for AMD. They get the 450 series out this year, right? A good chunk of that is going to end up in AMD's pockets. Not nearly as much as Nvidia, but keep in mind, Nvidia has like a $4 trillion-ish market cap on it. AMD has like a $400 billion market cap, right? They're not even remotely close to value the same. But a bigger and bigger chunk is going to start ending up in AMD's pockets as these future years tick on. And it's really good news. And so, you know, I think you either have to own Nvidia or you have to own AMD or you have to own both. Like you got to own it, man. I would feel so off sides right now if I didn't have $1 million plus in AMD stock. I would feel so offsides. This is, you gotta understand, we're going through a multi-year ramp period right now, right? Lisa Su's talking about, 35% CAGR top line for the next 3 to 5 years. She usually sandbags, so don't be surprised if that CAGR is more in the 40-45% range, right? The margins are increasing, and we haven't even seen 450 series yet. Oh my gosh. Can you imagine the margins? So you got to own one of those two stocks, if not both of them, right? I used to own Nvidia. It did me well. I own AMD now. I think AMD is a far better performer. It's been a better performer, right? And, you can look at AMD versus Nvidia since the whole tariff drama lows, right? And so let's pull it up here. And obviously AMD gave back a lot of gains here, okay? But look at the divergence from kind of that, lows time period. AMD is up 166% from those lows. Nvidia is up 92%, right? So exactly what I thought was going to play out is playing out. And we haven't even gone into production for the 450 series. Now, I know the market's been complete risk off. No one's, wanted to even talk anything bullish about stocks this week. Okay, so let me go bullish on AMD. All right. If you're talking about a hype cycle starting in a stock, you could have a very strong hype cycle this spring in AMD, right? And I know no one's thinking hype, no one's thinking excitement. It's just been risk off. Everybody's talking about bad in all stocks, right? But just understand, you could be about to go into a hype cycle for AMD. And the reason being is, this summer, it's a question of, is this June, is it July, is it August? But this summer is what? The 450 ramp. And there's going to be crazy hype in the spring. Whenever a company's getting to some big monumental thing, the lead up to that hype and excitement. AMD is one of the most talked about stocks in the market. I would call it a top 10 most talked about stock out there. Dude, the hype and excitement this spring for AMD is going to be insane as you get closer and closer to that 450 ramp. If next earnings, Lisa Su comes out with a banger guidance, this guidance was really good. She did this quarter, but it wasn't like an over the top, like, oh my gosh, it's game changing. If the next quarter she comes out with that sort of guide, right? And we know Lisa Su sandbags, so she's talking about ramp in the second half. What if they do start actually ramping toward the end of the first half? Has anybody considered that yet? That may not. Don't bank on that. But what if it happens? Can you imagine the hype and excitement that comes into AMD? All of a sudden, people realizing, oh my gosh, they're going to actually beat numbers next quarter, the next quarter, like way more. Woo! So, AMD, very, very bullish. I understand no one wants to talk about bullish things right now, but I just would not be bearish on these stocks. And also, guess what stock I stuck up for yesterday in last night's video? If you watched last night's video on the main channel, right? What stock did I stick up for in that video? Nvidia. I specifically talked about Nvidia stock in that video and talked about, that's a hard stock to get down much more than you already have it down. It was at like 170 yesterday or whatever. And I was explaining essentially, like, you're hearing all these CapEx numbers, the biggest winner is Nvidia. And so any thought that like Nvidia is going to miss numbers this year, it's out, right? Now, growth rates are going to decelerate for Nvidia as this year ticks on, and same thing in future years, right? You can't keep growing at 100%, 50% clips. So that's going to come down, but the numbers are still going to be astonishing out of Nvidia. And so I'm one to definitely stick up for Nvidia and tell you that's a tough stock to get down much more than what you got down. With this sort of spending out there, let all of a sudden OpenAI raise their money, the $100 billion. What you got left? Right? We know Amazon's coming in with $200 billion. We know Meta's talking about 115 to 135, and we know Meta, if anything, they go over. As far as Bitcoin, Ethereum, for the market itself, that gave the market huge comfort. Basically, Bitcoin went down to that 60K level and bounced hard. Like, it went down to 60K and bang, straight up like in a V. It was incredible. Like, it seemed like minutes. It went from 60K straight up to like 63, 64. It was unbelievable, right? But that gave the market comfort. Don't think crypto has bottomed. And obviously, we're going to hear Tom Lee's opinion on crypto bottom here momentarily, but I would be careful betting that, for sure, like Bitcoin, Ethereum have bottomed, like it's just up from here for the rest of this year. Keep in mind, when you're talking about an asset class that's in a falling pattern, Bitcoin, Ethereum, those could bounce very, very short term here, and everybody starts thinking, oh, okay, we're back on another bull run, or everything's okay, like the big drop's over, right? All for a month from now or a few months from now, a next big leg lower, right? And then a next big leg lower. And then next thing you know, Bitcoin's at 30,000. Once again, don't bank on it. Might not happen, right? And I'm placing no bets on if Bitcoin's going to 30,000 or if where the bottom's going to be at or if we already hit the bottom. I'm just explaining that when you're talking about an asset like that and you think like it's over, like the bad stuff's over, it just comes back to bite you again and again and again, right? So don't see today's price action and think like, oh, Bitcoin's just going to 1 million now, or Bitcoin's going to 500,000. It's over. Like, just understand things could easily go the other way. And so just something to kind of factor in regards to that. Okay. SoFi, this was, a welcome bounce, 7% here. It was pretty unbelievable, that stock going under 20. Like, SoFi's at a place now that you wouldn't think that stock would go under 20, but you gotta understand, what is SoFi? Well, SoFi is more of a risk-on asset. And so with a stock like SoFi, when you had all the risk-on type assets selling off, SoFi got sold off as well. Elf on a shelf. I spoke about this stock in last night's video, actually toward the beginning of the video. I spoke about ELF and I spoke about Estee Lauder, and I'm talking about the video on the main channel, Financial Education is the channel name for anybody that watches this and doesn't follow that channel, okay? I spoke about ELF on a shelf. That's an incredible stock, just a huge discount. Like the price that was yesterday, the price it is today is a gift for people that are long-term investors. I listened to that conference call 1.5 times. The first time I fell asleep. I was like laying in bed listening to it. And next thing you know, I was like halfway through and I fell asleep. So I listened to it again last night while I was in the bubble bath. And guess what? Banger conference call. Anybody that cares anything about ELF, go to 1000xtalks.com, listen to the earnings call, or go to ELF's investor relations page and listen to it. Banger conference call. As far as Road, the expansion there, like that business sounds way stronger than management had expected, and then honestly even investors like myself expected. So the Road, we're going to see. I don't want to give my hopes up too much about this, but that might be the first celebrity makeup brand to really make it big time. We haven't really seen that yet. Obviously, Kylie Jenner was kind of, I would say, a very influential person in building a great start to a brand with her Kylie Cosmetics years and years ago, right? And that was like taken off. But I feel like that's never really gone big time. With what Hailey Bieber's done with Rode, I think she learned a lot from maybe the missteps and the successes of what Kylie did with Kylie Cosmetics, and has thought about Rode as way bigger than herself, whereas Kylie Cosmetics was kind of focused on Kylie Jenner, right? Rode has a totally different name. It's not like she named it after herself or something like that. Like Hailey, she could have easily done that. And so very bullish, and the margins are incredible. So we got it. We got it, baby. ELF on a shelf. That's going to be a fun stock. Oh, and they're also doing some marketing in the big game upcoming as well. It doesn't sound like they got a national ad from what I heard, but they're doing a lot of marketing around the game, from what it sounded like, at least to me, right? Celsius, buying opportunity. Palantir, I mean, as I told you guys last year, right? I said Palantir is kind of stuck in the 125 to 200-ish range for the next few years is what I've kind of foreseen. And it kind of looks like it, right? Like that's just where it's kind of stuck. And when things go really bearish, they'll send it down to that 125 range. And when people are feeling real bullish, they'll send it up to 200-ish range, right? And so that's just kind of the dynamic we have playing out at Palantir. And the numbers are incredible out of the company, right? But the valuation's high. We know that. And also there's a dark cloud around it in regards to a whole bunch of stuff I don't even feel like talking about right now. Wynn Resorts, yeah, that's going to be interesting later in the year. And the reason Wynn's going to be interesting later in the year is next year in 2027, they're supposed to open the Middle East property, which is going to be incredible, right? And so that's one you could see hype come into late this year, maybe even early 27. So do keep that in mind because, yeah, we know that property is going to do numbers. We just don't know how incredible. Estee Lauder, huge buy the dip opportunity. Like anything under 100 on EL is a steal deal. It's still insane they pushed that stock down so far last year, right? Like that should have never happened. Look at this. They sent that baby all the way down to 49 Chinatown. Let's see ELF on a shelf. Let's pull up ELF. And Elf, I think, got sent right down there as well, right? Didn't Elf get sent to, let me pull, I swear Elf got sent to 49 as well. Or am I tripping here? This is kind of insane. I don't need Elf against Elf. Let's see. Yes, it's insane. Elf and EL both got sent to $49 at the lows, right? Incredible. Silly. Now you might say, okay, what stock do I like better out of Elf and EL? Elf I like better than EL. Both stocks I like a lot. Elf has more upside potential though. Like Elf, we're talking about a company that has, 10 years of massive growth ahead. EL, I just kind of look at that as like a consistent growth company, more of a value stock, great brands, much smaller customer base than somebody like an Elf could have, because EL, their products are expensive and most of their brands are expensive, although the ordinary one of their brands is a little cheaper. Elf, look at the products at that company and even the other brands they have, most of their products are under $20 and a lot of them are under $10, right? So everybody can be an Elf customer. You could be rich, you could be middle class, you could be, not doing too well financially. Everyone can be Elf's customers. Yeah, if you wear makeup, that is, and skincare and all that sort of stuff. EL, that's just not possible. EL is really catering to the top, I would say 20% of income earners, the top 20% of wealthy, right? Revolve made upward move. Honest is a steal deal. It's a $2 chuck. You got to be flipping my flapjacks. Like, I'm just gonna be honest with you guys. FUBU should not be $1 and Honest should not be $2 right now. Those are just disrespected stocks, right? Very, very disrespected. Silliness. Still a lot of weakness, obviously, in big tech. Amazon got hit hard today. Google got hit hard. Meta got hit hard, which sends me to my next statement because you're going to understand, and this is a message I sent out to my private stock group members. We're now well over 3,000 members in the private group. You're going to understand the ramifications of this insane amount of CapEx out there, right? And what it means for the stock market, what it means for the economy, for companies, for all those sorts of things, right? Because everybody's just kind of thinking about it from a perspective of, oh my gosh, they're spending so much money. Are they going to get this money back? And that's a fair way to look at it, right? 100% fair. And I'm looking at it that way as well as somebody that's invested heavily into Meta, heavily into Amazon, and then Google. I got a position in Google, but it's not like, anything crazy. I think it's like a low 6-figure position, right? But here's what I posted, okay, inside the private group. And, this kind of tells you a little bit more about thinking bigger picture here, right? I said, and I posted this at almost 10 o'clock last night. I said, we have these big tech companies spending a fortune on CapEx. We all know this. The good news is that massive amount of money is at least being spent in the economy rather than just on share buybacks, which do nothing but help EPS. The fortunes of money are being spent on chips from companies that employ large teams of engineers. The chips are being built at TSMC, usually, facilities which employ many people full-time, an insane amount during construction. Like, I remember the TSMC initial facility, it was built about 10 to 15 minutes away from an Arizona house. I have a rental property that, we used to spend some time in as kind of a vacation home. And my gosh, like, the construction teams on that project was ridiculous. I tell people it's like building an NFL stadium, but way more complicated. Way more complicated, and actually even to a bigger scale. Like, it's ridiculous. Like, if you've never seen one of these TSMC facilities up close, go visit that Arizona facility sometime. You'll be like, what the heck is this thing? This is insane, right? And they're building a bunch more. They're supposed to build a bunch more around there as well as adjacent companies. All that construction needs tons of materials and machinery, which produces a multitude of jobs. We could keep going down the list. Moral of the story is, it's great for the economy and it's far better use of capital toward the economy than share buybacks. A better economy the next few years could mean more robust consumer spending at restaurants, vacations, on homes, etc. All this CapEx doesn't just disappear into thin air. Like, people hear Amazon say they're going to spend $200 billion. I think it just goes to Mars. It goes into companies' and workers' hands. This subject's underrated and should be talked about more, right? And so that's why when you look out there, right, have you noticed something very interesting? Let me show you something very, very, very interesting here, okay? Look at that chart. I'm showing you Cheesecake Factory, cake stock. The stock is up around 20% so far this year. 20%. It's a shocking number. Let's compare that versus my big tech stocks, let's say, for instance, right? We know I love cake. I've been buying cake for the last several years. I started buying that in the 30s. It's been an incredible stock. It's going to be a much better stock in the future than it's even been in the past. But look at this. Amazon's down 7% so far for the year. Meta's up 1%. Google's up 2%. And cake's up 20%. Good old boring cake, right? Well, why? Well, people are starting to understand the story around cake and flower child opportunity, the North Italia opportunity, and the margin story and all those sorts of things. But you got to understand, when these companies are spending fortunes of money, it's a huge boom to the economy. There's no other way around it. Do you know how many people end up making money indirectly or directly from these ridiculous sums of money that are being spent out there? The worst thing big tech companies could do for the economy would be they make these fortunes of money from their Amazon business and from Google and from Meta, and they just stack the cash on the balance sheet, right? What good does that do? It might do the shareholders good in terms of you feel more comfortable investing into it because they got stacks of cash, but it doesn't do anything good in the economy. It would be like you're a wealthy person, right? Okay, so let's say me, okay? We'll use me as an example. All right. So let's say I make a lot of money. All right, I make money from, YouTube and from 1000X and Patreon, blah, 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 right? And let's say instead of me living the lifestyle I live where I go buy a Ferrari, I go on nice vacations, I give money to charity, I, spend money on new homes and construction, and I hire landscapers and all this stuff, right? I got a very expensive lifestyle. Let's say instead of that, I just hoard it all. Right in my house, right? I live in an apartment. Let's say me and the kids, we live in like a 2-bedroom apartment. We drive an old car, right? We didn't buy the Model X last year like we bought from Tesla, brand new, right? None of that. Let's say I just hoard all the money. I could do that. I could probably have more money, I guess, but I don't think I might not enjoy that. My family might not enjoy that. And you know what? It's not good for the economy. Every time I ever see somebody point a finger at a rich person and say, you shouldn't buy that yacht. You shouldn't do this. You shouldn't be spending all that money. I'm like, what are you talking about? Let them go build a yacht. You know how many people are going to make money off that flip and flapjack and yacht be built? Let them go build the yacht. let them. You know how many crews are going to have to be on that yacht and maintain it? And you know how many people are going to make money off? Let them go build their yacht. Oh, you shouldn't have a private jet. Let them go have a private jet. There's going to be a lot of people that make money off that. Oh, you shouldn't have a, big house. Have a big house. Get ready to hire a lot of housekeepers, right? So the worst thing you can do is have companies or individuals that just make money and then just never spend it. Because then you're taking that out of the economy. When everybody's spending the money, we can all have fun, right? And then this guy can afford to go buy services over here, right? If I make money and I go to the restaurant tonight, right? The restaurant gets to make money off that. The cooks in the kitchen get to make money off that. The waitress gets to get a tip off that, right? They get to go feed their families, pay their bills, and do well. That's the economy. And so understand, on an individual basis, it's important. And on a company basis, it's way more important. If Amazon wanted to just stack $200 billion to keep on the balance sheet, what good does that do to the economy? Go spend that $200 billion on all this crap, all this construction. And then obviously, hopefully, those companies get the payback on that as years tick on, right? But if we could talk about a much stronger economy, guess what? That's more money than Meta can make from advertising, because people have more money, companies will have more money, they can spend more on advertising, and Meta's growth rates can be better. People have more money to spend on Amazon. So instead of just getting like base need related stuff on Amazon, they might be able to buy some stuff that is more wants than just needs, right? And you can go down the whole list of them. So that's an important thing to keep in mind here. So you get a huge boom in the economy, even though shareholders might not be happy because they could just spend all this on share buybacks, which is usually what a lot big tech, if you know big tech companies, what they usually have done is they stack crazy cash, right? And what's the other thing they do? Huge share buybacks. That's what they do. Some will pay out dividends, but it's usually little money. It's stack cash, big buybacks. That's what they do, right? And now they're spending the economy. I say bravo. I'd much rather have a much stronger economy, people doing great out there. All of us need to root for each other, right? I want you to be doing great. I want you to be making money from your stocks. I want you to be making great money from your job. You should be rooting for me. I root for you. We all root for each other. Because if we all root for each other, we can all spend with each other, right? We can all support each other. That's what can happen. If we're all doing bad, then no one wins. If I don't have money, how am I going to go spend money at your business you work for, or your company you work for, right? Or your own personal business? How am I going to go do that if I'm doing bad for myself? If you're doing bad, how are you going to afford to get the Patreon deal? How are you going to afford to get 1000X if you're doing bad? If you're rubbing two nickels together? We don't do any, like, we all got to be winning. If like people are losing, like, okay, like it's not good for us. It's not good. So that's a point that I think is way overlooked in regards to this whole subject. Tom Lee.
Speak with not only for Dow 50K and the jump back in tech, but also as the chairman of BitMine. Tom, I know you're watching what's taking place in crypto. We're talking about a 7-month low for the stock of BitMine. The Ethereum paper losses, $8 billion. Is this in jeopardy of going into a pretty dark place?
Hi, Scott. Thanks for having me. BitMine is designed to be a vehicle that tracks Ethereum prices, but on the upswing, because we're adding Ethereum, will outperform. So Ethereum's in a drawdown. BitMine's going to be in this drawdown spot. BitMine has no leverage. It has roughly 4.3 million Ethereum that earns 3% annually, and we have 600 million cash earning about 4% in money markets. So the company is making about $1 million a day. So there is no risk, no need for the company to actually raise money because it's debt-free and actually generates about 360 million a year in net income. I think crypto sentiment is rock bottom because it has been a terrible drawdown. I mean, just the past 10 days, Ethereum's down 40%. And that's triggered, I think, a lot of concerns about whether crypto is...
Okay, let me push back against Tom Lee here. In regards to, by the way, good job of him sticking up for, the company he's obviously involved with there and, kind of point out their cash position and lack of leverage and things like that. Bravo to him. But in terms of sentiment, he talks about sentiment is at a bottom and those sorts of things. Listen, sentiment's at the bottom for crypto when no one wants to talk about it. Still, a lot of people want to talk. Like, I went on X here today. Everybody's talking about the bounce back and talking about like, oh, we were up some, but we're still down so much. Like, I'll give you a good example. Like, obviously, Bitcoin, Ethereum, it kind of bottomed out there end of 2022. No one was even cared to talk about Bitcoin, Ethereum. Like, it was almost like embarrassing if you even try to bring it up, right? Like, don't even talk about it. A lot of people still talking about it, like a lot of people. And so you're usually at a bottom when no one's interested, no one wants to talk about it. And a lot of times the same with a market. If you're actually going through a bear market, usually by the end of that bear market, you're at the end when almost no one even wants to talk about stocks anymore, right? Like, everybody's so down and out, they're kind of like over it. Like, the crash period already happened, and every time like people thought the market was coming back or bottomed, it just went lower. And by the time you get to the end of it, like, no one even wants to talk about it. And so that's what I'll say about that. So sentiment can get a lot worse from here. And, let's say hypothetically, Bitcoin, Ethereum keep trying to play this game of like coming back, and then they just go lower, right? And then they come back a bit, and then they just go lower. And let's say that lasts all the way to the fourth quarter. By the time you get to the fourth quarter, no one will want to talk about Bitcoin. No one will want to talk about Ethereum anymore. And that's when you'll actually get the real deal Holyfield bottom there, okay? But we'll see what happens.
Bible. But, all of those statements that I just heard from just a minute ago, I heard the same thing in November 2022 after FTX. And that's the reality, that crypto is sort of characterized by hypervolatility and big drawdowns. I mean, just in the last 8 years, Ethereum's had 7 drawdowns of 60% or more. The good news is 7 of those were all V-shaped recoveries. So we had a waterfall decline. If crypto's bottoming now, which it kind of looks like it is, especially given MicroStrategy's 25% move, the recoveries are V-shaped. So we recover as quickly as we've fallen.
just want to follow up on that. When you suggest there's no risk to the company, is that assumption that Ethereum has stopped going down, that this is a bottom? If there is what some have predicted to be a coming quote-unquote death spiral for certain cryptocurrencies, if the situation with Ethereum gets worse, what happens here?
Well, yeah, I mean, it's a fair question. I think we can look at metrics, for instance. If you look at the number of active addresses on Ethereum, it's up 117% versus a year ago. In fact, in just the last 3 months, that's actually gone up parabolically. As you know, coming out of Davos, what was the big story around what Wall Street plans to do? It's tokenization, which is moving a lot of their financial infrastructure onto the blockchain, Scott. That's not going to change just because crypto prices have fallen. But what is the blockchain that is evident, listed, named by whether it's UBS, Standard Chartered, or Fidelity, where they're tokenizing products? It's on Ethereum. So Ethereum is not in a death spiral because the utility is going up. The price, of course, has been awful. Unfortunately, crypto prices are volatile. It's not like earnings estimates change for Ethereum. In fact, network usage is up 80% in just the last 6 months. But it does mean prices move a lot. I mean, it's sort of a feature of crypto itself.
So the most painful thing that could happen here with Bitcoin and Ethereum, and the thing where you really get sentiment to just go awful, is have these bounce backs come, investors pour money in, Bitcoin's back, Ethereum's back, we're going higher, right? Always just be let down, and it goes lower. And then starts to bounce back, and then each time the comeback is weaker because people start doubting more and more and more, right? And then eventually you just get that last just brutal waterfall sell-off, and that's usually when you reach a bottom, right? In regards to at least Bitcoin and Ethereum. And those are really, at least from my perspective, like if you're going to own anything in the space, like, those are really the only two worth owning. Bitcoin is more just from a standpoint of like digital gold, if you want to look at it from that standpoint, right? Obviously, back in the day, people used to talk about, everybody's going to be transacting in Bitcoin. That obviously future has not come. But from I get it like a digital gold perspective, there's only 21 million ever in that perspective. Ethereum's more of, I think, a use case based one. And that's been a strong case for years. Maybe it's getting stronger now, but, the bottom line is you want to create the most pain, just have every bounce end up eventually going lower. And then people will just be, by the time you get to the fourth quarter, people will not even want to entertain the thought of conversating about Bitcoin and Ethereum.
First, so top level thoughts about the market today. What do you think is going on?
Happy days are here again. I mean, across the board, everybody's buying, not just stocks, but Bitcoin, gold, and so a lot of asset classes are doing extremely well. And I think a lot of that has to do with all the spending that these hyperscalers are planning to do. $650 billion this year is going to be very, very stimulative to an economy that honestly doesn't really need to be stimulated. We also have refund checks that are coming that are going to be very large.
Yeah, it's amazing to contemplate. So here's what's ironic. So Amazon shares are down 8%. Our guest last hour said, they're a little behind as far as he's concerned and need to spend this $200 billion figure to catch up. The rest of the market is cheering. Nvidia's up 7%.
Exactly.
Everything in the AI value chain is great. We're thrilled. Glad to hear it.
Nobody's talking about a recession, and the only question is how big a boom are we going to have from all this?
Right.
So the Atlanta, what is it? The Atlanta GDP now, I know it fluctuates, Ed, but it's showing about a 5% GDP growth. And I think you're touching on a really important topic because we like to keep things simple here. We say, okay, Meta or Amazon is spending $1 billion on a data center. What we don't talk about is that there's probably 500 to 1,000 vendors, different companies inside of every.
So Trump, I always like to look at these things as objectively as I possibly can, right? As somebody that doesn't vote for the political party. If you watch my channel for years, you know that, right? I just look at it as from their different standpoints. Trump is getting a lot of what he wants in terms of trying to create a very strong economy and economic backdrop for the next 3 years. He's getting companies, all these big tech companies, to spend a fortune over the next several years, right? Which is, once again, very stimulative to the economy. He's getting a situation where, with the big, beautiful bill, that should really start to impact in a positive way the consumer as well. He's also getting inflation to stay at bay, which is something very important, because it's like, okay, let's say the economy is really strong, but inflation's out of control, and you got 5, 6, 7, 8% CPIs. Are you really doing any better? No. But if you can keep that CPI under 3% while you have an economy that strengthens considerably, now we're talking, right? Now we're talking about an economy where people feel great again, right? And you see, for the last several years, the consumer sentiment's been about as bad as you've ever seen. If you want to talk about fixing that consumer sentiment over the next 2 or 3 years to getting a great consumer sentiment again, have inflation be dead while the economy is extremely strong, and you'll see those sentiment numbers skyrocket from here, essentially, and get back to where they were kind of in like 2018, 2019, before you obviously had the Rona crash, right? So now the last component Trump is trying to get, we'll see if he's able to get it, but Trump wants to get housing moving. And the only way you can get housing moving, there's 2 ways. One is the economy much stronger, but that's not really the way. You got to get mortgage rates lower, right? In order to get mortgage rates lower, he's really got to get that 10-year lower. But the problem is, if you have a strong economy, then usually there's fears about inflation. So to get that 10-year a lot lower is a difficult challenge. So he's been able to do quite a few things that you want to do if you're going to try to set up a really strong economy for the next 2 or 3 years. But that last component, that's going to be difficult. If he can do that, then you can talk about the real estate markets also moving, and then you got an overall great economy. If you get real estate moving, plus jobs are there, wages are strong, right? Overall spending's good, and inflation is, in a lower place, let's just call it. Banger, right? You got a banger for 2 or 3 years. We'll see if he pulls out the real estate one. That one I'm really, really intrigued with there. That might be the biggest challenge of all.
Data center, whether it's the steel company or the concrete maker or the computer company or the wiring, the company makes the wires, that trickles down across the board. It's a huge stimulus to the economy.
Well, the economy, first of all, has been amazingly resilient since the pandemic. Since the pandemic, we had a 2-month recession, and it was engineered by the government. They shut everybody down. They locked us up. Ever since then, it's just been up and away. Think about everything that's happened. We've had the pandemic. Then we had the supply chain disruptions. Inflation soared. The Fed raised interest rates. We had tariffs. And here we are, all-time record high in the markets. And the economy absolutely booming at an all-time record high.
You have to think a couple of things. One, falling interest rates now are helping. ChatGPT, AI.
It helps, sure.
You guys called this, a few months ago and said, look, the AI, while this investment is great for the broader economy, the Mag 7 are turning on each other. I love how you put it. So they're no longer little kingdoms with their protected moats, each in their own lane.
Game of Thrones.
Game of Thrones.
Yeah.
So do you have an opinion on who emerges triumphant, or is the point that we have to wait
I think that's what's so exciting about it. It's like, For one day, it seems like one of the hyperscalers has an advantage, or one of the LLM model makers, and now OpenAI comes back with, we'll call your shot here and do better than you. So there's a lot of that going on.
Here's what makes me the most optimistic about the markets, and I'd love to get your take on whether this is the right view or the wrong view. Amazon, to your point, down 8% today. Amazon has actually not made investors money in just over about a year and a half. Wow. The stock's kind of the same price it was in the fall of 2024. Right. Nvidia hasn't made people a lot of money. I'm talking about investors, not day traders, in about 9 months. Mm-hmm. But the markets have done well, even with some of those stocks not participating.
Very impressive, right? Because for the past few years, there's been this concern that the concentration of the market in just a handful of stocks made it very vulnerable to a bear market. It's like, lo and behold, if something terrible happens. We had DeepSeek as a stress test. This is sort of a deep-seek moment where people are once again assessing, is all this capital spending actually going to be profitable? I think it's going to be profitable. I mean, these are smart companies run by very smart people, and they're looking at their dashboards. Oh my God, we're running out of capacity. We could be making a ton more money if we just build that capacity. And everybody looks at all that spending relative to today's cash.
Yeah, I mean, he's fair. He's led by the best, some of the best business leaders in the world. And you see a number like 200 billion. Understand, I know Jeff Bezos is not the CEO of Amazon, hasn't been for several years, but they're going to run a number like that by him before they're going to do it, right? From what I've heard in some past Bezos interviews, he's still actually really involved with Amazon. Not in terms of the day-to-day operations, like day in and day out. I think he likes to float on his yacht and those sorts of things. But he's still way more involved. What it sounds like is he's way more involved with Amazon than I think people realize. And so you want to understand, there's no way Amazon did that $200 billion number without Bezos' approval. There's no way. There's no way. And so, you got to put, as tough as it is, and I spoke about this on the main channel last night, as tough as it is, you got to put your faith that they know what they're doing, because damn it, they've done a hell of a job knowing what they're doing, right? Doubted a lot of their spending, but these guys usually come through in the end. Do they not, right? So something to keep in mind.
But there's going to be a lot more cash flow down the road.
Are you long-term? So a lot of people who've been in these names are worried when they hear something like the Mag 7 and think this is a fight to the death. And if we don't know who's going to win, maybe I should move to the sidelines. What is the time? If you're hanging on for the long run, it sounds like you're saying it's not a problem. This is just kind of a near-term.
Yeah, this is just a near-term issue. I think, look, the Magnificent Seven can't be magnificent without selling all of their technologies to the impressive 493 in the S&P 500. I was just asked recently about the Dow, kind of an old-fashioned kind of index, and it's doing extraordinarily well. To me, that's kind of confirmation that all of this is going to be is already and will continue to be very positive for the economy. If it's good for the economy, it's going to be good for all these companies. All that's really happened is we're seeing more competition in the technology space. And technology, I mean, they literally eat their young. As soon as they create one product, they're already working on destroying it by coming up with another product. That's just the nature of the business. And by doing that, they keep their margins up. So I'm not too worried about technology, but I did think that it got a little overdone there. And so I did call for a bit of a relative correction and a broadening of the market.
So the biggest question here, in my eyes, is how high are the growth rates going to go in terms of revenue? We're seeing from almost all these big tech companies accelerating revenue growth. The question is, with all this insane spend, how high are the revenue growth rates going to go, right? Because I feel like we've been accustomed to thinking about Meta as a company that grows revenue at, let's call it 15 to 20%, but now they're doing much better than 20% numbers, right? They've been at like 25-ish, 24-ish, somewhere around there. Could they keep putting that up? Could they do a 30% number? Like, I don't know. Like, maybe it's possible, right? Amazon, people are starting to become confident like Amazon was only going to be a 10%-ish grower as far as revenues go. Now, this latest quarter, they were at about 14%. Could we get Amazon back to 20% plus growth rates? I don't know. Like, we'll see, but maybe they could be going back there, right? And then what does that mean for their longer term margins, profitability? Could Amazon ever grow at 25% clip again? I don't know. Maybe it's possible. Like, we just got to see, right? And I think that's the interesting thing about this moment is people are thinking about these companies as still growing at the same growth rates they're at, but spending this insane money. But it's like, what if these companies a year from now are growing way faster than what they're growing now in terms of revenue growth, right? And it's off of a much bigger base at that point in time. But if you talk about an economy that gets way better, right? Simultaneously, their business expands rapidly because of their use of AI spend. That is where things get very interesting, ladies and gentlemen. Very interesting. And it is something to consider, right? I don't think the market's looking like focused on that right now. I think it's more focused on just like, oh my gosh, they're spending so much. But if as the quarters tick on throughout this year, these companies keep accelerating revenue growth, that's going to become a bigger story, and you'll see a pile back into Mag 7 type stocks. So just something to keep in mind, but we'll see. We'll see, right? All right, next up here, market broadening is very healthy.
Clear of, I have to imagine you're loving the cyclical story here. Why do you think the market's doing so well today? What did you make of the Amazon quarter? So many questions.
So I don't know where to start, Kel. I mean, I think the broadening of the market, we've argued for some time that it would be extraordinarily healthy if the market broadened. And that's really been going on since the end of October, more or less. I mean, fits and starts, but it really started in October. And I think that this is very healthy. You know, I think people don't realize how strong the overall economy is. Nominal GDP last quarter was over 8%. Wow. Excluding the post-pandemic, the United States hasn't had a nominal GDP quarter over 8% since 2006. Wow. It's been 20 years. So why you would have a narrow market when you've got GDP, nominal GDP over 8% is mind-boggling. And so what you're seeing is actually the market begin to broaden in acceptance of the economy, and the corporate profits are turning out to be much stronger and much broader than people thought.
Is there any of the Mag 7 you like here? You know, Nvidia is up 7% today.
Well, Kelly, I'm going to beg off on the question because we are very much a macro firm. And one of our stories has always been that we don't know anything about Coke versus Pepsi. Mm-hmm. And so I will say I don't know anything about Microsoft versus Nvidia as well. Mm-hmm. I can tell you that the key thing, and I've said this many times with you before, that the key thing for the Mag 7 is that they are fine companies. They are not unique. There are many companies in the United States and around the world that are growing as fast, if not faster, than the Mag 7 and are a lot cheaper. So my question would be, if you can get 20, I'm going to make up these numbers for a second. If you can get 20% growth for 40 times earnings and 20% growth for 20 times earnings, why in the world would you not take the 20% growth for 20 times earnings?
And where are you seeing that kind of profile? Now, for instance, Eli Lilly earlier this week reminded us they've got...
What? Sir, in all due respect, have you seen Meta? Last time I checked, they got 20% plus growth. And where's their forward P at right now? 20? You got a 2020. Doesn't take 2020 vision to see that one coming, huh? Dang, that was a bar. Oh my gosh.
They've got 40% revenue growth. They've got 40% operating margins. That's $1 trillion company. Where are you seeing places that are as fast growing? 20+% as you mentioned, but trading. I mean, Microsoft's trading at like 20. I'm like, the company you're describing sounds to me like Microsoft.
So, Kelly, I'm going to sound extraordinarily boring here for a second. And I'm just going to say, if people are willing to look outside the United States, you will find earnings growth is accelerating in many parts of the world. It's not that U.S. earnings growth is imploding. It's not. It's actually kind of leveling off and maybe coming down a little bit. But outside the United States, you have profit cycles that are actually coming up. So you're getting, I don't even think you have to be very sexy about this. You just have to have non-U.S. investments. Most U.S. investors have zero in non-U.S. So I think this is a pretty easy thing to figure out, that when the non-U.S. markets are 35 to 40% of the global equity market and U.S. investors have less than 10%, I don't think we should worry about a specific stock or the optimal weight of.
What a back out. Ugh, what a back out. He's talking about all these companies trading at 20 times P's and got 20% growth, and she puts them on a spot. Okay, tell us about one. It's the market in general. Dude, that's like saying, hey, I could beat you in a race. And you're like, no, you can't. Let's go race right now. We'll go out to the street. Let's go see let's go race right now. Okay. And I'm like, no, actually my hamstring kind of hurts. So no, I can't race. I'm not in the race shoes right now. I can't race. You'd be like, what? That's what that dude just did right there. Talking this big game. And then he gets put on the spot. And then he's like, well, we shouldn't really worry about, like, what are you talking about, dude? Where are all these stocks that are growing revenue 20% plus, earnings 20% plus, and are trading at 20 Ps? Show me them. Where are they at? I'll wait. He's talking about international stocks that are, dude, most of these international companies are trash. Are you kidding me? They have trouble even growing their businesses. Never mind growing revenue and EPS at a 20% plus clip. Trading at 20 PEs? Show me them. I'll wait. Come on, man. That's just ridiculous. I kind of don't even want to watch the rest of the clip, but I'll do it.
US, it's just, do you have any non-US? And I think that will solve the problem.
I always worry a little bit about the dollar. Do you think that's just the moves you're describing?
I'm done with him. Once again, deal coming on the gold tier. That is coming up here in a few days. Pin comment down there to enter in your info so we can send the deal over. Once again, that's the only way you'll be able to get that deal, because you know I will not be recording a video on Saturday for when that deal actually comes on Valentine's Day. So if you want it, click the pin comment down there, put in your info. We will send it over when it drops. That it will be $49 a month for that tier, which usually that's $145. Okay. So looking at Bitcoin right off the bat here, Bitcoin's now down a 50 spot. It's down a 50% from all-time highs. It hit just a few months ago. Ethereum's now down over 70% from all-time highs. It hit just a few months ago. We're looking at a stock like Robinhood, right? Back to the hood, I call it now at this point in time. All these brokerages are obviously getting hit immensely. People are thinking, okay, if the market continues to trend down here, first off, you're going to have way less assets under management, right? Because everybody's portfolios are going down, especially if you hold Bitcoin, Ethereum. Those are two things that obviously somebody like Hood's made a lot of money on over time. There's also a thought process of less trading activity, less new customers, because everybody's so like disenfranchised with like, you know, the way the markets are and those sorts of things, right? And so investors just continue to sell the stock off relentlessly day after day right now. Hood's now down 52% from all-time highs. It hit just back in October. Look at Coinbase. We call it coins, looking for coins in the parking lot. Coinbase down 62% from all-time highs. It hit back in October. And even the world's greatest asset is going down all the way to Chinatown. Look at silver. This is silver just in the past few trading days, down almost 40%. Unbelievable. A friend of mine made a big prediction going into 2026, and he said that the TLT will outperform the QQQ. That's a big prediction. And as of right now, he's actually looking really good as far as that prediction. We'll see how it ages as the year goes along. But as of right now, he's looking really darn well with that. This is IGV. This is a software ETF. And this is probably the worst I've ever seen this particular ETF since I got in the market 17 plus years ago, right? Look at this baby. It's down over 23% in the past month. That's an unbelievable move. I had to go back to kind of the Rona crash because I was like, gosh, the Rona crash was so insane. Was it worse? And what I found here is on a month basis, back in the Rona crash, it fell 20%. So this is literally worse on a month drop than the Rona crash for IGV. This is incredible, right? Absolutely incredible. Look at a stock like SoFi. It's broken $20. It's lost 30% of its value just in the past month, and it's down another 3% after hours at this point in time. Woo! Palantir's an ouchie. Look at Palantir from those all-time highs it hit a few months ago. This one's now down over 37%, right? I remember in 2025, I said, you know, this stock is going to be stuck for a long time in the 125 to 200-ish range, right? And just kind of fluctuate there. Well, Palantir 129, I mean, we're getting close to that 125. So if this stock goes down to 110, 100, something like that, I will actually be in shock because I would not have expected the stock to go down to those sorts of levels, right? I kind of figured, well, if people are feeling real bearish, they'll kind of push the stock down to like 125. But man, with how much momentum is just downward in the stock and the relentless selling pressure day after day in Palantir, makes you think, like, could this even break under what I thought, right? And go down to 110 or $100 or something like that, right? Look at Micro Tragedy. Oh gosh, this is impressive. MSTR. This baby's now down 76%. Unbelievable move down. And by the way, it's down another 3.5% after hours right now. Micro Tragedy is ugly. Michael Saylor posted this on his X. If you ever want to follow me on X, by the way, it's always linked in the description area down there. Looks like 5 million people have gotten to see it so far. Hodl, he says hold. Yeah, we'll see, right? It's just brutal out there right now, especially in regards to Bitcoin, Ethereum, right? But a lot of other assets as well. Okay, in this video here today, 5 core subjects we're getting into, okay? First off, ELF and EL, both those cosmetics companies crash. What's my opinion, perspective? Is there an opportunity, not opportunity? We'll talk about that. Number two, the SaaS apocalypse, they're calling it, right? The SaaS stocks just getting wrecked. Where's the bottom at for these stocks? I'll tell you where I believe the bottom is for these SaaS related stocks, okay? Third thing we'll get into today, a position I sold out of today, why I did it. We'll cover that. Fourth thing, Amazon earnings obviously came out. Amazon stock's down big. We'll talk about my perspective as somebody that's a big Amazon shareholder and all that good stuff, okay? And number five thing we'll get into today is I did buy tens of thousands of dollars worth of stocks today. I'll tell you exactly what stocks I bought and why I bought those stocks here today. Busy action-packed times. I hope you appreciate me trying to cover all this for you guys. One thing only I need from you. If you could just smash that little like button. If you haven't already done so, please do so. And for everybody that's already done it, thank you for that. Okay, I appreciate you. Additionally, you want to make sure notifications on for this channel and make sure you're subscribed. That way you can get notified as soon as I drop a video, because guess what? With how crazy things are, you never know when I could drop. I could drop a 2 a.m. video on you. You never know with how insane things are right now, right? It's nuts time. Also, I want to draw your guys' attention. This video I put out about a week and a half ago, roughly. Age 36, net worth 40 mil. Every single investment I own, you might want to watch that video. Goes into every single stock, alternative asset, real estate properties, all that good stuff. 49-minute video, 101,000 people have gotten to see it so far. So if you haven't got to check it out, you might want to check it out when this video's over here today. Okay, alrighty, got a lot to get through. ELF and EL crash right off the bat. Listen, these were my two worst stocks today. EL stock down 19.19%. ELF down 9%. That's a shocking move in regards to ELF because after hours, I remember seeing ELF after hours yesterday up 15%. So it's up 15% after hours. And what do we have to show for it? 9% down here today, right? You can't do, it doesn't matter really what you report, it seems like. It's just you're going down at Chinatown, right? And as they say, you can't put lipstick on a pig. And guess what? You can't put lipstick on this pig of a market right now. Ugly, right? Ugly. Now, in regards to ELF, this was a grade A quarter. Net sales up 38%. Gross profit up 37% for the company. Operating income up 93%. Net income up 128%. Diluted EPS up 116% for the company. Extremely strong numbers out of ELF Beauty overall. But, I mean, at this, it doesn't matter. Net sales could have been up 48%. Like, they would have found a reason to sell the stock off, right? It's just the market you're in right now. And, when you're in a market where just everything's selling off, it's kind of like you almost have no choice. I mean, look at Google. Google's a good example. I mean, gosh, that one tried so hard to eke a gain, but gosh. EL, as far as Estee Lauder stock goes, this one's really positive. Every single category is growing for them. Skincare was up, makeup was up, fragrance was up, hair care was up, other category was up. Total revenue's up 6% for the company on a year-over-year basis. That's a good number for EL. Best number in quite some time, right? And then as far as operating income or loss, they went to $454 million of operating income in the skincare segment from 306. Their makeup category lost them $211 million in the same quarter last year. Now that's to profit $18 million of operating income. Fragrance was $105 million operating income versus a $446 million loss in the same quarter last year. Hair care, $18 million operating income versus $3 million loss in the same quarter last year. And other, $13 million in operating income there versus $45 million loss. So look at the operating income loss. I mean, we're talking about $1 billion swing here, ladies and gentlemen, on a 3-month basis, right? On a year-over-year basis. That's incredible. $608 million of operating income versus a $399 million loss. That's insane. Insane. So bravo, EL, they pulled it off. Like, if you remember me betting on the stock, obviously, over the last year or two, it was on them having a big turnaround. And guess what? The big turnaround has happened. America's region grew for the company year over year. The EU business grew as well. Asia Pacific grew. And look at China business grew 13% year over year. Very strong growth. And then obviously operating income very positive in every single market. I mean, just couldn't be happier. As far as the income statement overall, B plus grade. If you look, net sales was up 6%, while cost of sales was only up 4%. So that doesn't mean great things for gross profit. And sure enough, 6% growth year over year. Gross margin 76.5% from 76.1%. If you look at SG&A, that went up only 2% year over year, much less than revenue. That's what we want to see. Restructuring other charges still hit. That was up 14%. That should start to kind of fade away as this year goes along. So do keep in mind, like, this whole big, like, multi-$100 million hit is going to start to roll off as the year ticks on, in my opinion. And what that's going to mean is profitability skyrocketing as the year ticks on, okay? No other impairment of goodwill like they had that hit last year of 861 mil. So as far as total operating expenses, that actually decreased 22% year over year. Operating expense as a margin, operating expense margin, 67% versus over 90% in the same quarter last year. Operating income, 401 mil. That's a huge improvement year over year, almost $1 billion swing there, right? And as far as net earnings, 162 mil versus $590 million loss in the same quarter last year. 44 cents diluted EPS versus 164 negative. B plus income statement for Estee Lauder. Look at where they were at this time last year. They were at an F grade. F grade income statement. Ugly times ugly, right? What a dumpster fire into a huge, beautiful turnaround, right? So everything I predicted with Estee Lauder has now happened at this point in time. It's great to see, right? Oh, actually, that was actually back in 2023. This one was this time last year. They reported an F plus at this time last year. What an unbelievable change, right? So here's the thing in regards to me personally with ELF and Estee Lauder. Both have been very good stocks for me in the public account and my other portfolios as well. ELF, I'm up, almost 1,000%, even after today's massive drop and the drop in general in regards to ELF, right, in the public account. And then Estee Lauder, I'm up $48,000, up 39% in that one. I love these two stocks. You know, the bottom line is I would love to own a lot more shares of both these stocks, right? The issue we have in the market right now, and I'm sure a lot of you guys are feeling this right now, is there's too many deals out there. You know, sometimes you're in the market and it's just like you're looking and you're like, gosh, it's so hard to find a deal anywhere, right? This is not that sort of market. We're in a market now where it's just like deals everywhere. It's like, oh, you want a 50% discount on this stock? Here you go. You want a 60% discount on this stock? Here you go. 40% discount, 70% discount, right? And if the market keeps going down, the discounts just get even bigger. Gosh, that's the issue. That's the one issue you have when you're in this sort of market. There's deals everywhere. I want more Estee Lauder stock. I want more ELF stock. But there's a lot of other opportunities in the market I see. So it's like, what's going to give me the better risk reward? Do I want to get over invested in this category versus that category? Tough situation. But the moral of the story is both those stocks are buys today. Okay. The thing is, though, those were generational buying opportunities last year, right? Like EL stock got down to what, $50 or so. ELF stock got down to like $50 or so. I think ELF went into the 40s. I think it was like 49 at the lows or whatever. That was a generational buying opportunity. I'm seeing generational buying opportunities in some other stocks right now, and we'll talk about some of those in this video. These are great buys right now. ELF at $76 is a great buy. EL at $96 is a great buy if you have a longer term investment horizon. But I've got generational buying opportunities out there right now, right? SaaS apocalypse. Where's the bottom at for the stocks? Okay. Then we'll get into a position I sold, Amazon, and stocks I bought today. So the SaaS apocalypse is ugly. Looking at CRM stock, Salesforce, down almost 50% from the December 2024 highs in the stock. Almost cut in half. And that's for the big dog, right? Do keep in mind with Salesforce, if IGV eventually starts to bounce back, Salesforce could be one of the biggest beneficiaries because it's one of the biggest SaaS-related stocks, and it's one of the ones that fund managers would feel most comfortable in. So just do keep in mind when SaaS starts to move up again, which maybe it never does. They're all just going to zero, right? When it does start to move again, Salesforce will be one of the biggest beneficiaries right from the jump. So do keep that in mind, right? Now, this is pretty shocking. I pulled up Salesforce right prior to Rona, right? So right prior to like everything going crazy and all of a sudden you heard about cruise ships were being stopped and Rona was coming to America and all this stuff, right? So I pulled up CRM right prior to that insanity. And CRM is the same price today as prior to Rona. That's crazy. Crazy. Because look at what has happened to the company's revenues over that time, right? If you look at back at, coming off that year in 2019, they had $13 billion of revenue. They did, last year they did about $38 billion of revenue, right? So they nearly 3x'd their revenue over this time period, and you got a 0%, last action hero stock return, right? The price you pay is extremely important. Let me show you the net income of Salesforce over this time. Salesforce net income in 2019, they did $1.1 billion, right? In this latest fiscal year, they did 6.19, so nearly a 6x in net income. And yet you have nothing to show for it regarding the stock price. The price you pay is extremely important in this game. Do not let anyone ever tell you it doesn't matter, just buy it, it's got great growth. Baloney. The only people saying that are people that don't know how to run valuations, and they're likely saying it during a peak euphoric bull market. And that's the only time they say that. In any other logical time, you realize the price you pay is extremely important. You could have bought Palantir at $6. You could have bought Palantir at $206. The price you pay is extremely important. You can say, well, no, it doesn't matter. Like the company's just growing very fast, so it doesn't matter what price you pay. Yes, it does. You could have bought Salesforce, back prior to Rona, and you got a 0% return. Well, everything's gone up massively in price since then, right? Or you could buy it today for the same price with a way better company, a way stronger company, way more revenues, profits, all that good stuff, right? The price you pay is extremely important. You gotta know how to run projections on stocks. You gotta know what's a fair price to pay. I teach you all of that in my private stock group. We have 1000x in the projections. We have that there for a reason. I run projections several times a week on tons of different stocks to try to see how big of an opportunity is this or not. You don't know how to run your projections, you're gonna find yourself in a world of hurt in this game. You'll find yourself in a Salesforce stock that you didn't make any returns on. I believe Salesforce is going to be a great winner chicken dinner over the next several years. You know why? Because I ran my projections. I ran modest projections, and it says Salesforce is going to be a huge moneymaker for me. I ran projections on Salesforce years ago, and you know what it said? Not much money to be made there. And you know what happened? Not much money to be made there, as in pretty much nothing, right? This is why price you pay is important. Do not let anyone ever tell you it's as simple as just buying the stock that the revenue is going up. That only works when you're in a raging bull market. And then there's a huge price to pay when you're not. When you're in a kangaroo market, doesn't work. When you're in a bear market, doesn't work. Okay? Price you pay is important. And that could be the difference between you making a 300% return on a stock, a 500% return on a stock, 1,000% return on a stock, a 2,000% return on a stock, versus being in a stock for years and years and years, and you look back and you're like, dude, I didn't make anything in this, didn't make anything in this, didn't make anything. There's a big difference, okay? Big difference, right? ServiceNow. ServiceNow might be the most quality of all of them. It's debatable if Salesforce or ServiceNow is, but Salesforce, look at this baby. This baby's now down 56% from highs it hit last year in 2025, and good luck taking them out. Like if you have ServiceNow integrated in a large company, good luck taking them out. Good luck, right? Absolutely brutal. I don't think the people selling off these stocks are even thinking about how could you replace this, right? Go try. Every large company, go try to take out ServiceNow. Good luck, man. Good luck, But it's what's going on right now. The fear is winning, right? Adobe has been cut in half plus some, right? From its all-time highs, it reached back in 2024, down 51% now at this point in time, right? Look at Intuit. Suddenly QuickBooks, TurboTax, Credit Karma, MailChimp, they're all irrelevant overnight, essentially, right? Look at Intuit's down nearly 50%, 50 at this point in time, right? So these stocks are just it's SaaS apocalypse. It's a good way of putting it, right? So are we close to a bottom, right? In regards to these stocks? Well, in order to understand if you're close to a bottom, don't look at technical indicators or anything like that, right? Because, oh gosh, it's all just, mumbo jumbo. Look at valuations. And you got to say, okay, have things gotten stupid? How much more stupid could they get, right? So if I look at Adobe's forward P is 11, Salesforce forward P is 14, ServiceNow's forward P is 24, right? ServiceNow's a double-digit grower and should be a double-digit grower all the way for years to go in the future. CRM's a high single-digit grower and should be for years to go in the future, maybe low double digits. And Adobe's a high single-digit grower and should be for years to go in the future, right? So these valuations are, for lack of a better word, stupid. How much more stupid could they get? A little bit, but not much more, right? I think we're close to a bottom in regards to all these stocks. Could Adobe go down to a 6 forward P? All things are possible, not realistic. So if you're thinking, could Adobe get cut in half again from here, right? And go down to a 5.5 PE, forward P? Likely not happening, right? Could it go down another 10% from here? That's fair. That's possible. Salesforce. Could Salesforce get cut in half from here, go down to a 7 forward P? No. No. As dumb as the market is, it's not that dumb, okay? ServiceNow. Could ServiceNow get cut in half again, go down to a 12 forward P with strong double-digit growth for years to go in the future? No. So the moral of the story is these sorts of stocks are close to a bottom. They might not be at an exact bottom today or next week or next month, but they're close to a bottom. When I say close to a bottom, I'm talking likely within 5 to 15% of a bottom. They could be at a bottom literally right now, but I would say within 5 to 15%. So if you're thinking, is there another 30%, 50% downside for these stocks? High probability of no. Okay, that's what I'll say in regards to that. Okay, you look at some of these valuations on these stocks; it's so laughable now, right? Adobe's at a forward P of 11, Salesforce at a forward P of under 15. Look at something like a Walmart. Walmart's at a forward P of 44. So we're talking about a 4x what Adobe's at, and we're talking about 3x where Salesforce is at, right? Now you might say, "Wow, Salesforce and Adobe might get disrupted," right? You can say the same thing about Walmart. Walmart might get disrupted. You know, Amazon could just start selling every single thing that Walmart sells for a cheaper price and have it delivered to your house. You never have to drive to the store. You never have to get out of the car. You never have to get asked for change in the parking lot. Nothing, right? They can just do that. Amazon's got plenty of money. They just announced they're going to do $200 billion of CapEx. Lord knows, Amazon's got plenty of money. They could just eliminate Walmart. Why don't they just do it, right? You know, we can all play these silly games of just like, oh, this company can just eliminate this company, and this company can just, they're irrelevant because of this. Like, we can all play that silly game. It's just ridiculous, right? And so the moral of the story is the market goes through these sorts of time periods when it's just fear, fear, fear. And that's what we're in right now, right? Next up here, let's talk about a position I sold. Then we'll get into Amazon. Then we'll get into stocks I bought today, okay? So position I sold, it is a leveraged hedge against Tesla stock. Okay, TSLZ. Now, I sold this one in a private portfolio. I still have my hedge on in the public account for right now, okay? But I made a great gain on this one, you know, low 5-figure profit, right under $11,000 in profit, made 34% pretty quick in that one, right? And so I decided to take the profit this morning and move that money elsewhere, and we'll obviously talk about those sorts of stocks, but I was kind of looking at it, I'm like, there's $42,000 just sitting there. And can the whole market go down more than it has? Sure, that's possible, right? But you got to understand, for me to really get Tesla hammered, I need the Qs to go down 10% plus. If you start getting a 10% plus drawdown on the Qs, we could start seeing a lot of damage in regards to Tesla, right? And you know, because look at, this is the Qs just over the past 7 trading days. Qs are down 6%, Tesla's down 9.2%, right? And like I tell you guys, like, you know, basically Tesla's almost like a call option on the NASDAQ itself, right? If the NASDAQ's going up, usually Tesla goes up way more than the NASDAQ. If the NASDAQ's going down, usually Tesla goes down way more than NASDAQ. And this is exactly what we've seen over the past 7 trading days. Now, I'm also 2x leverage, so a 9% move there could be like an 18% move in that ETF, if not more, right? And so can we get the market down a lot more? That's the question, right? Well, if we look at kind of the weighting here, and keep in mind, I'm showing you S&P 500 weighting. I could have showed you Q's weighting, would be a little bit more extreme. I'm having doubts that the market can go down significantly more than where we're down right now, right? And when I say significantly more, I'm talking about going from like a 6% down on the Qs to like 16%, right? Or 26%. I'm having a lot of doubts, and here's why. I'm sure everybody's seen the insane CapEx numbers from Google McDougal, from Amazon, from Meta, all these companies, right? The numbers are ridiculous. So Nvidia is the biggest market cap out there, the biggest weight out there. It's really difficult to get Nvidia down a lot more from here, right? I mean, could you get Nvidia down 20, 30% from here? It's possible, but gosh, good luck. Good luck. Because guess who's the biggest beneficiary of all these ridiculous CapEx numbers? The biggest beneficiary by a mile is Nvidia. We all know that, right? And so Nvidia's already been hit. It's at 171. Could you get it down a lot more? You could get down a little bit more, but I just have doubts about getting Nvidia down another 20% from here, right? Apple. Can you get Apple to get hammered here? It's tough because Apple's seen as a safe haven right now. They're the ones not spending a ton in AI. So they're kind of seen as like the golden child right now, right? Everybody's getting beat down. Meta, Google, Amazon, all these companies are getting beat down because of Microsoft, because they're spending so much on CapEx, right? Apple's the one that's not. So Apple's in this time period where the market's kind of getting upset, investors getting upset with these companies spending so much, Apple's the golden child. They're the ones that are not spending the fortunes, right? And also, to be quite honest with you guys, Apple has the best numbers I've seen in years. Like you have to go back all the way to like 2021 to see Apple reporting this impressive of numbers as far as growth rates go. So you got a company reporting great numbers. You've got a company here that's actually returning massive amounts of money to shareholders through dividends and buybacks rather than spending on CapEx. And people are kind of looking at Apple as the safe haven right now, right? Now it's debatable if Apple's actually a safe haven for the next 5-10 years, right? But for right now, they're like the golden child. So to get people to massively sell out of Apple, difficult. And so that's why I'm having my doubts about, the whole market's going to crash. Because you got to get people to sell out of Nvidia and Apple en masse. And I'm just saying those are tough propositions. And so that's why I took my profit on that Tesla hedge here today. I'm holding the one in the public count for now. I have 2 hedges on in the market, right? One is I still got the TSLZ in the public count. I don't think I have it in any other portfolios. I think I only had it in that private portfolio and then in the public count, right? And then the other hedge I have is cash. I have a lot of cash, right? And so those are my 2 hedges on in the market. If the market continues to downtrend more, the next hedge to go will be the TSLZ. I'll probably end up selling it early. Tesla stock will probably go down way more, just as Duolingo did and Chipotle did, right? Which were my 2 previous hedges. And I sold those way too soon, took my profit way too soon, and I missed out the huge money. But I get nervous regarding hedges. So a lot of times I'll make, 20, 30, 40%, 50% on a hedge and I'm out, right? And then I look back and I'm like, dude, I could have made so much more. Like my Duolingo hedge, I made like 50% quick in that. Took my profit and ran. I missed out on, I believe it's around $250,000 of extra profit now. And that was a hedge back in the summer of 25. Another $250,000. Last time I checked, I could go buy another Ferrari with $250,000. It happens. So if you see me take the rest of my money on the Tesla hedge, don't be surprised if after that, Tesla stock really crashes. That's how it works, man. That's how it works, I swear. I don't get nervous and hold long positions. I'll hold long positions for years and years. But those hedges, I get nervous, man. And you give me a fatty profit quick, I'm out. Next one up here, Amazon. Then we get a stocks I bought here today. So this was posted inside the private stock group. I like this one. Nick posted this one. SoFi, AMD, next up Amazon. The Grim Reapers come for them, right? Pin comment down there. Join my private stock group. A lot of the private stock groups, serious stuff. All my course curriculums, 1000xstocks.com, right? Keeping up to date. But sometimes this stuff means so much. Like just being able to laugh about something, right? It's you might only get it if you're in there in regards to like how much some of this stuff means, but it's like nice to be around a community of like-minded investors who are in these stocks also, right? And because a lot of times in the stock market, it just feels like it's so lonely, right? It feels like you're out on this boat and there's like no one out there and you're just by yourself. And it's great to have this group of individuals that are invested in Amazon, AMD, and all these other companies, and we get to keep each other up with the news and all this stuff and make jokes, and it's fun, right? Alrighty, so Amazon down 10% after hours. That was after it was down 4.4% here today. It makes you think, how much would that stock have been down if it wasn't down today, right? Makes you think, right? I posted this inside the private stock group also. Cross-eyed Jeremy, I saw that CapEx number, $200 billion. Like, you got to be flipping my flapjacks right on the floor. Oh my gosh. $200 billion. That was like $55 billion over what the street was at. I mean, the number's just shocking. That basically takes all of likely Amazon's projected operating cash flow for the year, right gone. It's an insane number, man. Absolutely insane number. No, as far as AWS, Amazon Web Services, that number came in and beat, which was great. We love to see another acceleration in regards to AWS growth rate. 35.5 billion they did. The Wall Street was a little under 35 billion. So that was the ultimate. That was a great thing, right? But there was two things people were keeping an eye on. One was AWS growth. They want to see another acceleration. We did that. Great. But they also want to see the CapEx. And the CapEx number was so ridiculous that the insanity canceled out the AWS beat, and that's why you see the stock down 10% after hours, man. Just tough. Now, in regards to the quarter overall, is a grade A quarter. Net product sales went to 89 billion from 82 billion. That's 9% growth. Net service sales up 17%. Isn't that crazy? Remember back in the day when everybody just thought of Amazon as like an e-commerce company, right? And now, like, look at the service sales. This is, is things like AWS. This is things like their advertising business. Like, that's where the big growth is, and that's where the much bigger number is now at this point in time. 17% growth there, 123 billion from 105 billion. Total net sales up 14% year over year for the company, which is really good number, right? Cost of sales went up 11%. So I don't love seeing that, especially given not net product sales was up only 9%, but it's not the end of the world number, right? Fulfillment was up 10%. I don't like that because that's a higher percentage than net product sales. Technology and development, that got hit hard. That's a 25% number up year over year. My guess is a lot of the infrastructure spend is starting to hit that line item, right? Sales and marketing was up only 9% year over year, so I'll take that when your revenue's up 14%. G&A, actually, they brought that down 6%. So G&A, here's the issue, man. Amazon keeps firing employees, and they just fired a bunch more. I just heard about this days ago, right? That's not even a big line item. So it's like, okay, they brought that down 6%. Look at how small it is. G&A is not the issue with Amazon in regards to spend. It's things like this right here. Technology and infrastructure. That's the issue. That's up to almost a $30 billion line item. I mean, we're talking about $10 billion a quarter. And that's going to explode a lot higher. So Amazon can fire corporate employees and you're just saving little money, basically. Go fire a few thousand corporate employees. It's little money. It's literally little money, and it's almost meaningless now for Amazon. So if you see Amazon go fire 5,000 corporate employees, just understand it's not like that's going to be some big savings and it's like, oh, our profitability is going to skyrocket. No, it's just not the way it works anymore, okay? Now, as far as other operating expense, that was a huge number, $1.2 billion. Sometimes that's more of a one-off. That was a 614% increase. Total operating expenses up 13% for the company year over year. I mean, it's not a great number, but it's not a bad number because total net sales was up more. And the total net sales number is much bigger than the expense item, which means your operating income is going to be in a great place. So operating income went up 18% for the company year over year to almost 25 billion from 21 billion. Interest income went down 9% for the company year over year. My guess is treasuries yielding lower. Interest expense also went up. And my guess is debt going higher, right? So interest expense was up 19% year over year for the company. Now, they also had a big kind of more one-off type thing as far as operating income here. It was a 151% increase, almost 1.2 billion from 468 mil. So total non-operating income was up 42% for the company year over year to 1.6 bill. So, these kind of like one-off categories here kind of cancel each other out for the most part. They got screwed by income taxes. Provision for income taxes, that was over a double up year over year. That was a 112% increase. So their net income only went up 6%. Diluted EPS was only up 5% here. But keep in mind, it's because they got screwed by income taxes. If it wasn't for that income taxes, net income and diluted EPS would have been up at a faster clip than likely revenue. Okay, so just something to keep in mind there. Now, here's the deal, okay? I got to be honest with you guys. I have question marks. Amazon says they're going to spend $200 billion on CapEx this year. I have question marks about if and when they'll get that $200 billion back. Because keep in mind, they've got to then make $200 billion of profit. We're not talking revenue. They got to make $200 billion of profit. to make that make sense. And obviously you got to make a lot more than that, right? And plus they spent 100-something billion last year in 2025. Who knows what they spend next year? Maybe it's $250 billion. They got to get all this money back in profit. Not in revenue, in profit over the coming years to make it all make sense, right? However, I kind of got to give Amazon the benefit of the doubt because they spent huge on e-commerce and they spent huge on Amazon Web Services. And guess what? Like, that was genius. Like, they got all that money back. And there was a lot of question marks back in the day in regards to all their spend on e-commerce and all their spend on AWS, right? But I feel like those were clear propositions. I think it wasn't hard to wrap your head around, like, everybody and their grandma is going to be ordering a lot more stuff online as the years tick on, right? So I feel like you could wrap your head around that. AWS, that was harder than e-commerce for people to wrap their heads around at first, right? And I remember, shortly after I got in the market, kind of around 2010, 2011, and this is, keep in mind, I get in the market like end of 08, really start diving in 09, start figuring out my strategy, watching a ton of Warren Buffett clips on YouTube back in those days, right? And then by the time I get to kind of like 2011, I'm like full in the stock market now at this point in time, right? Like, it's a huge component of my life. I'm watching CNBC all the time. I'm getting annual reports delivered. My wife can tell you back in those days when she first came over, I used to have like basically a whole bookshelf of just loaded with like annual reports, like physical annual reports from back then, right? And I remember, I'd have CNBC on, and I remember they would be talking a lot about cloud. And even myself, I'm like, what is this cloud thing they keep talking about? They're talking about cloud, right? It was definitely harder to wrap your head around it, but you started kind of understand, okay, like all these businesses are going to the cloud, right? They're going to want to be able to access everything from everywhere. And so a company like Amazon can benefit. So you could start kind of wrapping your head around this. This AI thing, right? Like, we see it being used, but we're like, how big is this opportunity really? Because the numbers are so insane in terms of the spend. They make the spend for the cloud and for e-commerce look like not that crazy. Like, Amazon never had to spend $200 billion in a year on CapEx. That was never a thing. Like, the numbers they used to spend when they were building their cloud business, and it was like questionable back in 2010, 2011, 2012, 2013. Look at those numbers. They're literally a joke compared to the numbers they're spending now, right? Look at what they had to spend on their e-commerce infrastructure as they built that up over the years. Literally, it was like nothing compared to these numbers they're spending now. And so we're looking and we're like, oh my gosh, they're spending these ridiculous numbers. Are they even going to be able to make great profits from this? It's not like we can't see a future where people are using Gemini and people are using, ChatGPT and people are using Anthropic's products. Like, we understand that, right? And we can see how people will use these products more often for more things, right? And we can see how these companies will make money from this. But it's the spend is so ridiculous. We're having trouble wrapping our heads around, like, how do these companies get all this money back? Because this isn't the only year they're spending. They spent a fortune the previous year. They spent a fortune the previous year. They're going to spend another fortune 2027, right? At some point in time, you got to ask yourself, like, how are we going to get the ROI on this? Like, this is just insane, right? And so we got to give Amazon the benefit of the doubt, but this is a hard one to wrap our heads around, right? It really, really is. The one thing I'll say about all this insane spend, because we've had basically all the big tech companies report as far as the big hyperscalers, as they call them, right? The moral of the story is you got to own AMD. You got to own it. Like, I have $1 million plus in AMD, and I feel like it might not be enough. Like, the public count alone is about a $500,000 position, and I own just AMD shares coming down my ears and other portfolios. I'm going to be honest with you, I might not be enough. When you see the money that Google is spending, Amazon is spending, Meta is spending, and the thing with these sorts of companies is it's not like they don't have the money to spend on it. That's the thing. I understand with OpenAI, like, crap, they got to raise a lot of money, and, there's fears around that, and are they going to be able to raise, there's like questions. These other companies actually got it, right? So you gotta own it. You gotta own AMD. Like, there's no other way around it, right? You just gotta own AMD. It's a must own. And I've walked away from this earnings season feeling better than ever about AMD, right? Alrighty, next up here, stocks I bought today. So I posted this in my private stock group this morning. Obviously, the Tesla move I made there in the breadcrumbs tab, and then the stocks I bought. And so what did I buy? Well, I bought 85 shares of Adobe. I bought 120 shares of ServiceNow. I bought CRM, 60 shares of CRM, right? And we're in a generational buying opportunity in 2026. And when I say generational buying opportunity, I'm not talking about for the whole stock market. Nope. I'm talking about for SaaS stocks. This is a generational buying opportunity for SaaS stocks in 2026. I think we'll look back at this year in 2026, not for every single stock, not like every single SaaS stock is going up massively over the next few years, but I think we're going to look back 3 years from now, 5 years from now, and look and be like, remember in 2026 when every single SaaS stock was selling off 50, 60, 70, 80%? That was silly, right? And we'll be like, look at these stock prices now. And so you go through time periods when there's generational buying opportunities. They're just in different places. Last year, I was speaking about Estee Lauder and Elf stock. Those are generational buying opportunities in those sorts of cosmetics companies with all the tariff drama and all that stuff that was going on, right? If we go back to 2022, generational buying opportunity in companies like Shopify, it was $25. Stocks like Meta, it went down to 88. Stocks like Netflix, that stock was like a fraction of the price it is today. That's even with the recent crash in regards to Netflix stock, because that one's been hammered, right? I could take you through a whole long list. Like Nvidia's gone up like 1,000% since those lows it reached. There was a generational buying opportunity. Heck, AMD went down to $55. Even after this crash, AMD's just under 200. So that was a generational buying opportunity in certain stocks, right? In this year, I see a generational buying opportunity in regards to SaaS stocks specifically, right? And I think we'll look back a few years from now and be like, dang, 2026 was truly a generational buying opportunity for SaaS stocks specifically. Not for necessarily the whole entire stock market, not for every single financial asset, for SaaS stocks specifically. And so I like to participate in these generational buying opportunities. And maybe I'm wrong. Maybe all these SaaS stocks just continue to go down for not only this year, but next year, the year after. Maybe Adobe and Intuit and all these stocks are just dead money forever, right? Or they're all going to zero. I don't think that's the case. I think the market's being very delusional here. And I think I'll be right. But we'll see. I believe it's a generational buying opportunity year for SaaS stocks. And so I will be buying these stocks almost pretty much the whole year. Like, just understand, you're likely not going to see me done buying these stocks in February. I'll likely be buying them more in March, in April, in May, in June, in July, in August, in September, and October. Like, I'll likely buy them all the way through the year end. Because even when these stocks bottom, let's say hypothetically they bottom this month or next month, right? You think I'm going to stop buying them when they start going up? No, because there's still going to be a steal deal. So I won't be done buying them. I'll continue to add to my position, right? Will I buy these stocks in 2027? Probably not. I'll probably have my positions fully built. I'm trying to add as aggressively as possible in the first quarter, as I've mentioned previously, right? But I wouldn't mind adding these the whole year. And by the end of this year, I'll likely be done buying SaaS stocks. I'll likely take an advantage, and then we'll see if my hypothesis is correct here. I believe it will be, right? But time will tell, right? Public count, $3.5 million here today. Took a huge hit, right? Let me ask you a question. Does it matter to Jeremy Lefebvre whether this portfolio says 3.5 mil, 2.5 mil, or $4.5 million today? The answer is absolutely not. Other than my ego, do I really need my ego any bigger than it already is? Come on, man. What's it matter? I'm not selling out of the public count. This year, next year, the year after. It's irrelevant. If that portfolio today says 2.5 mil or 3.5 mil or 4.5 mil, what does it matter, right? Obviously, over the long term, I want it to increase massively, but I'm not selling the public count right now. I'm not like, I got to go use that money to go buy, a fleet of Ferraris or this or that. None of that. And so when I look and when I see the public count at $3.5 million today, I also think about when it was $2.5 million during the tariff drama last year. I also think about when the public count was around $1 million going into 2023 after it got slapped, right? I also think about the days when the public count was, $10,000 back in 2018. And I also think about the days when the public count was just a little portfolio getting absolutely slammed at the end of 2018. And so, when it comes to your portfolio, you're adding these stocks and investing for years to go in the future, right? It's not like I'm like, I gotta, pull out the money tomorrow because I'm gonna go buy a bunch of TVs. What are we talking about here, right? Like, focus on the long term, and that's how you get to a place where, you start having so much money that, it kind of becomes irrelevant. And that should be the goal, right? We're trying to make so much dang money that all becomes irrelevant over time, okay? So that covers that, okay? Additionally, pin comment down there if you're looking to apply to join private stock group, private wealth group, with all access to all that stuff, all the course curriculums, access to the private Discord chat, access to exclusive weekly videos, access to see the moves I'm making in my portfolios, all that good stuff. We'll send you your Steel membership cards once you join us in there. That will be pinned comment. Public countdown, a whopping $160,000 here today. That's a big number, down 4.2%. And who do we have to thank for that? Well, it's Mr. AMD. I posted this on X just a bit ago, 47 minutes ago. Looks like 23,000 people have gotten to see that. If you want to follow me on X, I always have that linked in the description area down there. 6 figures down on AMD just in the public count here today. If you add up all my shares across all the portfolios, it was a multi 6-figure down day for AMD. That stock obviously got crushed. We have Michael Burry out there saying things like the U.S. financial markets and the economy are going to crash. The problem is too big to save. We have stocks just getting obliterated. Figma's down 83% from highs. HubSpot down 71%. Monday down 70%. ServiceNow's down 53%. Salesforce is down 47%. AppLovin's down 47%. Zscaler's down 46%. Workday's down 45%. Datadog down 42%. Snowflake, I don't know why they really call it a SaaS play. I wouldn't really call it a SaaS play, but Snowflake's down 40%. Shopify getting Shopify, 37% down for that stock. I mean, you look at the hood, Robinhood, for instance, right? We used to say the hood's in the hood. I mean, the hood might be going back to the hood, okay? Look at this baby. It's now down 47% from highs. Coinbase is looking for coins in the parking lot. This stock is now down almost 60% from the highs it hit back in 2025. Almost 60%. These moves are pretty darn shocking, right? Look at Bitcoin. Bitcoin's down 42% from highs. And the craziest part of this is, the S&P 500 is only down like 2% from highs. 2%. So I just ran you through devastation. What do you think some of these assets would be at if the S&P 500 itself, if the NASDAQ itself was actually getting hit hard, right? Like, that makes you kind of think, right? Look at this. Ethereum is now down 56% from the highs it hit last year in 2025. Unbelievable. Off a 2% S&P 500 move down. Incredible, right? So we have two scenarios that could be happening now. It's a small pullback, right, in regards to the market, and these riskier stocks, or seen as riskier stocks, could just be getting hit, and assets in general, like Bitcoin, Ethereum, right? And it's just a small pullback in the market. Or this could be risk off assets like Bitcoin, Ethereum, the riskier stocks, right, setting up for what's coming, which is a major market correction or crash, which sometimes you see that scenario happen, right? We got to talk about that in today's video. 5 core subjects in this one here today, ladies and gentlemen, okay? One is the market setting up for a correction or crash, okay? We're going to talk about that because it's an important subject given all these risk assets selling off so heavily the last several months, right? Number 2, AMD. That stock obviously got just obliterated today. My thoughts on the crash, what's my plans with that stock now at this point in time, okay? Third subject up here, Google earnings. What's my plan with my Google shares given those earnings? Number 4, Elf on a shelf. Elf reported earnings. What are my plans with Elf stock now at this point in time? What do I see happening there? And the 5th subject up here, I'm going to share my full possible buys watch list in this video here today. Talk about a banger of a video. One thing only I need from you guys. I'm tired, man. I'm tired. If you could just please hit that thumbs up button. That's all I need from you, okay? Just one little smash, a like button goes a long way for your man Jeremy, okay? I recorded you guys a 58-minute video today that Loom screwed up and I could not download it. 58 minutes. I was going to post it on the reaction channel at like 11 a.m. or around noon today, and Loom like wouldn't download it. So Like, it's been a long day. Hopefully at some point in time, like, Loom can figure that out on the back end and give that video so I can post it for you guys. I was talking about so many stocks in the market in that one. This video, I'm going to be honest with you, is better than that video was. But the moral of the story is it's frustrating to record a 58-minute video. And, you know, obviously I know a lot of you guys wanted to see that, but can't see it. If you want to have notifications on, put notifications on. There's so much going on in the markets right now. I'm trying to keep you guys up to date with everything going on. Not only notifications for this channel, but for that reaction channel as well, because you never know if I'm going to post something on the reaction channel or here. A lot of it comes down to if there's videos I want to react to, right? Pin comment down there today. If you're looking to apply to run private stock group, private wealth group, get access to all of my course curriculums, Become a Master Stock Market Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, private Discord chat, all that good stuff. You know, applications are always the most insane when the market's banging, when people are hitting all-time highs. Applications always fall when the market's going through trouble, right? That's the best time to join, is when the market's actually in trouble. That's the most intelligent time, right? In the Discord chat, whoo, that could be a lifesaver, right? Makes you feel like you're not in this game all alone, right? And the Discord chat's always craziest during earnings season and when the market's crazy, right? Surround yourself with 6, 7, and 8-figure investors that have been doing this a long time. That will be the pinned comment down there to apply to join us in the private stock group, okay? Alrighty, so is the market setting up for a correction or crash? Here we go. So, if you want to understand how risk on assets can set you up for a correction or crash, look at past time periods, okay? So for instance, two of the bigger crashes we've had in the last, let's call it 30 years, right? Last 3 decades, or we could just say since my lifetime. I've been alive for 36 years now, right? The two biggest crashes that always come to mind in my lifetime of 36 years is the tech bubble crash and the great financial crisis crash, right? We've had other crashes throughout that time. We had the 2020 crash, we had the 2022 crash, and NASDAQ fell 37% peak to trough, right? And we've had other corrections, crashes along the way. But the two big dogs are the tech bubble crash and the great financial crisis, right? And in both those scenarios, you notice something very interesting. So for instance, in the tech bubble, you know, prior to that popping, Amazon was a huge risk on stock, obviously, back in those days, right? And if you look, that stock actually hit all-time highs in March of 1999, okay? Remember this, March 1999. Now, the S&P 500, if we pull up SPY here, the S&P 500 actually hit all-time highs in the summer of 2000, okay? It's very important because you got to understand an asset like Amazon was already showing weakness way before the market itself actually started to fall, okay? Keep that in mind. If we look at eBay was a huge risk on stock back in the tech bubble days, right? eBay was a high flyer. That baby hit all-time highs in April of 1999, okay? Once again, way before. We're talking, you know, some of these stocks like Amazon, eBay were hitting their all-time highs in their peaks. They were peaking well over a year before the actual market peaked, okay? Microsoft, Mr. Softy, that one peaked December 1999, a full, we can call it 6 to 7 months before the market itself peaked. If you look at Cisco, this one was interesting. It peaked slightly before the market itself. This one was a March of 2000 peak here, okay? So the moral of the story is here, you know, these risk-on type stocks, they can peak months or even year plus before the market itself peak. It's actually a pretty, you know, telltale sign that, ooh, you might actually have trouble coming in the overall market. It's just those risk on stocks give you a little tell before that. Now, if we think about the great financial crisis, right? The great financial crisis, a lot of the risk on type stocks at that particular time were not really tech stocks. They were like home builders, banks, those sorts of things. Like that was the hype in those particular days prior to the great financial crisis, right? So if you look at a stock like Toll Brothers went through this parabolic rise, right? And the interesting thing is that stock peaked in the summer of 2005. Now that's fascinating because that's a full 2 years before the S&P 500 peaked. Because the S&P 500, that peaked in, that actually peaked around fall 2007. 2007, ladies and gentlemen, okay? Fascinating. KB Home, same exact situation. That one peaked in July 2005. Pulte Home, that one peaked in July 2005, same as KB, same as Toll Brothers, right? Look at somebody like a banking play, like JP Morgan. The banks were hot back then. The financial institutions, there was so much financial engineering going on and all types of craziness, right? If you look at JP Morgan, that one peaked in the spring of 2007. And remember, the market itself peaked, as far as the SPY goes, the SPY peaked around fall of 2007, right? So JP Morgan peaked way before that. Look at Bank of America. Bank of America peaked in October 2006. Woo! Goldman Sachs. This is a really interesting one regarding Goldman Sachs. It actually peaked with the S&P 500. That's a fascinating one, right? Citigroup, this one peaked December of 2006. And by the way, look at how bad this fall was for Citigroup. That was a $500+ stock. And it fell to like, it fell to like, I think like $10 or something like that. Like, I can't remember exactly where the lows were, but it was low for Citigroup. Awful in regards to that, right? Look at a company like John Deere, that could be seen as like a construction play back in those days, right? That one peaked December 2007. So that was a really strange one. It peaked actually slightly after the market peaked, right? One of the most hidden stocks that no one ever pays attention to, but this one's crazy. You got to pay attention to this stock. It will actually tell you so much. You know what it is? Polaris, okay? This is a fascinating stock. This stock peaked 2.5 years before the SPY peaked, okay? This peaked in spring 2005. Now, Polaris is a fascinating stock to pay attention to. And the reason being, the products this company sells, they're the ultimate, the economy's doing great, I got too much money, I'm going to go spend some money type products, okay? They sell snowmobiles, ATVs, side-by-sides, fun stuff that people buy when they got way too much money. Okay, and they don't know what to do with it. And so they're like, I'm going to go buy an ATV. I'm going to go buy a snowmobile. I'm going to go, like most of the people that buy Polaris products do not buy it for needs-based things. It's like, I want to go have some fun. I'm going to go get a big truck as well. I'm going to get a trailer. We're going to go out to the dunes. We're going to go do this, right? And I remember Polaris, we moved out of a very rough neighborhood into the middle class. We moved in 2001. And I remember being in that middle class neighborhood around 03, 04, 05, 06. A lot of people started to get these type of things, ATVs, side-by-sides, right? All this type of stuff. We had several neighbors in that middle class community that started getting this sort of stuff, right? And it actually correlates with the peak in that stock price, right? And then as the years ticked on and the economy started to get in trouble, guess what ended up happening? Polaris sales went down massively. Suddenly, by the time you got to 2009, the people that were buying those ATVs and the side-by-sides and snowmobiles and all that stuff, they were no longer buying those the same way in 2009 that they were in 2005. Things had changed dramatically, right? So it's one of the most hidden stocks that will tell you a lot. Right? Now, the fascinating thing with this Polaris stock, right, is, and this might be a silly but a genius way to know if we're early or late stage cycle, because this is a big debate. Are we early stage or are we late stage? I hear countless arguments that the economy is late stage, right? We're getting ready for the crash in the economy, right? Economy is going to get way worse, right? I consistently hear that. This might be the silliest but most genius way to know if you're late stage or early stage in regards to the economy. Polaris peaked April 2021. If we think about a year where people were flush with cash and had way too much damn money, it was actually 2021. You had the stimulus money out there. People kept, for the most part, people, like especially in terms of professional industries, actually kept their jobs throughout that time. Unemployment spiked huge in that very initial wave of the Rona shutdowns and everything like that, but it dropped right back, very, very quickly as soon as like the tourism industry started to open back up and, everything started to open back up, right? And you had PPP loan money, you had all that stuff flushed out there at that particular time, right? And so, if anything, people were almost too flush with cash. The inflation hadn't hit people yet, right? And so 2021 was definitely a year marked with like big spending out there. Like, oh my gosh, everybody was getting ATVs and side-by-sides and all that sort of stuff at that particular time, right? And so that stock peaks in April 2021, right? And guess what? It actually bottomed last spring. in the spring 2025. And so you could make an argument that we have started a new economic cycle now at this point in time, where the economy for the average person is actually going to improve over the next several years and not get worse. And everybody makes this the point again. I listen to these Wall Streeters on the Reaction channel all the time. They always talk about late stage economy, late stage, right? We're later stage, we're late stage, right? There's an argument to be made that we could be early stage and we could have an economic cycle uptick for the next several years where the economy gets better, right? And we'll see if that happens. But if it does, just remember Polaris stock. Just remember that particular stock, okay? It's clear that one's in a definite uptrend there. So the moral of the story is here, risk on stocks can often peak 3 to 9 months before you get a correction or an overall crash in the market, right? It happens very often, and you can look back at the tech bubble days, you can look back at the great financial crisis, and you definitely see a trend of that happening, right? Don't bank on it, but it definitely happens a lot of times before, right? Now, for buyers of stocks, if you're an individual that's planning on buying stocks over the next year, okay, the worst case scenario for you is you're already getting lots of deals in the market. So let's say we don't get a correction in the market. Let's say we don't get a crash in the overall market. You're already getting huge discounts on a lot of stocks out there, okay? That's worst case scenario is already you're getting a lot of deals, right? Best case scenario is stocks get insanely dirt cheap over the next 6 to 12 months. Let's say these risk on assets, right, are setting up and giving you a hint of like, we got a major correction or a crash coming in the market. You get even cheaper prices over the next 6 to 12 months, right? Instead of getting 40 and 50 and 60 and 70% discounts on stocks, you might get 60, 70, 80, 90% discounts on stocks, right? Don't get your hopes up about that. But if you're a buyer over the next year, you're set up very well. You're already getting huge discounts. You might get even bigger discounts if these risk on assets are giving you a signal that we're actually going lower in the overall market and these assets are going lower over the next 6 months or so, right? That brings me to Bitcoin. Bitcoin has not been through the tech bubble. Bitcoin has not been through the great financial crisis. It hasn't been through major kind of down spells. It went through Rona, right? It went through 2022 drama, and both those situations, it got slapped hard. We all know that, right? But in regards to the Bitcoin cycle, here's the thing that's very interesting about this. According to the Bitcoin cycle, which a lot of people say this has been insanely accurate over its history, right? This baby's not bottoming anytime soon. According to the Bitcoin cycle, this baby's not bottoming until we get to around 30K, and that will be in the fourth quarter of this year. And a lot of people believe this Bitcoin cycle is insanely accurate throughout time. I wouldn't bank on it. Like, don't just say, oh, because the Bitcoin cycle says we're going to 30K and it's not going to bottom to the fourth quarter. Like, it's for sure happening. Like, you never know. Like, it could be wrong, right? But I've been actually tracking this recently, and I'm like, dang, it's actually been pretty impressive in regards to kind of calling this downward move and some of the spikes recently, and thinking like, oh, Bitcoin's coming back just to be let down again, right? So if that happens, you could make a strong argument that the overall market is also probably going lower and bottoming in the fourth quarter of this year, right? So just something to kind of keep in mind there. Now, I got to give everybody a huge warning. Do not, I repeat, do not let 2026 buying opportunities pass you right by like people did in April of last year with incredible discounts on stocks all over the place, like people did in 2022. 2022 was a generational buying opportunity in countless tech stocks. Tesla fell to $100. Palantir was trading at $6. Meta was trading at $88. Netflix was trading at a fraction of the price it's trading at right now. Shopify was trading at $25. It was insane. It was a generational buying opportunity for countless tech stocks, right? Like so many of these companies, it won't be till their business models are irrelevant anymore and they lose their total management teams that are there that they'll ever even see those prices again, okay? Generational buying opportunity. Past so many people buy. People were getting devastated in the market. They said, screw this, stocks are a scam. They left the market and they missed generational buying opportunities in so many tech stocks out there, right? 2020, huge buying opportunity, a scary one because obviously they're talking about the economy could be closed for, years. but generational buying opportunity in regards to the market itself. 2018 was it was a beautiful buying opportunity at the end of 2018. 2009, I mean, I wish I had a lot more money back in 2009. The problem was I was just getting started in the market. I got started in the market at the very end of 08, going into 09. Dude, you know how much I was making back then? I was making like $8.25 an hour. If only I had a lot more money. If only I had a lot more money back then, right? But of course, I'd be a lot older gentleman than 36 years old if I had a lot more money back then, right? But the moral of the story is, do not let this opportunity pass you. The discounts you're getting now, and if we get even bigger discounts, don't let it pass you, because this is what happens time and time again. People say this time's different, the market's never coming back, blah, 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 right? And they let all these stocks go, pass them right by, all to a year later, a few years later, look back and be like, how did I not buy that stock down 70%, and that stock down 60%, and that stock down 80%? And that happens again and again and again. Never fails, right? Don't let it pass you by. Alrighty, next up here, AMD. What's going on here with AMD? My thoughts on this crash, what my plans are with the stock. Then we're going to Google McDougal, Elf on a Shelf, and my entire buys watch list, okay? Listen, AMD just got some great news. Do you know what the news was? Google McDougal is going to absolutely spend like a drunken sailor. They're talking about doubling their CapEx. I mean, just ridiculous numbers in regards to Google. They're so far ahead of what anybody was anticipating them spending for CapEx. It's a holy smoke, this ain't no joke situation, right? They're talking, and keep in mind, this number, they were talking about like $180 billion of spend in 2026 was, I think Wall Street was at like 120, which was a huge number. They're talking about 180. Get me flipping my flapjacks, right? This comes right after last week. Meta said they're going to spend between 115 to 135 billion in 2026, right? Which was an insane number to hear. And now Google just said, oh, that's it. 125 midpoint. We're going to spend like 180 billion. Okay. That's insane. Now, guess what? One of my other companies, Amazon, company I'm up 143,000 on. This company, big investment for me. It matters tomorrow. $362,000 investment of mine. Guess what? Amazon's going to say they're going to spend crazy on CapEx as well. So you got just company after company just putting up crazy CapEx numbers. And guess what? That's very bullish for AMD, right? I posted this inside the private stock group. I said, CapEx $180 billion, billion, almost fell off the couch. It was true. Like, oh my gosh, when I saw that number, I was like, what? 180 billion, right? But the bottom line is this is very bullish for Nvidia, very bullish for AMD, and very bullish for Broadcom, right? So we have a scenario here where AMD reports great numbers. They beat analyst expectations. They beat in terms of the guidance. Lisa Su said all the positive things you could have possibly said when she went on CNBC here today. The conference call was great. But guess what? The stock still went down. It's insane, right? Absolutely insane. Now, keep this in mind. This is very important, okay? Given Google's absolutely ridiculous CapEx spend for 26 that's expected, Meta, Amazon's going to put a crazy number up as well, right? These companies honestly have no choice but to moderate spending massively in 2027. No choice. The spending is so out of control, the increase is so out of control, they're going to have no choice but to moderate, okay? And so, it's just starting to take so much of their revenue and profits now at this point in time. It's just like everything's just basically going to CapEx, right? So they're going to have no choice but to moderate the spend. When I say moderate the spend, that does not mean necessarily pull it down. That doesn't mean like Meta spends 130 billion this year and they all of a sudden say in 2027 we're only going to spend 80 billion or something like that. That could happen, but that's a lower probability. It's just more like if they do have any increase, it's a very small increase then at that point in time, right? Now, if the market grinds down the next 9 months, that's going to give even more like the market will basically force Google, Meta, all these companies to moderate spending in a pretty substantial way, right? Now, the reason that's important is that's actually great news for AMD. And the reason being is AMD is the value play next to NVIDIA, right? And I told you guys this, I've explained this since last year regarding AMD and NVIDIA, right? I've explained this time and time again. It's very important everybody understands this. Listen, NVIDIA is AMD's best friend. AMD is NVIDIA's worst nightmare, okay? There's a big difference here, okay? And so you look at like the OpenAI and AMD deal, right? This is fascinating because AMD's margins are going up right now, and they're going to continue to go up for the next several years. And the reason being is NVIDIA went so crazy with the pricing on their chips that AMD is able to command margins that they've never seen basically ever, right? Meanwhile, AMD is going to force NVIDIA to likely bring their margins down, because if AMD is undercutting price, right, and starts stealing away a lot of market share, NVIDIA then has no choice but to do what? Cut prices. Here's the issue. If NVIDIA cuts prices, right, their margins are going down to Chinatown. Additionally, this is even a bigger issue, that would then be NVIDIA admitting that AMD is right there with them. And NVIDIA's had this kind of like thought over the last several years of like, there's no competition for NVIDIA, it's them by themselves. If suddenly you have to start cutting price because AMD's putting the pressure on, your margins start going down, then everybody realizes you're nothing special. You're more commodity, right? That's a hard thing to admit. That's a hard thing to admit, because that could totally that could hit your stock price hard. That could hit the morale of your company hard. Ooh boy, your margins start going down and people start looking at you as more just commodity play. Whew, that's tough, right? That's very, very tough. Now, the other issue is NVIDIA is investing, it's supposed to invest in OpenAI. Now they're trying to like pull back from that whole thing, and they're like, well, they invited us to invest, but that doesn't mean we're going to for sure. We're considering it, right? But NVIDIA is supposed to supposedly invest in OpenAI. Meanwhile, OpenAI is investing in the AMD. Right? They're supposed to buy a massive quantity of AMD chips over the next several years. And if OpenAI comes through with all their purchases, they could acquire up to 10% of AMD. That cannot make you feel good if you're NVIDIA, right? Like, oh, we're going to potentially invest into you so you can buy a bunch of AMD chips and then get a bunch of ownership of AMD. I don't think NVIDIA would be... it would be that happy about it, right? So this is a whole fascinating situation in regards to this, right? Now, additionally, I think this really matters significantly, because this kind of came out on the DL, right? But there's been recent reports that suggest tension between OpenAI and NVIDIA, primarily driven by dissatisfaction over the performance of some of NVIDIA's hardware for specific tasks. People assume, oh, NVIDIA's got these super high-end chips, so they're just great for everything, right? Not necessarily. If you look at some custom chips, they could be much better for certain tasks than actually what NVIDIA does, right? Performance concerns. Sources indicate that OpenAI is not satisfied with the speed of certain NVIDIA chips regarding AI inference. The process of answering user queries, particularly for software development tasks, okay? And basically not giving, I've also heard like something about like not giving answers like quick enough, right? And guess what Lisa Su's been talking about the last year, if not last 2 years? She's been talking about how AMD is very well positioned for inference, right? Whereas NVIDIA really got out there in terms of training these models in a huge way and just totally won that market, right? But she's been talking about inference is going to be orders of magnitude bigger than training was, and that AMD is very well positioned for inference, right? It's all lining up, baby. It's all lining up. So as far as me and what I'm doing with my AMD stock, listen, I'm holding every share as tight as I possibly can, right? I'm a very happy shareholder. I spoke about AMD in this video here from 22 hours ago. 104,000 people have gotten to see it so far. It's called AMD Own It. In that video, I also gave my projections for AMD stock over the next several years, okay? So if you're at all interested in AMD, make sure you check out that video when this one's over here today, okay? Alrighty, next up here, Google, McDougal, my plan with that stock, then we'll get into Elf on a Shelf, and then we'll get into my possible buys watch list, every single stock, okay? Google, listen, they all wanted this stock to go up. When I say they, I'm talking Wall Streeters. They bought this stock relentlessly the last 6 months. They wanted this one to print so bad, so bad. This was the one big tech that they really wanted to go up. The Mag 7, they really wanted to go up. But the insane CapEx Google just came in with is screwed up everything, right? I mean, the number is just so ridiculous that it's just like they tried so hard to get this stock up in aftermarket. But I mean, that CapEx number is just so huge, it scares a lot of people away. Okay. No, let's be quite honest. This is a grade A income statement. It's a banger from Google McDougal, as you would expect. Revenue, 18% growth year over year, almost $114 billion of revenue from $96 billion. Cost of revenues only went up 13% versus 18% revenues. Winner, winner, chicken dinner. The issue, look at R&D. R&D is rising rapidly for the company. 42% growth. Keep in mind, that's coming off of a low base. That base is starting to get big. So imagine 42% again next year on a now an $18.5 billion number. All of a sudden, R&D starts to hit you hard, right? When you're having these sorts of increases and the base keeps getting bigger. It's fine when the base is really small, but as that base gets bigger and bigger and bigger, ooh boy. And we'll talk about why that's going so insane in just a moment. Sales and marketing was only up 12%. That's not bad. G&A, general administrative, that one was a trouble spot. That was up 21%. So total costs and expenses, this was kind of a trouble spot. It was up 19% year over year. So income from operations was up very nicely year over year, right, to $35.9 billion from $30.9 billion. But that was up 16%. That's the only reason I didn't give them an A plus here, and I gave them a grade A, because income from operations rose at a slower clip than revenue rose, okay? Now, other income, that was up 150% year over year. Income before income tax is up 21%. Net income up 30%. Diluted EPS up 31%. So banger earnings for Google, as you would expect. That's the reason it's like a $4 trillion market cap or whatever it is. $4 trillion is a big number, right? Balance sheet's a beast on this company. Look at cash and cash equivalents, $30 billion plus versus $23 billion the same quarter last year. Marketable securities, $96 billion versus $72 billion. Total cash, marketable securities, and cash equivalents, $126, almost $127 billion versus $95 billion, right? Long-term debt has peaked up a bit, so that is something to keep in mind. Long-term debt went from $10.8 billion to $46.5. This is the issue here. You look at a company like Google, okay? They're talking about spending $180 billion on CapEx in 26, okay? And by the way, shareholder equity up to 415. So the balance sheet's still amazing at Google, okay? Listen, for as long as I can remember, basically since I've been in the market back in like 08, 09, Google's always had one of the best balance sheets in the world. Here's the issue. They want to spend $180 billion on CapEx this year, right? Probably another crazy number next year. Some of that you can fund out of profits, right? But you might start taking on a lot of debt. Imagine Google 3 years from now with a huge debt load on this company. Imagine them with hundreds of billions of dollars of long-term debt. Then we can't call Google a great balance sheet anymore. And that's the issue with these companies spending so insane and taking these business models from being asset light to asset heavy. Look at, they just went from $10 billion of long-term debt to now, $40 billion plus? And now they're going to really start spending like a drunken sailor? You could be looking at Google a few years from now with hundreds of billions of dollars of long-term debt. Now, is that a death knell for the company? No, because they still make crazy profits. Their revenue's great. It's not like, you're going to zero because they've got hundreds of billions of dollars of debt. They can handle it, but it makes you start to look at the company different. You start looking at the company as like, they're one of those companies again. One of those huge debt-laden, massive debt companies, right? That's where things could go with Google. And I'm going to be honest, that's where things are probably going with Google. You're going to look at this company a few years from now and you're going to look at that balance sheet and you'll see hundreds of billions of dollars of long-term debt. And this was always a company that the debt was never even like a subject. It was basically like they had non-existent debt, right? Or you even look at this company, at this time last year, $10 billion, literally nothing. All of a sudden, this company has $300 billion of long-term debt. That's a different story, right? Different story in regards to that, right? Now, the issue, the big dog issue, okay, they're spending so insane. This is going to start to hit earnings hard. There's going to be hell to pay. All this CapEx spending, it's going to come right back. There's going to be hell to pay here in 2027, 2028, 2029, okay? They're spending such an insane amount. This is going to start hitting that R&D line item huge. You already see it going crazy, 42%. Now, you might think, they're spending, that's where, they're spending on humans, right? Nope. A lot of that has to do with the depreciation because you're buying all these chips, right? Now, these companies, it's also a debatable subject on how long they're taking depreciation cycles for. So according to NVIDIA, they're talking about their chips, in terms of real usable life. They're talking about you got to be on the next cycle immediately. That could be sales talk or that could be truth, right? But if you talk to NVIDIA, talk to Jensen, they basically say these chips are only really great for like 2 years, right? And so maybe you should be taking two-year depreciation on this. But it looks like these big tech companies are going to try to take 5-6 year depreciation. But that also means you're going to have to take hits for the next 5 to 6 years on all this, right? So when you see a company go spend $180 billion in 1 year, understand that's going to hit that R&D line item huge for the next 5 to 6 years. So you're talking about, $30 billion, if not 40, 50 billion, depending upon your schedule, per year of an R&D hit there, right? That starts to stack. You do $180 billion of spend in 26, right? You just had a crazy spend last year in 25 as well. That starts to really hit this year, right? Then you got $180 billion in spend this year. That starts to hit hard next year. Then the next year, let's say you do $200 billion of spend. Dude, there's hell to pay. That R&D item goes crazy and your earnings look way less. And so that's the issue. Right? That's the issue you run into with companies like Google and even my beloved Meta is you got these companies, they were some of the most attractive stocks you could ever invest in because they were asset light, they made stupid profits, and they had great balance sheets. Over this next few years, we're going to be talking about companies that are not going to be asset light anymore. They're going asset heavy. Asset heavy is not as attractive. Stupid profits? I don't know about that. With the way this depreciation is going to start hitting hard, I don't know about stupid profits. And then, last point. Balance sheet. Balance sheet is not going to be looking good for these companies. It's going to go from a situation where these companies had the best balance sheet you ever seen to all of a sudden these companies over the next few years could start stacking massive amounts of debt on the balance sheet, right? While depleting cash. So what are my plans with Google stock? It's been a great stock for me, $78,000 in profits, and that was just off one buy. On April 23rd, 2025, I bought 444 shares in the public count, right? It's made me great money, 112%. Listen, I'm going to probably take my money and run. Not because Google's a bad company, not because they're getting disrupted by OpenAI, none of that stuff. Great company, they're going to continue to make great revenues over the future years. But I've already got two companies spending like drunken sailors. One's Meta, and Amazon's going to be spending like a drunken sailor as well. I don't know if I really want to hold a third company that is just absolutely out of control with their spending, right? And so I might take my profits out of Google and invest that elsewhere. I might go ahead and do it, right? Now, the other issue with Google is if you look at my base case, this is my old base case. I've got to update this. I had them doing 14% net income growth on average per year, 2026 to 2029. Based upon how insane that CapEx is going, I don't think they're going to do it. Even with, in my base case, I have them growing revenues 12% on average per year, 26 to 29. I'll be honest with you guys, I don't think they're going to be able to do it. So that net income is likely not going up as high as I think it's going. I had them doing net income of $220 billion in 2029. With how hard that CapEx is going to hit depreciation, which is going to hit that R&D line item, I don't think they're going to do it, man. I don't think they're going to do it. And keep in mind, even with that scenario, this was only going to give me a CAGR of 7% to 12%. So like Google, when I was buying it, was a steal deal. It was set up for great compounding annual growth, right? Now, it doesn't really set up well at all. So I might take my profit and run out of Google. I'm asleep on it, but I might take it. Beauty, Elf earnings. What's my plan with that stock? Then we'll get into my full buys watch list. So Elf on a shelf, it's up 5% after hours. And I was joked in the private group. I said they probably missed numbers, right? Because all these companies that are beating earnings, their stocks are going down. So I'm like, Elf, they probably missed, right? Guess what? They didn't miss. Their numbers were a banger. As far as non-GAAP EPS, $1.24, that beat by 52 cents. Revenue came in 38% up year over year. That beat by $27 million. Additionally, they took up their expectations for net sales for the year. They were at 1.55 billion to 1.57 billion. Now they're at over 1.6 billion expected for this fiscal year. Adjusted EBITDA, they took that up by over $20 million or around $20 million as well. Adjusted net income, they were at 165 to 168. Now they're at 180 mil to 183 mil. And adjusted diluted EPS, they were at 280 to 285. Now they're at 305 to 310, right? Great. As far as the income statement goes, this was a grade A, almost an A plus, like a Google situation was so close. Almost an A plus. I gave him an A grade. Net sales up 38% year over year. That's a banger, right? Obviously, a lot of that is definitely attributable to Rode in that acquisition. Cost of sales was up 39%, so a little bit of a high number there, and that's why I didn't give him an A plus, right? Cost of sales rose just slightly more. However, obviously your revenue is way more than your cost of sales, so your gross profit is still going to explode higher, even if your cost of sales is up 1% higher, right? So gross profit up 37% to 347 mil from 253 in the same quarter last year. And keep in mind, this is even with the whole tariff situation, all that, right? SG&A, that only rose 28% year over year, which I'll take. If you can tell me my net sales up 38% and SG&A is up 28%, we're going to take that every single time. Winner, winner, chicken dinner. Operating income rose 93% year over year for the company to $67 million. So they're really starting to get some leverage on profitability. Net income was up 128% to $39 million from $17 million. Diluted EPS up 116% to 65 cents from 30 cents. That's a grade A banger out of Elf. Almost an A plus, right? Here's the deal with Elf. It's on its way back to 200 plus. It's not going to happen overnight, but it's on its way to 200 plus. Everything I see in the business is going in the right way. Revenue's going up very nicely, obviously. I expect that to continue, not at a 38% clip forever, obviously, but they have a lot of room to raise those revenues. International expansion is massive. They still have so much expansion just with Rode in the United States. Never mind talking about international. They're starting to get some real leverage in regards to the bottom line. The tariff situation is what it is. That's already in the past. It's on its way to 200 plus again. Elf is a stock I'm up over 1,000% on in the public count. This is a major position for me in other portfolios as well. The reason I don't buy more shares of Elf in the public account is because I already own a lot of shares in other portfolios as well. So do keep that in mind. This is actually a smaller position for me compared to some of my other portfolios. So do keep that in mind, okay? Last up here, let's get into my possible buys watch list here and talk a little bit about these stocks. So possible buys watch list, we got FuBu right up there, $1.62. I mean, just give it to me for free. I mean, at this point in time, right? Meta is still on my possible buys watch list. The CapEx, man, the dang CapEx. Amazon as well. AWS growth, obviously everybody's expecting Amazon to come in with a crazy CapEx given Google. So Amazon sets up really well, man. Everybody's kind of expecting Amazon not to do well because Meta's giving back all its gains. Google, we'll see if that stock's down tomorrow, but the CapEx was crazy. So now people are expecting, if anything, Meta's going to go down, right? Also, Azure growth was not like a surprise to the upside. So AWS expectations are a little bit lower now. So if AWS comes through with a banger quarter, and let's say CapEx is, up substantially year over year, but it's not like a crazy number like Google, you could see Amazon pop to 250 plus, but we'll see. I'm not even going to get my hopes up, especially with the way these stocks are going down right now, right? They're all in Chinatown. PayPal down to 41. Celsius 49. Looking forward to Celsius earnings. Honest is a $2 chuck. ServiceNow is a great buy in my personal opinion. People have gotten way too crazy about these software stocks. Salesforce, 199, give it to me. RH is actually interesting to me. I want it lower though. Elf Beauty's still a buy. Even tomorrow, even if the stock's up big tomorrow, it's a buy. If the stock's down, it's a buy. EL stock, definitely keep an eye on that one. They report earnings tomorrow after the bell. It's definitely one keeping an eye on. I have a lot of shares in the stock, but at much lower prices. American Express, always a buy. I don't know other way to put it. Kind of like Amazon's always a buy, American Express always a buy. Bath & Body Works, this is an interesting one to me. I just don't love the balance sheet there. That's probably what's kept me out of it. Whirlpool, we'll see. Yeah, that one's on my possible buys watch list, but I think it's still pretty low probability I'll buy that one. Cheesecake Factory, always a buy. Adobe's a great buy right now. I was looking at that one in that 58-minute video I recorded, you guys, that never got to get released because Loom wouldn't let me download it. But Adobe, I was talking about that one in that 58-minute video. 4P's like 11 on Adobe. Adobe is going to be so hard to push down on red days now. It's going to be possible, but it's going to be hard. Meanwhile, on green days, it's going to, explode to the upside. Nike up 5% plus today. Nike's still a steal deal at $64. Come on. And Cavistock, I'm keeping an eye on that one. It might crash on earnings. If it does, I might step in after that. I'm kind of looking for that one in the 40s, but we'll see what happens there, right? Remember, we're playing this game for the next 3 to 5 years in regards to your stocks. Always keep focused on where your stocks are headed over the next 3 to 5 years specifically, not the next 3 to 5 days, 3 to 5 weeks, 3 to 5 months. That comes and goes. What happens with your company's earnings power and potential over the next several years, that's what matters, okay? So stay focused on the long term. If you want to apply your own prep stock, you want to take your investing game up to a much higher level than where you're at, that will be the pinned comment down there. Click on that, and let's see if we can get you in there and access to everything. All my course curriculums, this is a time to learn, man. You got to be learning during this particular time. Access to 1000xstocks.com to do your research. Access to see the moves I'm making each week, exclusive weekly videos from me, be part of the Discord chat with the great community with not only myself, but the 6, 7, and 8-figure members that will be pinned comment down there. Okay, we got stocks crashing all over the place out here. It's a bloodbath, right? Look at FUBU down 21%. Look at PayPal. Oh my gosh, just when you think like this stock has to bottom. Does it ever bottom? No, it doesn't. It's now 42.22. That might be actually a good sign. Down 19%. Look at Shopify getting Shopify'd here today, down 10%. ServiceNow down 7.5%. Adobe down 7%. Salesforce down 7%. We got stocks crashing all over the place that we got to speak about here today, right? I posted this 28 minutes ago on X. If you ever want to follow me on X, that's always linked in the description area down there. Public count's such an animal. I have 2 stocks literally crashing today, plus others getting hit hard, right? And public count's down like $57,000, right? Like that's nothing. And that's where position sizing comes in. Diversity is so key in regards to that, right? So I want to speak about kind of bigger picture for a moment at the beginning of this video. Then we're going to get into PayPal. Is it a buy? Is it a sell? Is it just kind of don't do anything type situation? I did spend $70,000 on stocks, by the way, just probably about 10 minutes ago, something like that, right? FuboTV, we'll speak about what's going on with FuboTV. Is that it's over situation or is it an overreaction? Then I want to react to some videos. I think this one's important. Julie and Emmanuel. Mood around tech is as cautious as I've seen it since ChatGPT launched. That's an important video. Palantir obviously reported just an unbelievable quarter last night, and the stock is not really being rewarded. I mean, you could look at it up 6% today and be like, well, yeah, it's getting rewarded. No, that was an A++ quarter. That's the only A++ quarter I've ever graded in the history of me grading income statements. It's not really being rewarded. So I think it's actually important we speak about Palantir in this video here today. And then we're going to go watch this one because this is an interesting video because we're talking about some bottom fishing today, right? And this gentleman, Harvey, says don't go bottom fishing for stocks. Busy times, folks. We're action-packed time. It's earnings season going on right now. One thing only I need from you guys, if you could just smash a like button for me. That's all I need from you, okay? And I appreciate you for being here. If you want to be subscribed, you can certainly subscribe to the channel, okay? Before we get into this, let's just talk bigger picture, okay? When you're going through a pain moment like this, listen. This is the cost of doing business. You want to be a big boy. You want to get to the big money. There's no other way around it. Sometimes your stocks are going to crash. Sometimes the whole market's going to crash. Big deal. It's the cost of doing business. There's no way you can climb to the big ranks without going through this. No one's ever done it before. It can't be done, right? I don't care who you look at, the best investors of all time, they've all had to go through stock market crashes, and they've all had to go through markets where their stocks are crashing and the market's actually not crashing, right? They've all had to sell for losses, sometimes millions, sometimes hundreds of millions, sometimes billions of dollars of losses, right? It's the cost of doing business. And if you can't get over, there's really 2 pain things you have to go through in the stock market. One is all the research work, right? Listen to conference calls, doing all your study, right? That's a pain point that some people don't want to go through. And the second pain point you have to go through in the stock market is, guess what? Sometimes your stocks are going to crash, right? And you're going to get hammered and you're like, oh my gosh, I'm down this much, that much on this stock, that stock, right? And those are two pain things. Not everybody can tolerate that pain. Not everybody can tolerate it, right? You got to choose what life you want to live, right? Where I went to high school, we were really good at football back in those days, right? And we had some great football coaches, and I played football all 4 years, starting freshman year all the way to senior year, right? And football was always interesting because everybody wanted to be a football player at my school, right? Because we had so much respect, right? All the girls wanted to get with us, and all the guys wanted to be us, right? So the beginning of every football season, a lot of kids would, try to join the football team, right? And then they would start going through those 3-hour practices out in 100+ degree heat in Phoenix, Arizona, right? And they were like, oh, hell with this, right? You got to go through those tackling drills, and it's just you putting your mind and body on the line every single day, and it's just like, they're like, oh, the hell with this, right? So those kids would, obviously drop out of the team after a few weeks, but they would always come to the games, and they always, what you would always hear is, man, I wish I should have played football. Like, oh, I wish I would have been you guys, right? And so you gotta either be the person in the stands, or you're gonna be the person on the field. It's up to you, right? You can choose what you want to do. You want to be on the field, or you want to be up in the stands. And I could tell you, the only way you get to the big money, you better be on that field. So you have to choose which life you want to live, right? I obviously chose the life I live, and I lay in my bed now 17 years later, right? And in that process, you go through a lot of crashes. A lot of times your stocks are going to crash. A lot of times you're going to have to sell stocks at a loss. Cost of doing business. It just is what it is, right? And so, do I feel any different today than I did yesterday? Nothing. If anything, I feel more charged up, actually, when we have drama. I'm almost like secretly wishing, AMD crashes after the bell today, too. I'm like, let's just get it on, man. Let's just go. Let's just full go, right? It's just, if anything, I get more charged up when there's drama out there in the market, right? Okay, so let's get rolling here. PayPal first up. So, PayPal. Where do I even want to start with this one? Let me start here. I saw the stock price move. What was the first thing I personally did, right? Like, what is somebody like myself? I wake up, I look at my stocks, I'm like, oh my gosh, PayPal's down 19%. What's the first thing I did? What did I do? Did I go to my Discord chat in the private stock group? No. Did I go see, did they beat or miss earnings? No. You know what I did? A little secret for you on what the big players do. Went straight to their investor relations page and went straight to their income statement. Because my thought is like, is this a disaster? Right? I don't want other people's opinions to clout my judgment in regards to this. Let me go look at the income statement before I look at anything else. And let me just see, is this really bad or is this not so bad? And what do I find in regards to PayPal? It's a very good income statement, actually. It's a B+ grade. Not quite an A grade. Growth wasn't quite good enough, and they had a couple categories that were a little higher than you would want, but still a B+ grade overall. Revenues were up 4%. Transaction expense was up 6.5%, so that was a bad spot for the company. However, transaction and credit loss was actually down 10%. That's good news. Customer support and operations down 1%, which is good when you're growing revenue, right? 4% doesn't seem like that big of a number, but keep in mind that's still a $300+ million. Was that $310 million more in revenue this quarter versus the same quarter last year? It's a pretty big number. So customer support and operations down 1% is good. Sales and marketing was up quite a bit for the company year over year. That was up 10%. But keep in mind, that's a pretty small line item, right? If you look at sales and marketing, that's not even 10%. What is that, like 7% or 8% of revenues? Right? Technology and development, that was up 4%, but that's, roughly in line with what revenue was up. G&A down 15% year over year was good news. Restructuring other, this was a bad item for the company. That was a 60% increase year over year. So, but that's usually more one-off stuff. So don't make big judgments based upon that. So total operating expenses was up 3.5% year over year, right? Versus revenues up 4%. That's a win. There's no other way to put it. Like, revenue is always going to be a much bigger item. And so if your revenue is up 4% and your total operating expenses up 3.5%, you won. Operating income up 5% year over year for the company to $1.5+ billion. They also had other income here of $116 million. Income before income taxes, $1.6 billion from $1.4 billion in the same quarter last year. Net income was $1.43 billion from $1.12 billion. That's a 28% increase year over year. And diluted EPS was $1.53 versus $1.11 in the same quarter last year. It's a 38% increase. Okay, so let's be very crystal clear about PayPal's numbers. Factually, those are good, solid numbers. Are they great? Is this Palantir? Absolutely not. This is not Palantir, okay? But are those good, solid numbers? Yes. At the end of the day, if you ran a business and your business has revenues increasing year over year, right? 4%, and your net income's going up at a much faster clip, and your earnings per share is going up at an even faster clip, you won. You won, right? Now, if you trade at dirt cheap valuation metrics, you extra won, right? Now, you might say, okay, so numbers are solid. Why is the stock selling off big then, right? It comes down to one major thing. And I didn't have this on my bingo card. And this is where I speak about sometimes things are going to happen in the stock market you never expect it, man. And something really big happened today. Listen. They basically canned Alex Chris. He's out. Didn't have that on my bingo card. I was not expecting that. Not expecting that. Whoa, Alex Chris gone? A lot of people don't like that. And so it's a tough position to be in. Because from one side, I look at PayPal and I'm like, what Alex Chris has been able to do in regards to the profitability of the company, the buyback, all those sorts of things, has been impressive. However, there's one thing he has not been able to do, certainly, that is not very impressive, and let me show you. Okay, so here's the problem with PayPal and, where Alex Chris is, let's just put it this way, where he has missed, right? If you look at trailing 12-month revenue growth for PayPal, 4%. 4%, right? Look at somebody like Visa on a trailing 12-month basis, 12%, right? That's where we run into the issue with PayPal and with Alex Chris is he has not been able to accelerate the revenue growth the way you would have liked or have expected, right? However, look at the valuation of the stock. It is insane. I mean, it was already a super cheap stock. Now you just crash the stock another 20%. It's like cheap on cheap, right? Now, if their profitability was eroding, right? Let's say their net income, their earnings per share was going down, then I would say, okay, PayPal at a 7 forward P, that doesn't mean it's cheap because look at their net income's going negative, their earnings per share. But factually, their earnings per share is increasing and net income is increasing. Now, you could maybe have an opinion that maybe that's going to be different, right? And maybe that's not going to be the case moving forward. And maybe, their net income is going to start going down. Their earnings per share is going to go down. And then if that happens, then you can make an argument that PayPal had a 7 forward P is not cheap, right? Because their profitability is literally going down. And so, but the moral of the story is here, as long as net income and earnings per share keep increasing, they don't even have to increase the way they've been increasing. As long as it keeps increasing, it's still a dirt cheap stock that's trading way too cheap and is a great buyout candidate, right? I mean, you're looking at PayPal now. I don't have PayPal's market cap pulled up right now, but PayPal's entire market capitalization of this company, my guess after today, I don't know, $40 billion or something like that. Like, it's got to be so dirt cheap, it's ridiculous. It's insane in regards to PayPal. This is a market cap in the 40s now in regards to and they got a massive cash load on the company as well and doing huge share buybacks. So when you think about it from that context, I think there should be a lot of companies looking at PayPal to buy them out. Why would you not? They're trading dirt cheap. Got a great income statement and balance sheet, just factually. That's not an opinion. It's just facts, right? You get PayPal, Venmo, you get the Braintree side of the business as well. Yeah, it's not the fastest revenue growth, but you can get a good payback on this in a fairly quick amount of time. Because what you could end up doing is you're going to be able to, let's say somebody like a bigger company bought PayPal, okay? What you'd be able to do is gut a lot of the expenses off of PayPal, essentially, right? Because there'd be a lot of duplicated rules. Like if a parent company bought it, you wouldn't need nearly as many employees and things like that because you already have people to handle it, upper management, things like that, right? And so the profitability of PayPal would even go up to a greater extent. So I think it makes a lot of sense for a lot of companies to look at PayPal as a buyout. Like, you might have to pay $60 or $70 billion, but keep in mind that it also has a lot of cash on the balance sheet as well. $60 to $70 billion for the whole company, I don't think that's like a crazy number. So if I were in a bigger company, I would seriously, that is anything in relation to somebody like a PayPal, I would seriously look at potentially buying them out. And they're still growing. It's not like revenues are, shrinking 4%. Then you say, okay, you're getting like this melting ice cube. Revenues are still going up for the company, right? And then earnings per share at even a faster clip. Now, as far as a new CEO, that's a big question, right? Like, are they going to be able to do a great job? I don't know. And so PayPal, I don't think it's a sell today, right? And I know obviously a lot of people selling PayPal stock today, right? It's down 20%. You don't go down 20% unless a lot of people are selling. I know a lot of people are selling today. I actually don't think it's a sell, right? We could debate that maybe it's not a buy, right? Me personally, what did I do today? I bought some PayPal shares. I held my nose and I bought some, okay? With that being said, did I load the boat? No, I didn't, because I'm even uncertain about this new CEO and kind of, what their strategy is going to be. Are they actually going to be able to increase revenues the way Alex Chriss was not able to, right? I don't know, man. I have a lot of questions about that. A lot of questions. Alex Chriss came in very confident, going to shock the world. I don't think the thing is with Alex Chriss, did he shock the world? Absolutely not, right? He laid an egg when it came to that. But I also don't think he did a bad job. When I look at his overall tenure at PayPal, I don't think he did a bad job, but he did not shock the world, right? Shocking the world would have been getting back to double-digit revenue growth. If he did that, that would have been shocking the world and like, whoa, like that's insane. Like he did it, right? He was not able to accomplish that, but he did a good job. I mean, like, look at the numbers. Like, look, B plus great income statement. That's a good job. He did a good job. Bought back tons of shares and, ran the company pretty lean, more profitable than it's ever been in its history. But Pain Pal, man. Pain Pal. That's what we call it. Okay, FUBO next up here. So in regards to FUBO, fiscal 2026 marks a step change in our trajectory. Having successfully closed a Hulu plus live TV combination, we have established a strong foundation and a scaled platform with 6.2 million subscribers. While this enhances FUBO's position in pay TV, our ambition is to scale further in rival industry incumbents. Today, we accelerate that pursuit with our announcement of plans for a new reseller of marketing arrangement with ESPN. Per ComScore, ESPN reached more than 4 out of every 5 U.S. adults in November 2025, representing hundreds of millions of unique fans across ESPN's digital and other platforms. We are working with ESPN to include FUBO Sports in ESPN's commerce flow, which we expect to lower our cost of acquisition and position FUBO as a premier destination for fans. This arrangement is subject to negotiation of definitive agreements. 2026 is a year of scaling with purpose. With the integration well underway, we are focused on expanding our reach, driving higher yields through our combined ad tech, and enforcing portfolio discipline to maximize margins. Simultaneously, we are accelerating our product roadmap to deliver the next generation of consumer-centric innovations, specifically in product, technology, and packaging that differentiate our offering. We look forward to keeping you updated as we unlock full potential. So as far as numbers went here, for FUBO, actually pretty decent, okay? Look at this. Total revenue, $1.54 billion from $1.1 billion. Operating loss was $20 million versus $38 million loss in the same quarter last year. That's a huge improvement. Right, for the company year over year. As far as net loss for the company, 19 million versus 38 million. So basically cut that in half. Net loss attributable to common shareholders of 5.9 mil from 38 mil, right? So now, as far as this net loss attributable to non-controlling interest, that's really the 70%. That's from Disney now at this point in time, right? Because Disney has a massive controlling interest, obviously, in FuboTV now at this point in time, right? So with FuboTV, I think people are upset about like the lack of guidance and maybe clarity on things. This is, what I've always talked about in regards to FuboTV is this is a year where by the end of the year, you're going to have a lot of clarity on FuboTV. Like, what are realistic growth rates? What's profitability looking like? Where exactly is a business model going, right? And I've talked about, like, right now it's cloudy, it's murky, it's like hard to see, right? But I think by the end of this year, you'll have a lot of clarity in regards to exactly what's going on with FuboTV. Now, additionally, they're also doing a reverse stock split here. We'll see what it comes in at. Might be like a 10-to-1 or something like that. We'll see what happens with that reverse stock split. So basically, how it's going to work is, right now FuboTV's, I don't know, $1.70. So let's say, they increase the share price to $11.70, right? So if you had 10 shares before, now you'll have 1 share, right? So there's no difference in terms of your amount of money, just like a regular stock split is just like all ends up being the same. It's just you change the share price. So we'll see what they end up doing in regards to that. That's honestly irrelevant. Like, maybe it moves the stock price up or down short term. Maybe that's part of the reason it's down today, but it's really honestly meaningless. By the way, I wore my red 1000X hat since there's so much damage out there today. So FuboTV, listen, did I buy some right now? Yeah, I did. I bought some FuboTV here today. I think in regards to FuboTV, it's an attractive risk reward. I just have to keep position sizing small. And that's the thing. Like, what did I put in FuboTV today? I put like $5,000 or something like that, right? Which, for me is not, obviously a large amount of money. But I did buy it. And so I look at it as, it's one of those stocks, it's that huge epic opportunity to, potentially 10x or 20x or 30x, right? So, but it's also one of those that comes with a lot of risk, as we know, right? But the way I kind of look at a stock like that is, if I'm right, and let's say it is that 10x type opportunity, right? A small amount of money goes a long way. I don't need to risk the farm because maybe FuboTV doesn't work out, right? Maybe they do this reverse stock split and then it falls another 90%. You never know. But I think things are looking more promising than ever regarding FuboTV. There was a time period when this stock was very scary and very ugly. The balance sheet's loaded now with cash. I don't know if you guys have seen that. I mean, it's incredible, the change in regards to that situation. They were talking about it. Where is it at here? If we look, let's pull it up. Look at this. Cash and cash equivalents here. $452 million. That's a big number. That's a big number. $452 million. They're loaded. They're loaded with money now at this point in time. So I look at it and I'm like, I think FuboTV is the least risky it's been in its history. If you look at the stock price, it's pretty much the lowest it's ever been in its history, or around the lowest it's ever been in its history. But when I look at the business, what I see is the least risky I've ever seen FuboTV in the company's entire public history. Like, they're locked in now with Disney, who has obviously just massive ownership in so many channels. And Disney has a huge vested interest in FuboTV being successful because they own like 70%-ish of the company, right? Huge vested interest. And Disney obviously controls so much of sports content, which is FuboTV's holy grail. And they're loaded with cash. And their profitability metrics have increased in an unbelievable way. I don't know. I just see what I see. Okay, next up here, let's talk some tech. Then we'll talk Palantir. And then we're going to talk, don't go bottom fishing for stocks. That should be interesting.
Guys, Senior Managing Director, Julian, good to have you.
Good to be here.
You think the market's going to actually thrive and it's going to be driven by basically the tech trade. You're not worried about sort of the hiccups that we've seen recently in the AI trade?
Well, shoot. I got to talk about my SaaS stocks. Oh, boy. Okay. SaaS stocks like ServiceNow, Adobe, CRM, all these sorts of stocks. Okay. shoot, forgot those stocks are crashing too. It's just like on a day like today, when you see 20% downward moves, you see like 10% downward moves, and it seems like not that much, right? Okay, in regards to those stocks, doesn't surprise me at all. As I spoke about many times with these sort of stocks, like I'm trying to pick up as many shares as I possibly can over the next 2 months, right? And you've heard me talk about that on the main channel, this channel, in regards to ServiceNow, in regards to CRM, Adobe. I'm just buying relentlessly right now, these stocks, right? And plan to until the end of the quarter, so basically 2 months. If the stocks remain low, which they probably will, because even when they start to bounce, like they're still going to be very discounted, right? My plan is to continue to buy those stocks for this entire year, right? I do not believe, my personal belief, in what I see in the numbers, there's no signs that these companies have been disrupted by AI or they're going to be disrupted by AI, right? And AI could be a good opportunity for these companies. And so no one wants to own these stocks right now. Basically, Wall Street's throwing them out. They're unownable. Clearly, look at the stock price moves in regards to all these stocks. And this is without even a stock market crash. Imagine if the market was down 20 or 30% right now. Imagine where these stocks would be. And so that's fine. Their trash is my treasure. And we'll see who's right, right? That's the fun in this game. We'll see who's right. I think I'll be right. These are some of the best business models in the world that they're just throwing out. CRM, Adobe, now. Like literally, these are some of the best business models in the world, and they're just throwing them out. Like they're irrelevant. Okay, we'll see. We'll see.
I will go back to December and the concerns about debt financing for the AI build-out started to surface. And unequivocally, the mood around tech is as cautious as we've seen it since any time since ChatGPT was introduced to the world. And, frankly, I never expected to be a contrarian in our view that we think tech will continue to lead the bull market higher. I love being a contrarian here. And you look at a day like today, there were lots of news items.
Is he lying? Absolutely not. Julian Emanuel's he's telling the truth. The mood is as cautious as certainly we've seen since probably 2022 regarding these tech stocks. Look at the moves. Look at Intuit. Intuit's down another 11% today. You could be flipping my flapjacks. I might start buying Intuit stock the way that stock's going down. This is insane. Check out. Wow. Intuit. The move on that stock. Look at Intuit. It's down 31% in the past 1 month. 31. This is another one of the best business models in the world. And it's down 30. Like they do not want any piece of any of these stocks. Snowflake's down another 10% today. IBM's down huge. There's like a stock market crash going on in a lot of these sorts of tech stocks, right? Incredible. Look at Oracle's now down to 154. Look at the move since it had that big blow off top after the OpenAI announcement. The stock's now down 55%. And once again, we're not in a stock market crash. The stock market's only, a couple percent off of all-time highs? Imagine if we are actually in a damaged market right now. They don't want to own anything. If they don't want to own a hardware-ish kind of plays like Oracle, but they also don't want to own SaaS-related plays. But also, this is the stupidest thing I've ever seen. This is so dumb. I'm just going to be honest with you guys. This is so dumb. Okay? Everybody's doubting OpenAI and their success, their ability to raise capital, all those things, right? Basically doubting AI in general, right? Because if OpenAI was really like that much of a game-changing company, then no one would be doubting like if they could raise capital, right? But everybody's doubting that. That's like the big doubt out there. And so if you have anything associated with OpenAI, they're like, oh, we don't want to own you right now, right? But simultaneously, so basically they're doubting the whole AI revolution. At the same exact time, they're throwing out all the SaaS-related companies that have the best business models in the world because they might get disrupted by AI. Make it make sense. Make it make sense. Come on. Like you can't, it's one or the other. One or the other. Either AI is the biggest game changer in history and like Nvidia and AMD are going to 1,000, right? And, MU is going to 1,000 and like OpenAI is going to become a $3, $4, $5 trillion market cap. And, Or it's like maybe things have gotten overblown, and guess what? Now is going to make fortunes of money over the next few years because they're not going to be disrupted. And the same thing with Salesforce, and the same thing with Adobe. Go through the whole list.
A lot of them not so great, certainly challenging, particularly against the backdrop of gold and silver tanking as well once more. And the market traded beautifully, which you would never have said at 1 a.m. when I was.
Oh my gosh, look at Netflix is down to 80. Look at. No. No. No way. No way. Look at Netflix. This is a wild one. On a 3-month, Netflix is down 26.5%. Whoa. How much off all-time highs are we at now? Netflix is now down. It's in a 40% drawdown from all-time highs it reached last summer. Wow. Wow. Jeez. That's wild. That maybe Netflix going to just get disrupted by AI also. Like, you know, and like everybody's just gonna watch like AI content, and Netflix gonna become irrelevant, even though they could make AI content. But let's not think about that. Forward P20 down to 24. Netflix now? No way. No way. Let's run some projections on Netflix. I mean, gosh, this is tough. This is tough because you're just getting into a market now where so many stocks are starting to be down big that it's just like, gosh, you're starting to, and this is a problem. When you start having so many stocks damaged out there, you start having so many opportunities. You're like, dude, I want to put money in this stock. I want to put money in this. Like, honestly, if it wasn't for me buying a lot of ServiceNow stock right now and Adobe and Salesforce and those sorts of stocks, I mean, I'd be looking at something like Netflix. You know, let's do a bull case here on Netflix. Let's do a bull case at 12% revenue growth on average per year, right? And let's say net income increase a little bit higher. Let's say 300 basis point change there above revenue, so 15%. You know, we can say at those sorts of growth rates, a 25 to 30 P is extremely fair. So 30, 30, 30, 30, 30. Wow. That's kind of surprising regarding Netflix here. I would have expected the returns to actually be better. That's kind of surprising. Let's run a more modest projection here of 10% and 12%. And let's go like 23 to 28 on this guy. 28, 28, 28, 28, 28. And, that's strange. So basically, Netflix is in a situation where they really got to grow very, very strong. I would have expected the returns to be better for Netflix. It's a little surprising. Let me look up one thing here. They were supposed to have a big increase in profitability, so maybe those numbers could have been a little higher. But still, like, maybe I could have went with like a net income increase of 20% on average per year, something like that. But still, like, yeah, see, I probably went low with kind of my net income and EPS expectations because analysts are kind of in the 20s, and I ran like at a 15% number. So if we ran, let's run like a 20% number on average per year, and then see what we get for Netflix here. I hope you guys enjoy running numbers. You might not, okay? So let's do the 12% still, but let's say 20% on average bottom line, okay? And then let's still keep it at a 25 to 30 PE here. Oops. And let's see what we get. Let's see how that changes the equation. My guess is 15% maybe. Yeah, well, almost a 15%. midpoint here. We can call it like 15.5%, right? 13 to 18%. Still not that great. It's still a money. Is Netflix a moneymaker for if you buy Netflix today? Is it a moneymaker likely over the next 3 to 5 years? Yes, but it's actually not the best opportunity out there. Certainly, in my opinion, right? There's just much better opportunities. So that's intriguing. Okay, let's get into Palantir.
Revenue seen between $7.18 billion and $7.2 billion. The estimate going in had been for $6.27 billion. So quite a beat there when it comes to the expectations. Brent, you can see that reflected in the shares. What do you make of what we learned at the top of the hour?
There's still a crush in the numbers, and I think world of AI that is getting crushed in software, my coverage universe is going straight south. Palantir's fundamentals are doing extremely well. Cash flow growth well above forecasts. The commercial business doing very well. Obviously, if you look at the government business, you can see what's going on in our world and the place they're going to be. So I think the fundamentals are screening high. You obviously have to pay a price, which is the single most expensive stock by a factor of 2. So, if we were in a better tape, stock would be up a lot more. We're dealing with a stock that's still 45 times revenue, and it's still one of the most expensive names. And we've had a whole group that's under massive duress because of what is AI going to do. So they're fundamentally in a great spot. Obviously, valuation is why the stock is sold off from over $200 to mid 150s, right, is because everyone's checking the valuation and realizing it doesn't really make a lot of sense.
Well, valuation being one thing, let's talk a little bit more about fundamentals, because we know that Palantir makes the lion's share of its revenue from its government contracts. We know that there has been a push to maybe diversify.
So the interesting thing here regarding Palantir is Palantir's growth rates are so far exceeding what anybody anticipated, bulls, bears, anybody, right? That the analysts are going to have to keep bringing up their numbers. So look at current year expected revenue growth. They're kind of at 40%. Dude, you got to bring up that number. You got to get more in at least a 50% range, if not 60% range. Next year revenue growth, you got to bring that number up. So the analysts are still off sides regarding Palantir, and that's kind of a crazy thing to think, but they're going to have to bring up all their numbers. And the company's way more profitable than anybody anticipated. The rule of 40 is now at 127? So the craziest thing about Palantir is, it looks insane. Look at the trailing 12-month P, 366. But look at how fast they're eating up the PE ratios because they're increasing profitability so rapidly. Then they get it down to 157. Obviously, 157 is still insane compared to the market in general. Trades at a forward P 20 or so, right? But the growth rates of Palantir are at least 10x, if not 12 or 14x, what an average stock trades at. At a 157 PE, if the market's trading at 20, right, you're at like a 7x. We can call it, or 8x. Let's call it an 8x, right? So, but the question is, can Palantir keep growing at these sorts of growth rates, or are growth rates about to go down to 40%, 30%, 20%, those sorts of things? And that's where the great debate comes in.
Divide that out to commercial contracts as well. What are you seeing there in terms of progress?
Yeah, the commercial business, they're guiding growth of over 115%. So, there are not too many companies putting up those numbers, right? We talk about a 10 to...
That makes me so happy. You know why? My whole thesis for investing in Palantir years ago was all around the commercial business. The government business to me has never been the thing. I'm like, okay, they sign a military contract, whatever. I don't care. It's cool. That's their business. The commercial side is always the side of the business that for me has been the huge opportunity. I'm like, the government business is it's nothing compared to, at least in my opinion, what the commercial business, I always imagined Palantir in the 2030s as having this commercial business so large that it dwarfs anything in the government business, and that the government business almost becomes like a distraction for them, right? Honestly, I think that could be the way the story goes. Where, if we fast forward to the 2030s, the government business will be and honestly, the government business, the other thing about the government business for Palantir is, and I don't know if they could really ever split it off, even though I wouldn't mind, the government business is what gives Palantir bad rep, right? That people don't like the surveillance related stuff that Palantir is involved with, right? And the data tracking, all that stuff. The government business is 100% of what gives Palantir like a bad name, right? But it also does a lot for branding, because it's like, okay, if the U.S. military, if the U.S. Army, if, all these advanced agencies and the government, if they feel like Palantir is such a great product that they've got to use it, why shouldn't you as a Fortune 500 company? So it's kind of like, it's good and it's bad, right? The bad is you get a lot of bad publicity. I mean, they got like the $30 million contract, if I recall, with ICE, and we know how much hate ICE is getting right now. It's just like all that's just a big cloud over the company. But shoot, man, it means that they got a great product. Like, the government's not just going to use Palantir to just use Palantir.
15% growth rate for a lot of the large cap names, and they're pushing 115. So, it's not even really comparable.
No.
And I think this goes back to every boardroom globally is thinking about AI. They're thinking about, how do I implement this, whether I'm healthcare or I'm a retail company, whatever your business you're in, you're thinking about this first and foremost in the boardroom. And they've done a great job. You have commercial companies now highlighting them on earnings calls, saying that the product is taking costs out of the supply chain. They're putting people into hospitals faster and getting the right healthcare. So, they're solving problems, as they say, that no one else can solve. And I think they really solved the puzzle, which was the Tesla problem at the beginning. The car can only shuttle around doctors, lawyers, and people that have 30 years of experience, because they're so expensive. And what they figured out is how to bring the software more to the mass market, to more commercial companies, and they have done a really good job of solving this. And so putting up 115% growth is pretty incredible, and I think it shows they've overcome the problem, which was, where for a very few select people, they're now showing with these numbers that they can address a bigger portion of the commercial market, which is exceptional. And I'd say that the companies that we talk to in our industry that love data are all acknowledging how well Palantir is doing. And so if you talk to Oracle, you talk to many others, even Mark Benioff is talking about, the model of forward deployed engineers. That tells you a lot about, the fundamentals and how they run and the success they're having. And so I think that's when others in the industry are trying to emulate you, you're doing something right. When you put up 115% commercial growth, you're doing something right.
Yeah, no doubt about it. I am curious though, Brent, if you think this is a company that can actually.
So one thing I'll caution Palantir investors on, because I did see this posted on X and different places yesterday. Even in the private stock group, some folks were talking about this, right? And I think this frame of thought is not the best frame of thought regarding Palantir. It's very important. Okay, listen. Some people were talking about Palantir only has 1,000 customers, right? Or a small amount of customers, roughly around 1,000, right? And they were talking about Salesforce has 100,000 plus customers, or this company has, 8,000 customers and things like that, right? You got to understand, Palantir, their business model is geared toward big ticket customers, people that can spend millions of dollars a year on Palantir, right? Or tens of millions of dollars a year on Palantir's products, or $100 million plus a year. Who can afford to spend millions of dollars a year, or tens of millions or whatever, right, on Palantir's offerings? Who can do that? Very few companies. Only the big dogs, the biggest, the big, right? So you look at something like a Salesforce. I'm a Salesforce customer with my small businesses, right? I can't afford Palantir's products, so I can never be a Palantir customer unless 1000X becomes some massive business that is bringing in hundreds of millions of dollars a year. Then I could use Palantir, I guess. But Salesforce can have a customer like me that runs small businesses, right? And if you're a small business owner out there, you might use one of Salesforce offerings, if not multiple Salesforce offerings. So it's a very different, Salesforce can be you could be a small business and use at least one of Salesforce offerings, if not multiple of them, right? You could be a mid-sized business, or you could be a gigantic corporation, use Salesforce in their different offerings, right? They got a lot of different products at that company. somebody like a Palantir, like, no, if you're a mid-sized business even, you're probably not using Palantir either. You gotta likely be a company doing hundreds of millions, if not billions of dollars of revenue a year. And you gotta be in a situation where you likely have thousands of employees. If you got 20 employees, you're probably not using Palantir, okay? It's just, no, it's not realistic, right? So that's the one thing I want to caution folks on is like customer count and people thinking like, oh, well, Palantir could be as huge as Salesforce. They have to fundamentally change their business model and product pricing and all those sorts of things. And you can't really do that because let's say Palantir is like, oh, we're going to give away our capabilities to small businesses for 10% of the price. You think they're going to do that? Of course not, because then their big customers are going to say, wait a minute, you're giving, the small competitor of ours, a 90% discount versus what you charge us. Like, obviously that's going to cause huge problems. So, Palantir is kind of really stuck at the high end, which is a great place to be, but don't expect them to ever have 100,000 plus customers. Like, it's possible, but it's not very realistic. It would take a full fundamental change of the business model, pricing, and all those sorts of things.
To grow into that valuation a little bit. I mean, we know on the government side, obviously, the ties to the current administration have helped a lot. It's good and encouraging to see them expanding a little bit more on the commercial side. But again, I know for a lot of investors, fundamentals don't seem to matter anymore. But when I look at these multiples, I just think, when did they grow into that?
Yeah, I mean, that's the pushback. I mean, again, I think we try to rate it in two different parts of our rating. It's a buy fundamentally. It's a strong sell if you had a strong sell on the multiple, because if you look at the next tier down, you have companies like CrowdStrike and some really good companies that are trading, sub 20 times revenue, and this is still 45 times revenue. And so,
in all due respect, what's CrowdStrike revenue growth compared to Palantir?
$200 plus. We were just like, this doesn't make any sense on a valuation basis. Yeah. And so, you kind of have to basically say, what's the available TAM? Can they grow into that? Can they sustain these rates? Can they sustain the cash flow? And what they're proving is they can do a lot of these things. It's just that's going to take forever for the multiple to come in. And so we saw this with Snowflake. We saw this with many other names we cover. It can just take a long time to grow in. So what we've said is like, you can buy Meta at mid 20 times earnings, but you got to pay 50 times revenue for Palantir. And I'd much rather buy Meta, and Meta's stock's up and Palantir stock is down for the year. So I think our trade-off is like everything has a price, and we look at both fundamentals and valuation. The valuation has just been impossible for many of the long onlys that we cover on the institutional community to stomach. And
listen, I know a man like that's probably going to get hate, right? Like, I'm sure he's probably going to get hate, right? Can we go down? So I bought Palantir below $10. I learned listening to these types of analysts won't help you make money. Never made any sense for analysts day one. It's only a matter of time when it's 1 trillion. Oh no, not this guy. So, obviously he's getting a lot of hate. Listen, man, as somebody that's been in the market 17 years, somebody that's a Palantir shareholder, right? And that's somebody that made insane money on Palantir and took so many profits over the past year in the stock. It's ridiculous, right? I think his take is very balanced. He's telling you the fundamentals of the company are as good as it gets, right? He's talking about the great growth rates and those things. He's talking about it's going to take a long time to grow into that. And as a mature investor, you got to be able to take a balanced take like that and be like, that's fair. Because it is fair. It's just not, that's not like, if you know anything about running valuations on stocks, you can look at that and be like, yeah, if they keep up these sorts of growth rates or anything around here, then you can say valuation might be cheap. Like, let's say they keep growing a 70, 60% type revenue growth and having that earnings per share, fly. Then you could say, well, actually you could make a case that maybe this stock's a little cheap right now and it's going to be a great returner over the next several years, right? And be able to continue to command 100 plus forward P. You can make a strong case for that, right? However, if those growth rates start to decelerate and we go down to 60% revenue growth, 50, 40, 30, you'll run into big valuation problems with this stock, right? And so which would then leave it to be stuck. Like I've talked about, Palantir, I kept talking about that last year, Palantir just being stuck between 125 and kind of the 200-ish range, right? People are feeling really bullish about Palantir, pushes up to that 200 range. People are feeling really bearish, goes down to 125. And I talked about it just kind of being stuck for years in that place, right? So far, it's looking true, but we'll see. Maybe it doesn't. The big thing is if they could sustain these sorts of growth rates, shoot, there's potential to stock go 250, 300, 350, right? But I have a lot of doubts about that, right? These numbers have been insane, and they're going to have to comp these numbers that they're going to put up in 26. They're going to have to comp these in 27. And dude, that's going to be brutal to comp these numbers in 27, right? Because you got to keep showing like this insane revenue growth off of a much bigger base. Difficult. Don't go bottom fishing for stocks this hard.
So what do you do in the meantime during this financial eternity where suddenly there's a question about whether Main Street gets some of the stimulus, and frankly, Wall Street is struggling with questions around artificial intelligence?
Right. So not to be too wonky, but one of the things we say, we want you to go up in quality, so higher quality companies, good balance sheets, good stewards of capital. In addition to that, we don't think it's the time to go bottom fishing, right? The chart can't look bad. The chart has to look good. Because a lot.
By the way, I'll say this regarding, because AMD earnings will come out. I'm sure I'll cover those tonight. This is actually a great situation for AMD to go into the earnings on a big down day like today. The last thing you'd want is, let's say AMD comes out, reports great numbers, great guidance, and tomorrow's a huge down day for the market, right? Like today was. That's a tough setup. So if you're bullish on AMD, it's actually better that today's a big down day, right? Now, if AMD numbers are good, it doesn't matter, the stock's still going down. But let's say they come out and blow out revenue expectations, earnings per share expectations, and guidance, and the conference calls a banger. The best situation is you had the big red day today, because then tomorrow AMD can fly, right? And then catch a lot of momentum, catch a lot of attention. Everybody's and their grandma's talking about AMD. So, yeah, I'll say the setup for AMD's good, but they still got to come in and kill it. If they come in and kill it, this setup is actually literally perfection for AMD. And you can see that stock go $299. Imagine AMD, $299 a share.
These companies with positive price momentum, right? They do have better fundamentals. So we want to marry higher quality companies with companies that the market's already rewarding.
Person's flying on their scooter.
No matter what sector you're looking at.
Is big tech still high quality at these valuations?
I think so. And I think one of the really interesting things is yesterday Oracle had a bond issuance. I think they had a convert issuance. That went quite well. Right? There's been a lot of concern about hyperscaler funding. And I think that put a lot of concerns, a lot of fears to rest.
Are you hopeful for the numbers we get from Alphabet and Amazon that this just continues?
I think the numbers in earnings season have been pretty good. The one thing I'm not seeing, and you still have a lot of idiosyncratic risk, right? But the one thing I'm not seeing is not seeing this acceleration, right? And if you need an acceleration in the economy, you need an acceleration in earnings to really go down to that secondary and tertiary bucket.
One thing we talked about is how much the tech trade has just changed.
Yeah.
Hardware versus software within Mag 7 as well. I'm not sure we can even talk about Mag 7 as a group of stocks.
No.
It just looks so different from Meta to Microsoft, and Apple has an O place in that group.
I don't know if it has no place, but you're right. The phrase that
I'm sorry, I got distracted. I got the windows open here in this front room, and this kid is riding an electric scooter around. When I say kid, I'm talking young teenager, but I don't know if it's a he or her, actually. It's hard to tell. But they're trying to do jumps on this electric scooter. I don't think you can really do jumps on an electric scooter. I think they're too heavy, but I don't know. Anyways.
And the phrase a lot of people use coming into this year is it's a stock pickers market. Every year, it's always a stock pickers market. I don't understand that phrase.
Stock picker market.
I think it is applicable here. You do have, because idiosyncratic risk is getting bigger, you're later in the cycle, because the economy is not accelerating, because earnings are not accelerating, you really need a good idiosyncratic or stock-specific story.
Can I just pick up on that phrase, later in the cycle?
Yeah.
Late cycle or later in the cycle?
I think it's later in the cycle. So credit spreads, and you probably have seen this, hit a low we haven't seen since Acid Wash jeans were in favor, right? Since 1997. The amount of issuance that we're seeing is really rather significant.
There's such a big debate on if we're late cycle. I hear people time and time again, but this isn't new. I feel like this has been for the last couple of years. People talking about we're late cycle, we're later cycle, right? These sorts of things. I get that. And you can make a strong case that we're late cycle, later cycle, right? Bad things in the economy are coming or something like that. But listen, I can make a very strong case that almost no one makes right now that we're early cycle, right? And so I think you shouldn't just assume we're late cycle and like the crash is coming or something like that. Like you could make a strong argument that we're early cycle. How? We basically went through a massive recession that, I would call significant, but no one looked at because people still had jobs, right? It wasn't a jobless recession like we had in the great financial crisis where you had unemployment rate go to 10%, or so, right? This was a recession where people kept their jobs but got absolutely obliterated by inflation. And we all know that, right? And so people's spending power got wrecked, right? And things started to kind of get better, I would say, over the past year and a half or so regarding, obviously inflation rates coming down dramatically and then people's spending ability going up, right? And then interest rates starting to come down, although, hopefully they come down a lot further. But I mean, you could look at something like, let's say, for instance, housing activity, right? Housing activity is among the worst in modern times. Like, it's been among the worst in modern times for a while, right? That's something you usually only see when? You usually only see something like that when you're going through it, right? And you're in bad times. And so there's a strong argument to be made if housing picks up over the next few years, you're in an early stage of an economic expansion cycle, right? Just something to keep in mind if, let's say, taxes favor people as well, right? And they're not getting taxed quite as much and the big, beautiful bill really comes through and helps people out some. There you go again, right? You can make an argument that we're early cycle, especially if inflation remains low. Let's say CPI remains under 3%. I mean, everybody talks about we're late cycle, we're later cycle, and I get it. Like, you can make a strong argument, but you got to be able to understand there's an argument to be made that we're early cycle.
The things you see later in the cycle, right? Do I think the cycle will continue? I do think the cycle will continue because I do think there's a lot of accommodation in the system, and I don't think the monetary policy accommodation is done.
So what kind of returns are you expecting this year? We've seen some projections for 7,800, 8,000, this idea that you can have AI continue to fuel this, even amid some of the wobbles that we've seen recently. Do you think that that's fair, or do you think that it's going to be more of a churn to year end?
I think so. Our expectations for high single digits is 74.50, right? Last year we were much more aggressive, and what we think is by the end of the year you're going to start looking to 27, and now you're going to start looking at a situation where it's beginning to decelerate. That said, with so much accommodation on the table, and with the Trump administration pushing things in front of midterms, we could have a little bit of a melt up or a pop. Summertime, fall, I think.
So this is sort of the bipolar aspect of a lot of the conversations we have. Some people say because of the midterm elections, you're going to get a melt up. Other people say you could get a meltdown in certain names. I'm thinking in particular of artificial intelligence related energy types of projects, especially with the affordability crisis and how much you could crack down. There's been questions around the banks trade and what we've seen there. How do you pair these two ideas?
So what we're saying is, I think in the first half, right, you're going to have bouts of risk aversion. We've already seen a couple bouts of risk aversion, not excessive. That's going to continue. I think people are really coming into the year underappreciated the macro and some of the macro concerns. Underlying fundamentals are still good. We would buy any sort of 5% plus pullback. I think we do get some of that, right? Because expectations are so high. But at the end of the day, we think equities do go higher later in the year. And there is a possibility for a sharp pop higher sometime, maybe in the summertime, maybe in the fall.
Yeah, shake out all the retail investors. Shake them out first, and then up, and away we go, right? That's usually how it works. Everybody gets frustrated by the market. Stock market's a scam! And they sell out all their stocks after they got wrecked, and then right after that, that's when the market absolutely rockets higher. It was like 2022, right? People got wrecked in 2022 and left the market, sold stocks like Palantir at $6, $7, $8, $9, $10, right? Stocks, all these stocks, Meta went down to $88 from 300 something, right? And, it was just relentless selling, and people leave the market, and the rest is history, right? I mean, AMD in that crash went down to $50-something. Nvidia is up over 1,000% since those lows, right? And you had a lot of retail investors leave the market and say the market's a scam, and it's just when you get that sort of capitulation, that's usually when things reverse higher, and you just go to the moon, and then those people that weren't in just turn into perma bears, maybe, right? Okay. We're in earnings season. We got a lot going on. I'll probably cover I'll for sure cover AMD tonight. So expect likely another video coming. Busy times, ladies and gentlemen. Follow me on X for more updates. If you use X, that's always linked in the description area down there. Also link down there if you want to join my Patreon, see the stocks I'm buying and selling each week. Also down there is my private group. If you're looking to apply, join my private group and get access to all my course curriculums, get your game up to a much higher level than where you're at. All that good stuff. That's all in the description area of this video, okay? AMD with an absolute banger of a report, an A+ grade for AMD. Congratulations, AMD shareholders. Let's see what we're rewarded with those great earnings. It is an 8% drop. Oh boy, it's about to be expected in this market, right? I posted this on X 4 hours ago. It looks like about 120,000 people have gotten to see it so far. Netflix down 40% from highs. Intuit down 31% the past month. Salesforce down 24% the past month. Adobe down 17% the past month. ServiceNow down 26% the past month. Snowflake down 22% the past month. Shopify down 27%. Oracle down 55% from recent highs. PayPal, or shall we call it PayPal, down 28% the past month. Bitcoin down 30% the past 3 months. Oh, I got 3 more for you. Duolingo, little dingo, down 77% from 2025 highs. HIMS is down 63% from 2025 highs. Ethereum's down 52% from 2025 highs. MSTR, good old micro tragedy, is down 70% from 2025 highs. Coinbase down 57% from 2025 highs. Robinhood down 43% from 2025 highs. And this one, BMNR, the Bitmine one, down 83% from 2025 highs. Now, last time we have seen this sort of damage, where we're talking 30 to 80% drops in a lot of popular stocks, right? Last time we really witnessed damage like this, that was back in 2022. But you know what's really strange about this whole situation is the Nasdaq's down like 3% from all-time highs. Like 3% the Qs is down. This is nothing. And that's the craziest part. You have so much damage out there, and yet a 3% down move, like that's nothing, right? In 2022, for reference, Nasdaq was down like 37%, ladies and gentlemen. Oh, baby. Okay. In this video here today, 2 core subjects we're going to get into. One, we're talking AMD at the front of this video. My opinions, perspectives on AMD, those earnings, where the stock's headed from here, all that good stuff. Okay. I'll give you my price targets for the next several years in this video, the whole thing. Okay. Second, we're going to talk stocks. We're going to talk the market in general. I did $70,000 worth of buys today. I'm going to show you exactly what stocks I bought today in this video, okay? One thing and one thing only I need from you guys, if you could please just smash that little like button. You know that's what I do it for. I appreciate you for joining me, and I hope you appreciate me covering the market on down days as well, right? In time periods when the market's going crazy. That's when I always feel like I'm needed most out there in the market, when we got drama, and this ain't for your mama drama, okay? And all I ask for you guys is just smash the little like button. I appreciate y'all for doing that, okay? Let's get into AMD first off, okay? AMD, listen. The earnings were a banger. This is an A+ grade, okay? Revenue went to $10.2 billion from $7.6 billion in the same quarter last year. Cost of sales, they kept that in check, very nice. So gross profit exploded to $5.5 billion in the quarter from $3.8 billion. Look at gross margin. Gross margin 54% from 51% in the same quarter last year. So we got revenue going up, we got margins going up, we got profitability going up. Oh my gosh, okay? Research and development was up quite a bit for the company year over year, up about $600 million, but that should come as no surprise. They're obviously been working on their 500 series, which is more of a 2027 story, obviously, right? That's going to be huge for the company, and obviously working on a lot of other products and developments as well. And honestly, when you're bringing in $10 billion plus a quarter in revenue now, and that's going to scale out rapidly over the next few years, you can afford to spend $2.3 billion a quarter in R&D, right? Marketing, general, and administrative, that came in at about $1.2 billion from $781. So that was a pretty big uptick there. So total operating expenses was $3.8 billion from $3 billion the same quarter last year. Operating income, look at the operating income, folks. We're talking it pretty much doubled up. A double up on a year-over-year basis. Operating income over $1.7 billion from $871 million in the same quarter last year. Net income, $1.5 billion from $482 million. That's a triple up, ladies and gentlemen. Wow. What a banger for AMD. Diluted EPS, 99 cents versus 29 cents the same quarter last year. I mean, no one can say anything bad about that. The numbers are just a banger, okay? No. What about the game of Wall Street, right? Well, game of Wall Street is you got to beat analyst expectations, right? That's a huge component of it. You got to beat the guidance, what analysts are expecting. You got to beat the EPS. You got to beat the revenue. As far as the game of Wall Street, they aced it. They came in with $1.53 of EPS. $1.32 was expected. Huge beat there for AMD. Revenue came in at $10.27 billion from $9.67 billion. Very nice beat there. I mean, that's about a $500 million beat. Beautiful. For the first quarter, AMD said it expects $9.8 billion of revenue, plus or minus $300 million, right? So they could do $10.1 billion. They'll probably do better than $10.1 billion, right? Because what does AMD do? If you know anything about AMD, what does AMD do? What does Lisa Su do? They beat numbers. Right? They come in and beat numbers. Like, just look at the data. Like, look at the facts. They come in and smash numbers like consistently, right? Revenue and earnings per share. So if they say they're going to do $9.8 billion, just understand they're going to likely come in way above that number, okay? I would expect, my guess is, $10.3 to potentially $10.7 billion in the next quarter. Just wait. Let's see. I'm expecting $10.3 to $10.7 billion. Just wait on it, okay? We'll see. Some analysts, however, were expecting AMD to provide stronger guidance as customers continue to ramp. Dude, Lisa Su sandbags. Like, this is not, why do you think they come in and beat numbers every single quarter? Like, literally, look at the history. Like, the last time I remember Lisa Su missing on revenue and EPS, you got to go all the way back to 2022. She comes in and smashes it. And especially in regards to revenue. That's a real big thing that she always comes in and smashes, right? Now, additionally, this is very important, ladies and gentlemen, very important right here. The chip maker has recently announced big customers, including ChatGPT maker, OpenAI, and Oracle. Two companies, right now, no one wants to be associated with, right? It's just what it is, okay? AMD plans to ship a new integrated server-scale AI system called Helios later this year. AMD CEO Lisa Su said on the earnings call that the company was in active discussions for additional Helios and MI450 chip sales. Yeah, the 450s. What they're producing right now with the 350, it's the appetizer. And I've always told you guys, like the 350 series, it's the appetizer. The main course is a 450 series. That's when we talk about AMD's revenues explode, right? Like, we're getting the appetizer right now. It's delicious, but just wait till we get to that main course, right? The ramp is on schedule to start in the second half of the year in regards to MI450 and is doing great, Lisa Su says, right? So as expected there. No, there's also important things she said on the conference call. We've heard her talk in the past about the AI business scaling to tens of billions of dollars, but something I thought was interesting that I heard on that conference call. I listened to the conference call while I was in the spa with some Beats headphones on. I was locked in, baby, okay? And you know what I heard? She mentioned tens of billions of dollars in AI chip revenue in 2027. That's what I heard. And so that's exciting. That now it's not just like, oh, we're going to have tens of billions of dollars in AI revenue at some point in time. She put a number on it, right? A year on it. I'm like, ooh, okay. Which also doesn't come as a huge surprise given we know 450 is going to be insane in terms of demand for that, right? Now, additionally, Sue on the current earnings call said artificial intelligence boom is boosting sales of the company's CPUs as well, not just its GPUs. Server CPU demand remains strong, Sue said. Hyperscalers are expanding their infrastructure to meet growing demand for cloud services in AI, while enterprises are modernizing their data center to ensure they have the right compute required to enable new AI workflows. And that's something we've definitely heard from Jensen as well. like Jensen's also talked about, like, you know, and from my understanding, NVIDIA's tried to push a little harder into CPU because of this, actually, right? Which NVIDIA, you always thought is just GPU, right? AMD's client and gaming segment rose 37% year over year to $3.9 billion. The company said it was driven by demand for its Ryzen processors for laptops and PCs, which have gained market share versus Intel. Yeah, AMD's been smashing Intel for years. We know about that, right? The company's embedded segment grew slower, rising 3% on a year-over-year basis to $950 million. But, guys, something I think was very important at Lisa Su. When I listened to that conference call in regards to the embedded segment specifically, okay, I'm going to tell you the way I read it from how Lisa Su was talking about it on that earnings call, okay? In regards to the embedded segment, Lisa Su sounded very bullish in regards to 2026 and the embedded business, okay? That's the way she sounded to me, very bullish. And so I understand like the segment was, you know, very slow in the quarter, 3% growth, but I can just tell you from what I heard on that call, it sounds like much more bullish than, you know, obviously the short-term numbers are showing here based upon what I think, you know, they're going to be able to do in 2026, okay? So something to keep in mind there. Now, also their balance sheet, oh my gosh. Balance sheet, cash and cash equivalents is now $5.5 billion from 3.7. So that's like a $1.8 billion increase year over year, right? Short-term investments went from $1.3 billion to now it's over $5 billion. It's like a $3.7 billion increase there, right? And I posted this inside my private stock group. I said, if you think AMD has a good balance sheet now, just wait to see this baby in 12 to 24 months. You know how much money AMD is going to bring in? You're going to have a flood of money incoming over this next 12 to 24 months, right? And I think they're going to stack a lot of cash, right? I mean, could they do a buyout of somebody? It's potential, but I don't think. AMD has so much growth ahead in so many different segments. And keep in mind, the gaming segment could get back to nice growth in 2027. I believe Xbox is going to launch their next generation console, if I recall. Like, and obviously that's just a small component of the business, but AMD has so much growth in so many different areas over the next few years. I don't think they need to acquire any companies anytime soon, right? Maybe in the 2030s, but I don't think over the next several years, given what I understand about this business, right? And so they should just cash stack like crazy. So when we talk about a great balance sheet now, you haven't seen anything yet. Come take a look at this balance sheet a year from now. Come take a look at this balance sheet 2 years from now. You'll be in shock. Okay. Also, Lisa Su should be going on CNBC tomorrow as well, which should be interesting. We might get some information or things that, you know, let's say we didn't get in the conference call. Sometimes they could, you know, leak something like that. It is a busy day in the AMD chat. It's crazy, right? That's another reason you want to be part of my private stock group. That is linked in the description area. Also be the pinned comment down there. Listen, man, like this is one of the best times when we have earnings season and you're getting a chat with everybody, and like, because the stock market can be lonely and feel like you're on this little boat in the middle of the ocean with nobody around, right? And to be part of a group like this, like, you know, with a ton of AMD shareholders, it's beautiful. It's absolutely beautiful, right? You know, the ups, the downs, you know, when the stock's doing great, you get to celebrate with everybody and talk about all the great things. When the stock's going through trouble, you can be a shoulder to lean on and like have people, you know, to point out different things. It's beautiful, man. It's beautiful. So anyways, if you want to join a group of like-minded individuals and stop being on a boat in the middle of the ocean by yourself, you should join a private stock group, right? We all got the same mentality. We're all thinking long term. We're all focused on the fundamentals of these companies, right? It's a wonderful, wonderful thing. So anyways, that's pinned comment down there if you want to join that. Also access to all my course curriculums and all the other good stuff you get access to there, right? Now, let's talk about the stock price, okay? I think it's important to talk about the stock price, and then we'll get into my projections on where AMD is going over the next several years, okay? Listen, the stock price. I don't think AMD could have done anything that would have, like, the market is so negative right now. Unless AMD would have had to come in with shocking results. Like, it would have had a bit of shock and awe quarter. They would have to put out some guy that was just so crazy that everybody's like, oh my gosh. Like, let's think about like NVIDIA end of 2023 into the beginning of 2024 when they were putting up like shock and awe quarters, right? Or even think about like Palantir and some of their shock and awe. Like, it would have had to been that. Because this market is so negative right now. If the market wasn't so insanely negative on everything right now, I mean, this stock would easily be up 10% after hours instead of down 8%, right? But we're in that sort of market right now where it just seems like almost nothing can please investors right now, right? Nothing can please Wall Street. And that's where, as a little investor, you have to put up with what Wall Street wants to do short term, right? If they want to sell these stocks off, they're going to sell them off, right? A good sign was Palantir. Let's be honest. Palantir reported shockingly great results last night, right? I mean, I had to make up a whole new grade of grading an income statement for them. I had to grade them at an A++. I've never ever done that for another company, but the results were so shockingly great. I'm like, dude, I have to grade this at an A++. And what did the stock have to show for it today? A 6% up move. Big deal. A 6% up move is nothing for literally one of the greatest quarters in the history of any stock in that space. Come on, man. That's nothing. And keep in mind, it's not like Palantir went into those earnings at an all-time high and the stock was flying to the moon. No, Palantir went into those earnings down, 25, if not 30% from its all-time high. And still, they come in with an A++ quarter and you get a 6% move. That's the sort of market we're in right now, right? And when you're in that market, it just is what it is. Don't get frustrated by it. It's just, don't think AMD stock went down after hours. It might be down tomorrow, so it's a bad company now. The results, the guidance, everything tell you a much different story, right? A much, much different story. So you got to diverge between a short-term stock price move and what's going on with the fundamentals of a company, right? Now, what are my projections for AMD over this next several years? Where do I see the stock price going? Okay, so let me show you my base case and then we'll get into the bull case after that, okay? My base case, Lisa Su has talked about 35% CAGR revenue for the next 3 to 5 years she's talked about, right? Lisa Su is what? A sandbagger. We already spoke about this. It's just factual, right? How do you think she beats numbers every quarter? She sandbags. So if she's out there saying, we think we can do a 35% CAGR revenue in the next 3 to 5 years, guess what she's probably going to do? Better than that number. Right? But let's say just 35% over the next 4 years. So we'll take the midpoint because she's talking about over the next 3 to 5 years. We'll take the midpoint and talk about the next 4 years, okay? 35% revenue growth, that puts the company at about $113 billion of revenue come 2029. Net income, I think, is going to go up at a much more rapid clip because margins are expanding right now, right? And also the cost of doing business is not going to go up as fast as revenue. So net income, I have that going up 45% per year on average. Keep in mind, this case does not even assume they do a bunch of share buybacks over the coming years, which they could easily do, or they can flood the balance sheet with cash and then put that into interest-bearing products, right? Which can generate them, 4% on their money or high threes. So there's a lot of optionality in regards to that. So 45% net income growth. If you're growing at those sorts of growth rates, a 50 to 60p is very fair for the stock. In my base case, the stock goes to, we can call it high $600 range to $800 range over the next 4 years. That's a lot of upside. A lot of upside. And once again, this case, if I ran my advanced projections, I could factor in if they do share buybacks and things like that. We're not even factoring share buybacks in. And like I said, what are they going to do with all that money coming in? My guess is I'll probably end up eventually doing some share buybacks. Oh man, this lady's having trouble holding her dogs back. Holy smokes, okay? Okay, next up here, bull case. This is my bull case for AMD, okay? This is what I think they're actually going to do more realistically. Once again, I think Lisa Su's sandbagging. I think they're going to be more along the lines of 40% revenue growth on average the next 4 years, right? So, under this assumption, $131 billion of revenue they get to in 2029. 50% net income growth under the scenario, which gives them to $25 billion of net income come 2029. You're growing at those sorts of growth rates. 55 to 75 PE is very realistic if you're growing at top line that. That's actually a low number. But since they're a semiconductor company, we could assume people would be well, in the 2030s, they're not going to grow this fast anymore, blah, 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 right? So in this scenario, the stock goes to $850 to $1,150 a share. This is why, ladies and gentlemen, I am extremely confident AMD can go to 500 plus in the next 24 to 36 months. Okay, very confident that it can go to those sorts of... Now, does that mean I'm buying call options because I think it's going to 500 plus in the next 24? No, No, I'm not going to play that silliness. I already got $1 million plus invested in AMD. I'm not going to play the silliness of trying to hope it goes to certain prices by certain dates and all that stress and crap that goes along with that, right? And plus, it's a gamble. It might not happen. And, here's the thing. I have $1 million invested in AMD. Let's say AMD puts up these amazing numbers in the next several years and the stock doesn't move. Guess what I still have? $1 million plus in AMD shares. Guess what? If I bought $1 million plus of call options and the stock is still where it is at now, a few years from now, guess what happens? My $1 million plus goes to zero. Robert De Niro, last action hero. Come on, man. What are we talking about here? Like, that's why I'm not playing that silly game of trying to buy calls, because I'm extremely confident it's going to 500 plus, right? Now, how does the stock not go to $400, $500, $600 a share over the next few years? OpenAI, let's say they can't raise even remotely close to the capital they can raise, right? They're supposed to raise. Let's say Oracle can't as well. Let's say things go bad in manufacturing of these chips through TSMC, and some delays or problems there, which TSMC doesn't usually have an issue, but let's just say hypothetically that happened. Like, there's ways you can play the game where AMD doesn't go to $400, $500, or $600 or above over the next few years, right? There's always risk in regards to that, right? The AI thing isn't like become a great thing and blah, 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 right? I'm hedged for that because guess what? I'm buying tons of software related stocks right now, right? ServiceNow, Salesforce, Adobe, all these companies. If AI is not what it's all cracked up to be, those companies will go insane over the next 3 to 5 years. Like, we're talking those stocks will double or triple up. So I'm hedged, right? I think I'm going to get the best of both worlds. I think those companies will succeed and somebody like an AMD is going to succeed, right? But just understand it might not happen. And so I think the stock's going to be $500 plus over the next 2 to 3 years, but it might not happen. And I'm willing to take that risk, right? The chances I lose money in AMD, well, my cost basis is so low compared to where the stock is right now. The chances I lose money, for me to lose money on AMD, we'll probably have like a depression in the economy. I'm not kidding. I'm not kidding. For me to lose money in AMD with where my cost basis is at, like, we'd have to have like literally a depression in the economy. Like, it'd have to be that bad to lose money on AMD, right? For me to stagnate, man, they would have to just make so many mistakes. So many things would have to go wrong for the stock to not move over the next several years, right? And so the highest probability is the stock is a $400, $500, $600 stock a few years from now, maybe even up to $800 or $1,000 stock if things go great. Like, if things go great, right? Great. AI is everything it cracked up to be. AMDs are everything it cracked up to be. Lisa Su executes on a high level the next 3 or 4 years, right? Which she's known for phenomenal execution. I remember this company was a $2 chuck when she took it over, right? They were nearly bankrupt. And now we're talking about one of the most powerful companies in the world. Incredible what she's done. So my guess is Lisa Su's going to operate on a very high level. My guess is these companies that are in the AI space will continue to be very successful, and AMD is going to be very successful, and there's going to be a lot of money to be made here, right? So that's that. Okay, now let's talk about the market. Let's talk about other stocks. Let's talk about $70,000 I spent, what stocks I bought today, right? First of all, let me say this in regards to the market. There's a saying I absolutely love, and I always come back to this whenever the market gets shaky, and it's always darkest before the dawn, right? It's always darkest before the dawn. Might not be true, by the way, but we say that, okay? And I love that. I love that saying. And, basically it's just a fancy way of saying, like, usually your moment of most pain in the stock market is usually when things actually bottom, right? And the sun comes out and it's better days ahead. And I've been through many of those times over the years. Oh boy, have I been through many of those times. But what we're actually going through, my personal opinion, this isn't even that painful. Like, we're like down like 3% from all-time highs in the Qs. Like, this is nothing, in my personal opinion, right? However, if you're a newer investor in the market and you haven't been through big dog drops before, or you haven't made a bunch of money in the market, also for my reference, like, I think about all the insane money I've made over the last many, many years. If you just got in the market 3 months ago, 6 months ago, your timing's bad, man. But the good news is, the good news for you is, the next 30 to 40 years, you should make a fortune of money, okay? But, your timing was bad. If you were buying, I don't know, BMNR or whatever, and you're down, 60, 80% or whatever, or you bought Robinhood at all-time highs and you're down 40% now, and Coinbase and you're down 50% from all-time highs, or whatever, right? Hey, you might not have the best timing. But the moral of the story is better get in the market now, or better to get in the market even at all-time highs, right, than not get in the market at all. So that's something to keep in mind out there, right? But I can tell you, like, from somebody that's been in the market a long, long time, this is nothing. It's just nothing, man. Absolutely nothing. Now, if we think about like pain that I've gone through in the public account, right? Look at the public account here today, $3.8 million portfolio, right? I'll tell you about some pain that I went through. The end of 2018, pain. The end of 2018. So the end of 2018, keep in mind, I started the public account in 2018, right? And I'm starting to add positions, starting to buy stocks, and then the market just tanked at the end of 2018, right? And keep in mind, I was still relatively new on YouTube at that particular time. And I started up the private stock group in 2018 as well. And I started the public account to show everybody exactly how I build a portfolio, right? And guess what happens? Market starts just tanking at the end of 2018, right? Shortly after, like only months after I start the public account. And I lost, I tell this story sometimes. I lost like 40% of my private stock group members back then because I wasn't that well known. People are like, oh, he must not know what he's talking about, right? And so literally I lost like 40% of my private stock group members back then. And I was like, dang, man, like people really doubting me, like, but I was kind of relatively new on the scene. I hadn't had all these years of major success on YouTube and all the money made and all those sorts of things, right? And so people were really doubting me. And I was going through it, man. In regards to the portfolio, it sucked. It was no fun. But that was pain. That was pain. You want me to tell you about another time of pain public account went through? That first half of 2020. Oh, boy. Oh, my gosh. I mean, stocks were dropping 10, 15, 20% in a matter of hours. Like, it was incredible, right? And it was like day after day after day for a while. And we didn't know what was going to happen with the world. Like, they were talking about, I remember, this is kind of the end of March, if not beginning of April of 2020. Actually, it was probably mid to late March, this talk was. You know what they were talking about? I remember Bill Ackman going on TV sounding like he was crying. You know what they were talking about? They were talking about closing the global economy for 3 years. When I'm doing the math in my head, I'm like, dude, there's no companies are going to survive. You close the economy for 3 years? Like, everybody's going out of business. This is going to be way bigger than the Great Depression, right? You can't just close the global economy for 3 years. What? That's insane. But that was the talk at that particular time. And the public account went through it. It was pain. It was pain. It was pain. And I held through, and I'm so happy I held through that whole situation because I know people that sold out in that March of 2020, right? A lot of people sold out. That's how you got the market to have pretty much the fastest stock market crash in history. I think the S&P 500 fell like, oh gosh, how much did it fall? I think it fell 30+%, the fastest we've ever seen an S&P 500 fall in the history, from what I remember, right? The fastest crash ever. Insane. And then it was straight into a V-shaped recovery. Thank goodness I held through that. But that was scary. That was pain. And you want me to tell you about probably the most painful time of all of them, in my personal opinion? It was 2022. 2022 was the most painful market I ever went through in the market. Oh my gosh. Because I got killed two ways. One, I was not positioned properly, right? Now I'm like positioned kind of perfectly. Like, it doesn't matter. The market can go huge bull market. Great. I'm heavily invested. I'm in a lot of risk on stocks. That will do great. Market goes risk off. I got plenty of dividend stocks that will pay me out dividends. I could put that money into, positions at very cheap prices. I have a great hedge on in the market, right? That would obviously appreciate greatly if all of a sudden the Qs really start dropping rapidly. That might not happen, but if it does, that hedge is going to print, right? And then additionally, I have a ton of cash. So now I'm just like, whatever happens, happens. I can tell you going into 2022, I was not positioned properly. I was positioned for way too much of a risk on market because we were, it was that whole clown market in 2021 and whatnot, right? So I was not positioned properly and the stock market got obliterated, right? 37% down for the NASDAQ from the Q4 2021 peak to the Q4 2022 trough. It's one of the nastiest falls we've ever seen in the NASDAQ in a 11-month basis. It was insane. And then the damage that happened, Tesla stock, which was a major position for me at that particular time, Tesla stock fell like 70%. Meta stock fell like 70+%. Those were my two biggest positions. And both of them fell 70+%, peak to trough. My two biggest positions, plus my small cap stocks all sucked. Oh my gosh, it was awful. Sickening. Awful. That was real pain, ladies and gentlemen. That was real pain. Oh boy, was that brutal. Now, despite all that, the public counts $3.8 million today. Was it worth it in the end? I think it was. What did I buy here today? $70,000 worth of buys. What did I buy? Let me show you. Alrighty, so first off, Adobe, ADBE. I did about $13,600 buy of Adobe here today, 50 shares. Next up, Salesforce, CRM, about 100 shares of Salesforce, just under a $20,000 move there. FuBu, no one wants FuBu. I'll buy the last few shares of that one. Very small buy, obviously, for me. $5,400 buy, 3,000 shares of FuBu I bought here today, right? I spoke about these videos, these stocks, by the way, a lot of these stocks I'm talking about here on the reaction channel, so do keep that in mind. PayPal. I'm going to be honest with you guys. This was a hold my nose and buy. It was a hold my nose and buy situation in regards to PayPal. Listen, the numbers are very good out of PayPal. It was a B+ income statement, right? Balance sheet's good, cash flow's good. I can't say anything bad about the numbers. It is a hold the nose situation to buy, though, because we don't know what the direction of this company is right now. What is this new CEO going to do? It's unclear. It's murky. Both PayPal and FuBu are very murky right now, right? In FuBu, the numbers have gotten dramatically better, but it's still murky. And PayPal's very murky right now. So those are scary buys, but I gotta be honest with you guys, some of the best buys I've ever done is buying stocks where the fundamentals of the company were improving dramatically or were improving, let's just call it that, but it was cloudy. I mean, honestly, that was Tesla back in the day. Tesla's one of my biggest bangers of all time. Was at a 2,000+% gain from where I was buying that back in the day. Obviously, Palantir was a 2,000+% gainer. Man, when I was buying Palantir back in the day, the fundamentals of the company were getting better. The revenue was trending right? They were flipping over to profitability, but it was still murky and it was still scary. And the stock was like $6, $7, $8, $9 back then, right? So, I'm not saying PayPal's going to be Palantir or FuBu's going to be Palantir, but I'm just saying those are two stories where the financials are getting a lot better, just factually. It's not like an opinion, it's just factually. But they're murky stories, right? People are confused. What is the future of PayPal, and Venmo and their products and Braintree? And what's the future of FuBu? Now they got the Hulu Plus Live TV and the Disney tie-in and all that stuff, right? Reverse stock split. ServiceNow, 190 shares of ServiceNow I bought here today. It's almost a $21,000 move. I mean, the thing is, you can't debate on Adobe, Salesforce, and ServiceNow that those aren't some of the best business models in the world. Just factually, Adobe, Salesforce, and ServiceNow are some of the best business models in the world, trading at unbelievable discounts. I've got to step in and buy those stocks, right? I can understand not wanting to buy a PayPal because it's murky, right? Murky waters. We don't know what's down there. FuBu, same exact situation. I can understand people not wanting to buy those stocks, but stocks like ServiceNow, stocks like Adobe, stocks like Salesforce, maybe I'm missing it. I don't think I am. I think those are all double and triple up opportunities over the next, 3 to 5 years. Do I think they could go lower in the next 1 to 2 months? Sure. Heck, they could go lower for all the way till Q4 and maybe bottom in Q4 like we had in 2022. Who knows? I'll be buying the whole dang way. And guess what? I'm not going to stop buying when they start going up. I'm going to keep buying because they're at such insane discounts now at this point in time. I'll keep buying. I'll keep adding shares, right? Now, others love to go all in when the stocks are hot, right? And I witnessed that. There was a lot of people going all in the market, back in the fourth quarter and back in October, November, the market was running hot. Greed got people. Like, I'm going all in. Saw a lot of comments like that, right? Oh, I'm out of cash. Like, shoot, man, you're out of cash when the market's at all-time highs? When all these risk-on stocks are flown already? Now you're all in, right? And this is what happens, right? And when you see me go all in, when what? Things are bleak, when things are bad, right? I was pretty much all in the end of 2018. I was low on cash, man. I think I had less than $10,000 cash. I'm not kidding you. At the end of 2018, I think I had less than 10 grand. 2022, I got so heavily invested, I think I went under $50,000 cash. Now, I know some of you guys are like, what? That sounds insane. Like, let's say you had 40,000 still left. Like, that sounds an insane amount. For me and my expenses and my lifestyle nowadays, dude, 40 grand is literally nothing. Nothing. Like, I probably spent 40 grand in 2 months. So if you see me go down on those sorts of levels, you know I'm buying like a beast. I went pretty low back last year when the whole tariff drama went out. I think I got down to maybe about 200 grand cash back in the tariff drama, maybe 150,000, something like that, which is very low for me nowadays, extremely low. So I can't really see myself going under $1 million nowadays, like now in like 2026 and beyond, but I could easily come in with another $400,000 to $500,000 worth of buys if this market really gets shaken up over the next few months. I have my doubts about it, right? But I got $400,000 to $500,000 ready in ammo just in case, right? And if you see me deploy that $400,000 to $500,000, you'll know, like, you know, things are pretty bleak out there. Because when I start buying heavy, and I mean, I'm already showing signals of like starting to do some big boy buys. Am I not, right? $70,000 buy here today. Like, that's a sign of like, there's a lot of opportunities out there. And so the more and more you see some of this activity from me, where I'm coming in with $70,000 worth of buys, or, you know, 50,000 here, 40,000, the more you know there's a lot of opportunity in the market. And the bigger and bigger buys you see me come in with, I mean, remember Meta in 2022? I think I bought $70,000 plus. I covered it on the channel. I think I even did a YouTube short back then. I think I came in with like $70,000 buy in Meta in minutes, right? Like, you know, when you see some craziness like that, you know, like, oh shoot, like, you know, things are bleak out there. And that's when I go super heavy, right? When everybody else is like, dude, I can't take any more of this pain, I'm out. That's when, you know, Jeremy comes in with the big boy buys, right? A few videos I want to draw to your guys' attention that you definitely want to check out. One right here, 98,000 people have gotten to see it so far. I released it a week ago. Age 36, net worth 40 mil. Every single investment I own, I go into every single stock, real estate, property, alternative investments, commodities, all that good stuff in that video. So you might want to check that 49-minute beast out. Also, this 53-minute beast right here, I just bought a new stock, $60,000 in spend, 126,000 people have gotten to see that so far. You might want to check out that one from 4 days ago. Additionally, on the reaction channel, if you don't follow me on there, you might want to follow me on there. Jeremy Lefebvre Makes Money. I covered a lot of stocks in this video here today, a lot of market opinion, where the market's headed from here and things like that. So if you want to check that video out, it might even be on your sidebar right now. Like, who knows, right? It might be over there. I know YouTube, they suggest things, right? Additionally, if you want to apply to your own private stock group, that will be the pinned comment down there. Best time to join is when the market's crazy. You know, usually I get the most new members to the private group when things are great, right? Everybody's hitting all-time highs. The vibes are like sky high. But the best time to join is time periods like now. When you're seeing stocks sell off 30, 40, 50, 60, 70%, that's the best time to join. That's a time when you want to be learning all this stuff. You want to be part of a group of like-minded investors to get through it all, right? And talk about this stuff and, you know, have somebody like myself making exclusive weekly videos, and you get to see my buys and all that good stuff. Like, this is the most valuable time, right? Like, the most members I always get when the market's super hot, but I'm like, this is always the time when I'm like, people should be joining my private stock group. Like, this is the time period when I'm like, applications should be ridiculous, right? It's not how it works, but it should be how it works, right? But, you know, can't fix things, right? We have the first A++ income statement in the history of me grading income statements here today with Palantir. I had to do it. Oh my gosh, these results were just shocking. The guidance was insane. Crazy to think this stock was almost in the gulag just a few years ago, right? I have shares I bought at $7.35, $7.43. The gulag is $5 and under, right? It was so dang close. Fascinating how things can switch, right? I posted this inside my private stock group's Discord chat and the Palantir chat. I said, arguments can be made about Palantir's valuation, future growth rates, and where the stock will go. No arguments can be made against Palantir having some of the greatest financial statements in the world. Absolutely incredible. We'll talk about Palantir in this video, what my expectations are for not only the company, but the stock moving forward, those sorts of things as somebody who's been an investor for many years now at this point in time. We're also going to talk about the market in this video. 23 hours ago, I posted this on my X page. If you ever want to follow me on X, I always have it linked in the description area down there. I said, quote, the largest stock market crash in history will be tomorrow. I'm seeing many posting this on X today. I call BS. I would gladly welcome it. Obviously, it did not happen, right? 440,000 people ended up getting to see that post, and here was the results of this devastating day we were supposed to have. Public count was up 20,000 plus dollars here today. I posted this about 58 minutes ago. 22,000 people have gotten to see it so far. Like, it's just fascinating, right? We're going to talk about the stock market, where the stock market's headed from here, all that good stuff in this video here today, okay? Then after we get done going through Palantir and where the market's headed from here, we're going to get into three videos here, okay? One is Tom Lee went on CNBC, spoke about his opinion on price action, where things are headed from here. He spoke just a few hours ago on CNBC. Then I want to react to this one from 10 hours ago. Bitcoin could plunge to 40,000. Oh my gosh, that's almost cut in half from where we're at right now. So I thought that one would be an interesting one to react to, and especially how that correlates with other risk assets. When you see things like Bitcoin, Ethereum, if we're talking about 50% more downside, or at least 40%, right? That can have major correlations with a lot of growth stocks. And so I want to speak about like how that correlates with the market and those sorts of stocks in general. And then Dan Niles, Nvidia clearly thinks a lot differently of OpenAI than they once did. This is in response to Jensen very recently kind of being interviewed and really kind of sounding like, oh yeah, we're not really that excited to invest in OpenAI. That was the gist of what came out of that. So I want to hear Dan Niles, his opinion on stocks, the market, all that good stuff in today's video. One thing all I need from you guys, if you could please just smash a little like button. That's all I need from you. I hope you appreciate me covering all this stuff for you guys, trying to keep you in the loop on all this good stuff. That's all I need from you. If you want to be subscribed here to the channel, you can certainly subscribe. It's free to do so. I think we're at 120, we're probably at close to 127,000 subscribers now on the channel. So I appreciate each and every one of you for being here. Okay, so Palantir, first and foremost, listen. These results were unbelievably great. Like, the beats were insane. Revenue came in at 70% growth. 70% growth in revenue, right? Meanwhile, cost to revenue was only up 24%. So gross profit was up 83%. Gross profit was just under $1.2 billion from $652. It's insane. Meanwhile, sales and marketing was hardly even up for the company year over year. It was up like $14 million. It's like nothing, right? R&D brought it down. G&A brought it down. Total operating expenses were down year over year. How can you grow revenue 70% and have your operating expenses go down? What? Like, that's one of those things. How's that even literally possible? It'd be one thing if it were up slightly, but down? What? That's insane. Income from operations, $575 million versus $11 million in the same quarter last year. Interest income was also up for the company, $62 million from $54 million. That's despite interest as far as, like, you know, if you're buying like government bonds, T-bills, things like that, it's yielding less than it did a year ago or certainly 2 years ago, right? But Palantir is so much more in it now because they produce so much cash that, you know, essentially they're able to generate even more from it. Other expense was up slightly for the company year over year, up about $2 million. But income before income tax is $621 million from $80 million. Man, they're in a very favorable tax spot right now, probably because of, my guess is, losses in past years is maybe helping them out. Net income, $611 million from $76 million in the same quarter last year. EPS on a diluted basis, 24 cents versus 3 cents. I felt bad if I just graded an A+, which is usually my top grade. It was such a ridiculously great report that I'm like, I've got to give this an A++. Like, it's like if your student, turned in an essay and the essay was like so much better than a normal A+, right? You just feel like, oh, I feel bad for only grading this an A+. Like, I need like a higher grade. Like, this is unbelievable, right? That's how I felt in regards to this. The rule of 40 for Palantir is at some shocking number, like, oh gosh, what was it, 127 or something like that, right? Operating margin with revenue growth, like, it's just ridiculous. So now with Palantir, let's speak a moment. The guidance was insane. They're guiding for like somewhere around roughly just under $7.2 billion of revenue for the full year. That's way ahead of what Wall Street was expecting. I mean, we're talking, this is almost $1 billion ahead of what Wall Street expects, okay? Now, so we spoke about the great news. The cash flow is insane. The balance sheet's insane. The income statement's insane. The growth rates are insane. The guidance is insane. Boom, 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 boom. Carp's operating on a incredible wavelength, right? Okay, we spoke about the good. Let me be the Debbie Downer, because somebody's got to do it. I feel like no one can be like the guy that will give you the real about all the great stuff and also the real about the stuff that, hey, here's where it can go bad, right? It's people either got to be one side or the other. I'm the one dude that can tell you how it is from both sides. So I've told you the great and the great and the great and the great. Now let me be the Debbie Downer. Listen, okay? Very important. They're going to have to comp these ridiculous 2026 numbers, okay, that they're about to put up. We're talking, obviously the growth rates went insane in 2025. Now they're going to obviously go to another level in 2026, and they're going to have to comp these numbers in 2027. The comps are going to be absolutely brutal. I would say there's like a 95% probability percentage growth rates start to go down in 2027 and considerably. They'll probably start at some point this year, but definitely in 2027, okay? Now, for those of you that might be new to the market, you're like, what does that mean? That means if you're a company, let's say you're growing revenue at 70%, it goes down to like 40% or 30%. Or something like that, okay? It doesn't mean you stop growing. It means the percentage increase. And I think it's very important I say that because I know sometimes, some people watch my videos. You've been in the market for years. You know exactly what I'm saying. Some people have been in the market for a few months and they, have no clue what they're talking about. And they're like, oh, you're saying the company's revenues are going to go down? No. I wish sometimes people learn all this stuff first and then worry about commenting, right? I think that would be important. But that's what's going to happen. And so what that means for the stock. So listen, this stock could be up 20, 30, 40% right now after hours if people were confident 2027 was going to be another acceleration year. They're not. And that's why you're not seeing the stock react the way you would think the stock would react, given they just reported one of the most insane income statements you've ever seen in your life, right? Some of the most insane growth rates you've ever seen from a SaaS-ish related company, right? The guidance is ridiculous. The other thing is they guided for such a high number this year that the beats, although they could still come in and beat, and maybe they come in at 7.3 or 7.4 billion, or maybe even 7.5, the beats are going to be tough to shock and awe throughout the year now because they took that bar up so high. If they really want to play the game of Wall Street a little bit better, they should have guided for $6.6 billion of revenue, right? Keep in mind the street was at 6.1, 6.2. I think they were at 6.2 the street was at. So 6.6 would have still been insane. It would have still been $400 million ahead of where the street was at roughly, right? But what could have happened is they could have still came in and shock and awed throughout the year, right? And still came in with the 7.2, 7.3, or $7.4 billion full year number. Now, shock and awe, very low probability, right? So when you also tack on the fact that the valuation's insanely rich, right? that's where we run into trouble with Palantir. And so that's why Palantir, if you're wondering about the stock price, right? Where does Palantir's stock price go from here? As I've stated, for really like the past year, Palantir's stock price is stuck. It's going to be stuck between 125 and right around that $200-ish level, right? And it'll just go up, go down. People are feeling really bullish about Palantir. It'll go up to that 200-ish level range, right? People are feeling bearish around Palantir. It'll go down to about 125. And it's just going to be stuck there for years. That's what I see. Even though Palantir is going to keep coming in and absolutely putting up great numbers, right? Because let's think about it. Palantir has these insane growth rates in 2026. Let's say growth rates go down to 40%, right? Or 30%, which still be great numbers in, 2027, right? Let's say 35% midpoint. That's still an amazing number. How many companies in the SaaS-ish related space are growing like that? Very few, right? So those will still be great numbers. But when you're used to revenue growing at 70% clips or something like that, and all of a sudden you go down to 35, 40, that's where people start saying, ugh. And this is what I explained a long time ago to people. If you've been watching my, channel for a while, I've been explaining this is an issue. Palantir growth rates are about to peak in terms of percentage increase. They're going to keep growing revenue for years to go in the future. But in terms of percentage, the rate of increase, they're about to peak, right? And start going down. And so you go from like 70% growth to maybe like, 68% growth, down to 60% growth, 50, right? And then, it's just like, that's natural for companies. NVIDIA is a good example of that. When NVIDIA's growth rates were just going higher and higher and higher and higher in terms of percentage, right? The stock was going insane. It ran huge. It ran all the way to 200 plus. And then once NVIDIA started showing, okay, the growth rates are really starting to decelerate, that's when NVIDIA stock started to, basically be stuck. And that's exactly what we've seen with NVIDIA, right? NVIDIA stock was 200, if I recall, NVIDIA stock was 200 plus, like, what was that, last summer? I think it was early last summer, NVIDIA stock was like 200 plus. And now you look at NVIDIA, it's like, $180 something a share, right? And guess what? Numbers have been incredible at NVIDIA. They kept reporting great banger numbers, kept growing the business huge. It's just the stock ran ahead of it, right? And so that's what happens in the stock market. Stocks run ahead of the numbers a lot of times. And, it does outlandish moves, just as Palantir shouldn't have been $200 plus last year. Just like Palantir should not have been $7 in 2022. The stock market just moves too extreme. Retail investors, especially new retail investors, people in their first few years of being in the market, get very frustrated because they look and they're like, how is this company reporting such amazing numbers, such amazing growth rates, but the stock's not really reflecting like a new all-time high? And it's like, you can understand, like, stuff is priced in, a year in the future, 6 months in the future, sometimes several years in the future, right? So those are just all factors to kind of keep in mind in regards to Palantir. So you have a company that is almost as perfect gets in regards to income statement, balance sheet, cash flow. I mean, the CEO, Karp's doing an amazing job. The whole team's doing an amazing job, but you just have a stock that's just stuck in the mud, right? And I think it's going to remain like that for years. And, that'll be that. The good news is for people that maybe want to build a huge position, right? You're probably going to have a few years to build it in kind of the 125 to 200 range, right? So, and also I could be wrong. Like maybe Palantir just keeps growing at 70 and 80% growth rates and for years to go in the future. I don't think that's realistic at all. But let's say they kept doing that for years. Let's just say for the next 3-4 years, they keep growing at 70, 80% growth rates. Then the stock won't get stuck, right? Then we're going with $300, $400 stock, right? But I would put the odds on that extremely low probability. That the company keeps growing for the next 3 or 4 years at 70 and 80% growth rates, I'd put that at like a 5% probability. 5% probability, right? So, and last thing I'll say about Palantir before we move on the market in general, because a lot of people like to try to come in and short the stock. Listen, okay? I got to be honest with you guys. This is not a great stock to short or to bet against. The reason being is the financials are so insanely strong. It's brutally tough to bet against this stock, okay? A much easier bet. If you want to talk about two companies that trade huge valuations, a way easier bet is Tesla. Why? Because Tesla doesn't have the financials to back up its valuation. Palantir has these incredible financial statements, a ridiculous income statement that's an AA++ grade, a balance sheet that's a 1 of 1, right? Incredible cash flow. Tesla doesn't have that. Tesla's cash flow statement is weak. The income statement is weak. That's not an opinion. That is a fact. When you look at Tesla trading at a $1.5 trillion market cap or whatever it is, the income statement's incredibly weak and the cash flow is incredibly weak. Balance sheet's strong, but still not like strong, like, you know, compared to their peers, which are other big tech companies, right? They actually probably have the weakest balance sheet of all the stocks that are in that kind of like Mag 7 space. So if you're gonna bet against either Tesla or Palantir because you want to hedge, you know, against market downside, way easier to hedge against Tesla because you don't have these ridiculous growth rates. You got a company that's like, you know, trying to do this magic thing and that magic thing. Their whole core business is just in shambles right now. They want to get out of certain, like Tesla's a whole mess, man. Palantir is not a mess. Palantir is greatness. There's a big difference, okay? And so I don't even like it when people compare Palantir and Tesla at this point in time. Tesla doesn't deserve to be in the same sentence as Palantir, factually. Like Palantir is reporting A++ grade income statements. Tesla's not. Okay, there's a big difference between like a stock that has gone up a lot because they deserve to versus like a hype situation like a Tesla, right? Now, next up here, let's talk about the market, right? Typical, you know, market scatterbrain activity I was seeing on X yesterday. Oh, the largest market crash ever is coming tomorrow. It's going to be a bloodbath out there, right? And all this stuff, you know, and I'm like, I call BS on all this. Like, you guys are just going crazy. People assume that because Bitcoin and Ethereum were tanking over the weekend, that's going to magically bring down the whole stock market, right? Listen, okay, and obviously people are already worried because of what silver did back on Friday and all these sorts of things, right? And what did I explain to you guys? I think it was a video I recorded yesterday on this channel, right? What did I explain to you guys? I said this is going to have little to no ramifications on the overall stock market. It could maybe bleed into some stocks that maybe people leverage into, but that's about it. I said, if you're thinking about this is going to take down the whole stock market and have the whole stock market crash because silver just, you know, had its second biggest drop ever and because Bitcoin and Ethereum are tanking, guess again. Okay, guess again. Now, this isn't going to tank the whole market. It's not like, you know, somebody that's leveraged into Bitcoin and Ethereum or silver is like super leveraged for the S&P 500 or something like that would tank the whole market. No, it doesn't work like that, okay? So ramifications are small, if at all, right? And that just is what it is, man. It can have some ramifications for risk assets, but other than that, it's a sleepy situation. Now, as far as where the stock market goes from here, okay, now let's talk about where the stock market goes from here. Listen. Two companies are going to completely dictate where the stock market heads from here, and they both report earnings this week. One is AMD and one is Amazon, okay? These are the most important stocks by a mile, that are going to be reporting this week and really dictating where the stock market goes. AMD is so important because this is a risk-on stock. A lot of retail investors are investing into it. It's a big position for me. You have over $1 million in AMD stock, right? It's huge from a psychological perspective, also from a spending perspective. AMD's results, if they're really great and that guidance is really great, it can move Nvidia, it can move MU, it can move SanDisk, it can move a lot of stocks, okay? A lot of stocks. Also, from the psychological perspective around like risk on type stocks, because you think about AMD, that's like a risk on type stock, right? And so AMD is so vital for the stock market, right? Not the biggest market cap. So from a market cap weighting perspective on what it means for the S&P 500 and Qs, that's not what it's about. It's about the psychology side of things, right? If AMD doesn't, you know, come in with great numbers and that stock goes down, it's going to put a damper on the whole market, right? I think the numbers are going to be great. I think the guidance is going to be great. I think the commentary is going to be great. And up and away we go. But we'll see. We'll see in regards to that, right? The second stock that's the big market mover for how this market's going to go from here is Amazon. Amazon is vital. And specifically, Amazon has to come through where Microsoft missed, right? Microsoft did not put up the incredible Azure growth that everybody was expecting, right? So now Amazon has to come in and save the market by showing great growth in AWS. They have to show another reacceleration. Last quarter, they accelerated the AWS growth to, I think it was around 20%, if I recall, from like 17%. We got to take it to another level now, right? We got to take it to like 22, 24, 25%. If it can do that, the market's saved in regards to momentum coming back into certain Mag 7s and specifically Amazon, because that will show people like, okay, people are making money from AI. Meta was able to show that in a great way, right? Meta's growth rates are insane. The guidance was super strong. People are like, whoa, Meta's actually making money from AI, right? They're spending all this money, but at least they're getting something out of it. AWS spent a lot of money. We know that, right? Amazon spent a lot of money, but we got to see the growth rate start to come in. So people want to see a 22, a 25% growth rate for AWS. They can do that. Momentum back on Amazon's side. The e-commerce business, obviously a shareholder like myself that's a big shareholder of the company, I'll be looking at those heavily, but that's not the thing that'll move the stock. Earnings per share, I'll be looking at that heavy. Profitability, I'll be looking at that heavy as a big investor, but that's not what the market, that's not what really would give Amazon momentum and the whole market momentum. It really, really comes down to AWS. Okay. And so Microsoft let everybody down. They basically came in line or slightly under expectations when it came to Azure growth. AWS got to do it, man. Got to do it. They get it done, come in, several percentage points over what Wall Street's expecting. Get ready. Rocket ship ride, baby. Rocket ship ride, and the momentum will be back. Okay, now we're going to go ahead and react to some videos here. And before we get into that pinned comment down there today, if you're looking to apply to my private stock group, you want access to all my premium courses. Do you want access to it? Do you want access to my private Discord chat? Do you want access to 1000xstocks.com? Do you want access to exclusive weekly videos? Do you want access to see all the moves I'm making in my nearly $4 million public account each week? If you do want access to that, pin comment down there, click on that, fill out a form so you can get you access in there this week. That is specifically for individuals with over $100,000 net worth. That is really for you individuals. If you're somebody that maybe you have $50,000 net worth, $70,000 net worth, $80,000 net worth, something like that, you can always feel free to apply. Yeah, might not be the right fit for us in there, and that's okay. But you can still apply, okay? But it's really for individuals if you're somebody out there that got over $100,000 net worth, okay? All right, let's get into this.
Lee Fundstrat, head of research. I'm not going to say that you didn't call this, Tom, because at the beginning of the year you were talking about, did you use the word speed bumps or volatility or I don't know what it was, but you also said that it...
What?
That could be based on things coming out of Washington.
Sir, in all due respect, are we paying attention to Tom Lee's predictions? Because, Tom Lee had some pretty outlandish predictions on where Bitcoin and Ethereum was going to end last year, where it was going to end in January. None of these things have even remotely come close to true. They're dramatically off. So, all due respect, Tom Lee's coming up with some misses lately and quite a few misses, right? And so, I don't know. Maybe he only pays attention to certain things.
Market is going to be held hostage to that to some extent. Is this worse than you expected or pretty much what you were thinking?
Well, and parts of it have been much worse. How I think the crypto market has taken it much worse than we expected.
Why?
I think part of it is the crypto industry doesn't have any leverage right now. It sort of delevered in October. And now when we have gold and silver doing so well, especially at the start of the year, that created FOMO. And that was like a vortex sucking all risk appetite towards the precious metals trade. So I think crypto has suffered from that on a price basis at a time when the fundamentals have been good. It's been a contrast. I think the broader economies actually...
The fundamentals have been good? The fundamentals have been good for Bitcoin and Ethereum? What fundamentals, in all due respect, Tom Lee? What fundamentals are we talking about?
So to me, the turmoil here is kind of what...
This is not AMD, this is not Amazon, this is not Palantir, this is not Meta. There's no fundamentals, sir, in all due respect.
There's a lot of uncertainty because of Washington picking winners and losers, and some of this could be the new Fed pick. But I'm also kind of heartened. I think gold and silver taking a breather is actually a good thing.
A breather. I mean, 80 on silver. That's not breathing yet. It's like I don't know what that is. You do point out that the consensus now is for the GOP to lose the House, and that is not necessarily a negative for the markets for the future because it's already consensus.
Yeah, I think it's consensus. It might actually be a positive surprise if the GOP keeps the House.
If that were to happen.
If that were to happen, but that's a big if. I think one of the things that we're seeing, of course, this year is the White House is deliberately picking more winners and losers early, I think, because of the midterms. In other words, their agenda is front-end loaded. I think that has caused some turmoil in markets.
Even if it was Hassett, or I don't know who the markets would have liked, but you think no matter who it is, that the market tests the new chairman of the Fed when he's announced, or she is announced.
We saw that with Fed Chair Yellen and Fed Chair Powell, that in the early days, the market tests them, whether it's their resolve around policy or rates. So I think the confirmation process creates a little uncertainty. And then I think the first FOMC meeting. So I think that's why the middle of the year could be quite bumpy.
Then you point out some things maybe to keep everyone a little bit grounded. Stocks were up the first 5 days of this year. Stocks were up 1% in January of this year. Since 1950, that's happened about a little bit less, 36 times. That's 76 years, and the S&P was up 18% on average after a start like that. But I thought you said it. Someone recently said they don't even pay attention. I think it was David Bond said, don't even pay attention to what happens in January, that indicator doesn't work. It's like the Super Bowl indicator. It's had its time. And you think it does? Historically, this is important.
Yeah, it's very telling. I mean, there's 36 times when it happened just exactly as you described. 33 to 36 times the market was up. The average gain's 18%. If you look at the non-36 instances, the other 34 or so, the market on average is down 5% for the year. So it makes a huge difference to do well in the first week, in the first month.
A lot of this, obviously, the giveth and taketh away. AI went almost not like gold and silver, but kind of, asymptotic in a lot of those stocks, trillions of dollars of valuation. So that's going to be tough. That could be a headwind. Is that just, regresses, or we use mean regression or revert?
Yeah, mean reverts, yeah.
Which do you like better? Revert?
I could see both working.
I know. All right, so that could be a problem. So crypto doesn't have leverage right now. Is it going to go to the levels that you have talked about in the past still, or let's say 75,000 for Bitcoin? Is that a place where people would say, okay, I'm ready to buy? Or is 40,000 a place where people say, I'm ready to buy?
Okay. I'm going to say something that sounds a little contrarian, but Tom DeMark is our advisor at BitMine in terms of crypto. He's been since mid-November saying Bitcoin would go to 77 and Ethereum at 2,400. So he's been waiting for what he calls time and price to align. This weekend, he believes we reached that alignment. So all the pieces are in place for crypto to be bottoming right now because we're getting the level and enough time has passed. So I think as long as crypto fundamentals are good, which is the case, Ethereum active addresses is going parabolic right now, and activity. Part of it is, of course, Wall Street is building up digital assets and converging those businesses. If that's the case, then crypto prices should follow.
So as far as bottom goes, how would I say this? Throwing darts at a dartboard? Anybody want to throw darts at a dartboard? Like that's what we're playing in regards to this game of like, oh yeah, we bottomed. You could easily make a case that there's no signs of a bottom in Bitcoin or Ethereum right now, right? You look at the Bitcoin cycle, it says Bitcoin, Ethereum is going to continue to go down. We'll have some bounces here and there, but the overall trend is down all the way until we get a Q4 bottom of this year, right? And the bottom is, we're talking another 50% plus downside between now and that actual bottom. So, something to kind of keep in mind here. And the thing with Tom Lee, like I remember 2022, Tom Lee kept kind of like trying to take the bullish side, and obviously the market kept working against him, right? And by the end of 2022, basically everybody, laughed at Tom Lee every time he went on. Like, how do they invite this guy on? He's constantly wrong, these sorts of things, right? Tom Lee's going to usually take the bullish perspective. And in a bull market, looks amazing, right? But when the market flips and you go to that other side, right? And, somebody like a Tom Lee that keeps taking the bullish perspective and the market keeps working against him, he starts to look like, he's got paint on his face. And people start saying, like, this guy doesn't know what he's talking about, right? And the flip happens. I already saw the flip happening this weekend in regards to X. Like, people don't hate Tom Lee yet, though. But people are definitely talking negatively about him in regards to his Ethereum loss. His Ethereum loss, people were showing that this weekend. It's one of the biggest losses in history. I mean, it was approaching, people were showing his Ethereum loss at approaching $6 billion this weekend on X. Like, that's a crazy number, right? Shoot. So, we'll see. Okay, next up here, I want to react to this guy who's got a very bearish take on Bitcoin. We'll hear what he has to say.
They've been absolutely smashed in recent months thanks to the drop we've seen in the Bitcoin and the crypto space. Strategy has seen down 7.6%, Coinbase 4.7% down, Circle Internet down 3.8%, and Galaxy 7.6%.
Michael Saylor is the ultimate. I was going to say his posts on X are nuts, but
yes,
that's not fair to nuts. No, they are quite extraordinary anyway. And it's kind of almost, I don't know, it's almost like kind of messianic, if that's not, wrong to say. Anyway, my point is, Michael Saylor is the original DAC, Digital Asset Currency Chap, and he is the biggest holder, biggest advocate on the planet of crypto. He has been buying more, but he's now underwater. He owns hundreds of thousands, more than most people out there, apart from your government. El Salvador. I think he owns more than El Salvador. But the fact is, he's underwater now.
Yeah.
So this is getting tight for him.
Well, he's not the only one. I mean, I spent a lot of time with Brian Armstrong over at
but that's interesting.
Coinbase.
That's about volume rather than holding the position.
It's about a lot of things. I think let's get to John Blank, Chief Equity Strategist at Zacks. John, we've just sort of set the scene there around Bitcoin. What do you think? Or what's the outlook look like?
Karen, generally speaking, a Bitcoin winter is 12 to 18 months long. And these are well understood technical features. So at 76,000 from 125,000, which was the
Amazon just arrived. That means Amazon's delivering, which means Amazon earnings are going to deliver, baby. The Amazon truck just showed up.
Winter is 12 to 18 months long. And these are well understood technical features. So at 76,000 from 125,000, which was the peak, we can get to 40,000. 40,000. So if we get to this new Rubicon, as Steve spoke to, which is basically being called out by Saylor because of his positions, when does the forced selling and the liquidations happen to take us to 40,000? We can get there very quickly, or more likely we're going to get there over the next 6 to 8 months.
But, John, we've got a crypto-friendly president, and we've got a president that is friendly for all sorts of digital coin, and this is why the market has been unwilling to bet against that. They've been cautious.
People still don't understand. That's not a good thing for Bitcoin. That's not a good thing. People assume like, oh, that's great news. Like the government's for Bitcoin. No, dude. Do you forget the whole plot? The whole thing about Bitcoin from the very go was it's anti-government, right? The government doesn't have a hold on it. The Wall Streeters, they don't have a hold on this asset. We're creating our own thing. And, screw Wall Street, screw the big banks, screw the government. Like, Bitcoin's our thing, right? The people's thing. That's all been removed. Now Bitcoin is a Wall Street asset. Big money controls Bitcoin. Big money now controls whether Bitcoin goes up or down on a daily basis. The government is all like, oh, we're so pro this and so pro that. All these different cryptos and things like that. That goes against like the whole thing. This is not good. Like people have always tried to pitch this the last few years as like, oh, this is a great thing. Like, government's, so pro crypto and Trump, blah, blah, blah. And I'm like, dude, this is not good. This is not good. You can talk yourself into whatever you want to talk yourself into, but you got to understand like from the very go, what mattered and didn't matter in regards to these assets. And so once you got the government involved, once you got the big money, the Wall Street involved, that's not a good thing. It is not a good thing.
At a huge downward draft here, they're still cautious that friendly policies from the Trump administration could be forthcoming. Would you bank against that?
Well, I just think, everything's tied to the Stablecoin Act, and the Stablecoin Act is still playing out. So, the president generally doesn't like actual policy and getting involved in it. He likes emergency orders. So the problem here is the crypto guys bet on the wrong guy, who has to put a stable framework into place, which is the Stablecoin Act, which is playing out.
But this is still a negotiation. I was talking to Brian Armstrong about this the other day. They want some sort of reward when it comes to the stable coin, which would take on and challenge the deposits that you've seen at banks. So this is still up for grabs at this stage.
Oh, absolutely. I mean, the whole stablecoin thing is not stable. This is the basic problem. I mean, they're trying to create demand. They tried through the ETFs, now they're trying through the stablecoin. And this is the other problem here is how long is that game played? That played out for years. And there's also a generational issue. People tired of this whole trade, tired of it because COVID's over, tired of it because there's other Coinbase things to do. I mean, that speaks to Robinhood outside of Coinbase, right? Robinhood's doing great, Coinbase not so much. So we're in this other thing, which is it stale to be in Bitcoin, basically?
Do you agree with some of the other commentary that's been around this? I'm thinking the global market strategist at Marex, who said that what we're seeing is an asset in search of a valuation model. There's no clear consensus on what actually drives the price of this. Does that reflect your view? Or do you...
Yeah, the issue you run into now that Wall Street controls Bitcoin, now that Wall Street controls, these different assets, is they're going to move when they want them to move. So if they want to, have those babies, manipulate them to not go up for years, that's exactly what they'll do. Have you paid attention to silver over the years? Like decades? Like they'll have time periods where silver just won't move for years and years and years. And there's been like investigations in regards to manipulation of the silver markets, all those sorts of things over the years in regards to commodities market, right? And so like you could easily go through many years where Bitcoin really doesn't move, right? Like it goes up, goes down, but it's not really like going on that like insane move like when it went from, 10,000 to 70,000, right? Back in, 2021 when it hit all-time highs at 70,000, right? Like they'll move it when they want to move it, right? And if that's this year, they'll move it this year. If it's in 5 years from now, they'll move it 5 years from now, right? And you just have to continue to hold year after year after year, like hoping like somebody's willing to pay more than what you bought it for.
Do you disagree with that?
Well, man, there's a thesis that I think should get more airtime in financial markets, which is called the inelastic financial markets hypothesis, which is prices in financial markets are inelastic. So you put a lot of demand in, the price goes up dramatically more than it should have. So this is really inelastic financial markets hypothesis is crypto. You talk it up, you pump it up, and you create new sources of demand, and the price is inelastic and it explodes, right? But it explodes up and down. So when the market gets unliquid, it's going to multiply much faster and pull away. So I think the other thing here is, inefficient and efficient markets have gone towards inefficient markets because of this inelasticity of people just chasing the same stuff, chasing too many trades, too few trades.
And do you see that as being a specific problem to certain types of crypto, or do you think it's a broader issue that would call into question the wisdom of central banks holding strategic reserves in cryptos?
Yeah, I think so. I mean, getting the central bank in on these types of trades with total inelastic markets, that would just be this massive surge in liquidity, massive surge in prices. And that would be, take it another level to higher. So this is why they're talking to the president. This is why he got on his side, because they know this story. They know they need another source of demand, and they need a big one.
A couple of points, Karen. You said that Trump's a fan of crypto, and obviously, I think I understand that him and his family are involved. But the Trump meme coin has fallen over 90% in the last year. I just saw the last print, 4.1, I think it is. It got hit $75 at its high. John, come back to us on this. I've just told the .com to have a look at your $40,000 comment, so I need some more flesh on it so they can make a bit of copy for you. Why is 40,000 the level?
Well, if you take, the highs out of the last cycles of tops of the Bitcoin and the lows, you're going to get a kind of a megaphone pattern, right? And so this is just calling the extension of that chart to the 40,000 for this move. That's what I'm saying.
On the way down, we started off by talking to Mr. Saylor and what have you, and the digital asset currency people. That's going to wipe a load of them out.
Absolutely. So the question is, who's behind all of his liquidity? What banks? What lending? What kind of stops does he have in place in his mind? And how does he play this out? Because he's going to talk one game and play another, right? He's a trader.
Yeah.
So I've noticed many traders, work with a lot of them in the company I'm in. They'll say one thing, but if the market turns against them 3 days later, they're doing a different trade. For sure.
Got it. Yeah. I concur with.
Listen, preach. Okay, like we react to these Wall Streeters all the time on this channel, right? And pay attention to their views on the market and these stocks. And like 1 minute they could be bullish on the stock, and 3 days later they're bearish. And they're like, "Oh, I'm selling out." And it's like, really? You were so bullish on this stock like 3 days ago, and now you're selling out. You know, Scott, whenever he interviews these Wall Streeters, right? It's always entertaining. Okay, Dan Niles, next up here.
Essentially is NVIDIA, and this may not happen. I want to make that very clear. It was a journal story over the weekend. If NVIDIA were to pull back or out of that $100 billion OpenAI investment, what would it mean, if anything?
Well, I mean, I think it shows you how the world has changed from September, but we kind of know that, right? In the sense that there's a reason Oracle's stock is down over 50% from its 52-week high following that monster quarter they put up in the middle of September. So I think, what will be interesting is what the amount ends up being, because remember when that agreement was signed in September, it was for $100 billion, but it was a letter of intent. So they didn't necessarily need to follow through on that. And you saw in filings from NVIDIA since then that they said, this might not ever get done. The CFO, CEO have said that in conferences starting as early as January, as far as I can remember. So this is not, in some sense, new news per se, but it does tell you that NVIDIA clearly thinks a lot differently about OpenAI than they did in September of last year.
And what should, we were just talking about this, what should OpenAI do, Dan? I mean, you don't have to worry about it, I guess, because it's not
In a moment, I'll explain exactly why NVIDIA has gone sour on OpenAI. I'll explain to you exactly why.
Traded equity itself, but if you're a Microsoft investor, if you're Oracle, as you mentioned, in some ways, if you're NVIDIA, I mean, those are the chips powering their chatbot, whereas with Google, they have it kind of all vertically integrated.
Well, yeah, but Google does use NVIDIA chips as well. So I think this comes down to what's been happening really since October 29th, before that 5% drawdown in the S&P back then, where if you look at the Google ecosystem of companies since October 29th, they're up about 25%.
Yeah.
If you look at the OpenAI ecosystem of companies, they're down about 25%. And some of the latest releases from Google just make me feel that much better that Google's going to ultimately be the winner in consumer AI, and Anthropic is going to be one of the winners in enterprise AI, and OpenAI is in trouble because they're wedged between the two of them.
Okay, so let's stay there. OpenAI, we don't know if it's in trouble or not, but if they don't get $100 billion, even by OpenAI standards, $100 billion is a lot of freaking money. Okay.
I think they're going to get $100 billion, Brian. I'm not saying they're not. I'm just saying longer term, if you are thinking about who the 1 to 3 winners are going to be in AI, I don't think they're going to be one of them. Are they going to raise the $100 billion? No problem. There's too many companies that have a vested interest, at least for right now, for funding. And so they're going to raise the money. It'll be interesting to see what happens to the stock prices.
They'll raise it and they'll burn through it, right?
So before we go further here, why is NVIDIA gone sour on OpenAI? Here's my personal opinion on how I read this situation, okay? NVIDIA seemed to go sour on OpenAI after a very important thing happened. Do you know what that is? OpenAI made an announcement that they're going to potentially get some ownership in AMD and buy a massive quantity of AMD chips over the next several years, okay? Now, if you're NVIDIA, that's got to be frustrating to you, right? You're like, wait a minute, we're supposed to invest a ton of money into you, we're going to invest money into you, and then you're going to go around and spend a fortune of money with our competitor, AMD? We don't like that. That was the moment where things started to turn sour between the relationship, in my personal opinion. And everything lines up. Before that, NVIDIA was so pro OpenAI, Jensen all of a sudden now sounds like, we never said, and it's like, oh my gosh, like what a change in tonality in a matter of a few months, right? But I can understand it from NVIDIA's perspective of like, we're supposed to give you a ton of money, then you're going to go spend that money with our competitor, right? Like NVIDIA probably wants all that money to be spent right back with NVIDIA, right? And so now, I don't think this administration is going to look at it from a monopoly practice standpoint, but there's some things in there that you could look at as kind of a little sketch about like, investing into a company so they spend it back with you, right? They don't spend it with your competitor. And I mean, there's definitely some sketchy stuff, in my personal opinion, right? And once again, with the folks in the government that are in the government right now, I don't think they're going to look into any of this. But if Linda was still there, I'm not sure some of these tactics would be going on right now. I will say that about this, okay?
Absolutely.
Let me ask a different question. In 3 years, in 5 years, if OpenAI is something totally different than it is now, it's bought. If OpenAI doesn't make it or is sold off or whatever happens, maybe it's the king, but let's say it doesn't. Will the stock market be okay? How much, if anything, is riding on OpenAI, given that it's kind of a black box, kind of a closed thing? It's not a public company. We don't know a lot about it.
A ton's riding on it because that they've made $1.4 trillion in commitments over 8 years. And they're going to lose money all the way through 2029. And the burns are going to get worse every year that passes until then. So, yeah, a lot is riding on it. But you're seeing the stock market, as I said, it's been adapting to this since late October. What I find fascinating today is you look at Oracle, right? Because they're obviously, when they announced that monster quarter back in September of last year, the stock was up 36% the next day. Biggest move in history for any company with a market cap of over $500 billion. But $300 billion, or almost 2/3 of the remaining performance obligations, were from OpenAI. So Oracle comes out this morning, says, hey, we're going to raise $50 billion, half of it in equity, stock's up, and now it's down. And so it tells you that people are thinking maybe a little bit beyond, okay, they can raise it for this year, but what about next year and the year after? And so it's never the data, it's how the market reacts to the data. Clearly this morning it was, oh my God, this is great. And now it's like, well, wait a minute. We still have the same problem we had before, which is their exposure to OpenAI.
So if OpenAI doesn't work out here, is it devastating to the overall stock market? Not that much. And the reason being is so many of these stocks have already started to discount that OpenAI might not be able to raise as much money as people previously thought, whether it be this year, next year, and future years and things like that, right? And so if you look at like NVIDIA is a good example, NVIDIA's forward P right now is in the 20s, right? Oracle stock is less today than when they made the OpenAI announcement. So there's already been a massive discount there. So not as much as riding on that as maybe people would have perceived. If Oracle stock was flying high right now, if NVIDIA was 275, it would be a very different situation, right? But the market's already very cautious on this whole situation, right? And also, if OpenAI loses, you can see many companies potentially win in that environment, right? One of those most direct is obviously Google. Like, as OpenAI sentiment has soured over the last several months, look at Google's sentiment. It's higher than it's ever been. And look at how strong that stock, remains. And congratulations to everybody that's obviously made a lot of money on Google stock, okay? I appreciate y'all for joining me. As always, thank you so much for being here. I'm going to try to keep you up to date with everything going on. We got AMD earnings tomorrow, and then Google McDougal the next day, Amazon the next day. We got Elf earnings coming. We got just earnings and earnings and earnings and earnings. And oh my gosh, there's earnings all over the place, right? Tomorrow, PayPal. Oh, I forgot about PayPal. Oh my gosh, PayPal tomorrow, AMD tomorrow. We spoke about Palantir already. Google McDougal and Elf on Wednesday. Amazon and EL on Thursday. Oh, it's a banger. Once again, pin comment down there if you're looking to apply to join my private stock group, private wealth group, get access to all of my course curriculums, access to the private Discord chat, exclusive weekly videos. If you want to get access to the moves I'm making, all that good stuff, that will be the pinned comment down there, and we'll send you your Steel membership cards to your house once you join us in there. Obviously, silver absolutely has collapsed now at this point in time in regards to recent price action, down 28%. Bitcoin, Ethereum are now tanking heavy, right? Bitcoin's down to 77,000. Ethereum's down to 2,300. If we pull up these just since mid-January, Bitcoin's now down about 21%, and Ethereum is down about 31% just since mid-January, ladies and gentlemen, okay? We're going to talk about if this is going to have ramifications for the stock market with these assets absolutely collapsing, and what this means for certain stocks, what this means for the market in general, all that good stuff. We're going to get into that at the top of this video here today. SoFi Technologies, they reported earnings. We'll get into SoFi. I know a lot of people want to know my opinion, perspective on those earnings. What do I think is going to happen with the stock? What do I think about the price action on Friday? All that good stuff, okay? AMD earnings are coming out in less than 48 hours from now. I'm going to tell you about my expectations for AMD here. Do I think they're going to beat? Do I think they're going to miss? What do I think is going to happen with the stock? All that good stuff. We'll get into that in this video here today, okay? Then I want to react to this one. Tom Lee explains gold and silver, the sell-off, and hear from him and his perspectives here, along with the Professor Jeremy Siegel. Looking forward to reacting to that one here today, okay? Hey, all I'm asking for you guys is one thing, okay? I'm recording you a Sunday video. This never happens. I just need a little thumbs up. If you could just make that thumbs up button glow, I appreciate you in the biggest way, okay? Additionally, pin comment down there if you're looking to apply to join Prep Stock Group, get exclusive weekly videos, access to all my course curriculums, private Discord chat, 1000xstocks.com, all that good stuff. That would be pinned comment. Additionally, if you haven't got to check out these two videos on the main channel, check them out. 115,000 people have gotten to watch this one so far. Just bought a new stock, $60,000 spent. And in this one, age 36, net worth 40 million. Every single investment I own, 95,000 people have gotten to see this so far. It came out 5 days ago. That goes in every single stock, real estate, property, alternative asset, everything I own, okay? Bitcoin, Ethereum are collapsing. Silver's collapsed. Listen, what does this mean for the stock market? Okay, is this going to tank the stock market? The answer is no. Does this have ramifications for certain stocks in the stock market? Yes. Okay, listen. Because Bitcoin's tanking, because Ethereum's tanking, because silver just collapsed 28% and had the second biggest drop in its history, and that's a long history with silver, second largest drop ever, right? Just because that happened doesn't mean suddenly now the S&P 500 has to collapse 20, 30, 40%. That's not the way this works. But you got to understand, this can have ramifications for certain stocks in the stock market. So think about it. If you're a fund and let's say you're leveraged, and a lot of it comes down to leverage, okay? So let's say you're leveraged Bitcoin or you're leveraged Ethereum, right? From what I just heard, I believe Tom Lee and his situation there, I think they're down close to $6 billion on Ethereum. It was being reported here recently, which is just a staggering number, right? If let's say you're leveraged on either Bitcoin, Ethereum, or maybe in the silver market or something like that, because it's been the hot play, right? You could suddenly be facing margin calls. You suddenly might have to come up with liquidity, right? And so what can happen is you might be also leveraged to something like a Tesla stock, a high beta name like that has had momentum, right? You might be leveraged to something like Palantir. Even something like an AMD, like we're going to speak about here today, right? Those high beta names, those high momentum names that make very dramatic moves, right? And so you might have to then get liquidity out of, some of those stocks. So you sell those stocks so then you can cover leverage that, let's say, maybe is in Bitcoin or in Ethereum or silver or something like that, right? And so it can have some ramifications in the stock market, but not from the perspective of, because these things are collapsing, it's going to collapse the whole stock market, right? It doesn't really work like that, but it can absolutely have ramifications for certain stocks in the market. And that's what's very important to, keep in mind here, okay? And so now, as far as the bottom for these sorts of assets like Bitcoin, like Ethereum, the bottom is anybody's best guess. I've seen there's this supposed to be Bitcoin cycle predictor thing, okay? That's supposed to be accurate. We'll see if it's accurate. Don't put too much faith into this, okay? But based upon that, predictor, okay, Bitcoin supposedly is not going to bottom until the fourth quarter of this year. So we're talking like 9 months from now. We're talking having a baby here, okay? And guess where the bottom is? Around 30,000. So don't think like, oh, for sure Bitcoin's going down to 30,000 and it's not going to bottom till 4. Like that might not happen. But all I'm saying is this supposed Bitcoin cycle predictor is saying the fourth quarter and 30,000. If that's even close to being accurate, there's a massive amount of downside still ahead, okay, in regards to Bitcoin and Ethereum here. And we're not even remotely close to the bottom in regards to time or in regards to price. So don't bank on it, just something to kind of keep in mind here. Another thing I want you to keep in mind is silver. Yeah, second biggest crash we've ever seen in the history of silver. But let's not forget, okay, silver in the past month is still up 10%, even after the second largest crash in history. On a 3-month, silver's still up 71%. You'll be flipping my flapjacks. And on a 6-month, silver, even after the second largest crash in history, is up 121%. Oh my gosh, okay. Some food for thought in regards to that. SoFi, what are my opinions on the earnings? What's my perspective on where the stock goes from here and all that good stuff? Okay, listen. I posted this inside the income statements tab inside the private group. I've just been grading income statements left and right, and I got so many to grade next week because so many earnings coming. It's going to be ridiculous. Okay. Once again, if you want to apply to our private stock group, that is the pinned comment down there. And to see me grade income statements is right here in this particular tab. Okay. So SoFi, as far as their earnings, this is an A+ grade. Phenomenal numbers out of SoFi. Bravo, Anthony Noto and the team. Total interest income, TII, 927 mil from 743. If we look at total interest expense, only went to 310 mil from 273. That's not bad. So NII, which many people look at as the most important metric to look at for something in the banking space, right? Which SoFi is kind of that middleman between kind of being a bank and being a fintech, right? NII, $617 million from 470. Oh, that's insane. That's absolutely insane, right? Total net revenue for the company, over $1 billion from 743. Now, look here, okay? This is very important because it looks like, oh, SoFi's profitability went down. That's not good. Their revenue went up so much. Their net interest income, like, shouldn't their profitability went up a bunch? Yes, but keep in mind why it didn't. Look at net income, 173 mil from 332 in the same quarter last year. But this line item, this is why it pays to do more in-depth research and just look at baseline numbers, right? Because you think, oh, wow, they're bringing a bunch more money, but they're not making nearly as much. It's not really accurate. There's a one-off here. So if you look at income tax expense or benefit, right? They had basically a $272 million benefit in this same quarter last year versus $11 million expense in this quarter we just reported, okay? Which, do the math on that, that's a $283 million swing, ladies and gentlemen, okay? So the reality is if you take away that one-off, right, which you could do something like that in non-GAAP, the net income dramatically higher, obviously, and the earnings per share year over year is dramatically higher, right? So this is where it pays to really look into this stuff and, what's a one-off and versus not a one-off, because like I said, you just look at the baseline numbers, you would think like something's wrong with SoFi, like, oh, they're making so much more money, but they're really not. Dig a little deeper and then you find out, oh crap, like it's just basically a one-off weird situation here, right? And so overall, the numbers out of SoFi honestly couldn't be better. Like this is amazing. Absolutely amazing what the company's doing, what Anthony Noto's doing. I'm a very proud shareholder of this stock. I own this stock in the Patreon portfolio. If I recall, I own it in the Patreon portfolio. I own it in the public account, certainly. I own it in some private portfolios. I'm also a SoFi customer now. I've been enjoying the platform as well, and especially in regards to some of their high yield, like savings and those sorts of things. So honestly, SoFi, a banger of an earnings. And if you're a SoFi shareholder, you should feel very good about things, right? Now, what do I think about the price action of SoFi stock on Friday? It doesn't surprise me, not because of, obviously the earnings were amazing, so you would think like, oh, the stock should be up. Did you see what kind of day it was on Friday? Like a lot of the risk on assets, like AMD sold off 6%. And SoFi gets put in that kind of higher beta names. And when you're in a period of major volatility and things like Bitcoin, Ethereum, silver, that's going to bleed into the stocks I just spoke of, which is something like a SoFi, a high beta name, right? That can make these big, huge moves. And so the price action doesn't surprise me. It should have been up 10 or 15% after those earnings. But Like, you can't control whether a stock goes up or down in the short term. Like, don't play that game. You can't control it. Don't get frustrated by it. Also, another thing I want to caution people on in regards to SoFi. Anthony Noto's trying to keep the business as asset light as possible, but with that being said, he doesn't always do it, right? SoFi comes with risk. And, something kind of bothered me. Somebody actually in my private group is talking about, they're a huge SoFi shareholder, and this is how generational wealth was built, right? Listen. That's not the only way generational wealth is built. Can you go super heavy in on a stock that's a game changer and make that's a possibility. But you don't have to risk the farm to make generational wealth. How you can make generational wealth is have time on your side, have more income than expenses, and make great investments. Not everything needs to be a home run, a grand slam. If you hit plenty of doubles and singles, doubles, and triples, you're going to go a long way in this game, okay? And you will build generational wealth. Where some people get in the problem is they try to swing for the grand slam all the time, right? And go all in a stock that they think is a generational opportunity. SoFi could go bankrupt. You do realize that, right? Like, it is kind of a banking related play, even though they're fintech as well. They can go bankrupt. You never know. Like, all of a sudden the economy turns south and all of a sudden there's some major leveraged problem at SoFi. And next thing you know, like, they could go bankrupt. Or they could get sold for, $6 a share or something like that, like a crazy price like that. That happens in the banking space, right? And once again, Anthony Noto's trying to keep the business as asset light as he can, but that doesn't mean you're always going to be able to do it. Sometimes you're going to take on loan risk. And so, like, don't ever think with a stock like a SoFi, don't ever think like that's, I got to go all into stock or something. Never think about that with any stock. And especially anything in the fintech or banking world, like, they come with big risk. They absolutely come with big risk. And so build generational wealth by having more income than expenses, invest in that wisely into great companies, building a great overall portfolio. And, over 10, 20 years, you'd be shocked at what you can achieve. Versus, trying to swing for a grand slam all the time. And it's like, dude, like, might be a grand slam opportunity, might not. And if you're wrong, oh gosh, you're going to set yourself years back. And the one thing you can't afford to do in this game, if you really want to build generational wealth, you can't set yourself years and years behind. You set yourself 5 years back, 7 years back, 10 years back because you were leveraged a position or you went all in or something like that. Oh my gosh, it could be absolutely devastating to, where you're trying to climb if your goal is to actually create generational wealth and get to a $3, $5, $7, $10 million portfolio. Like, oh gosh, right? So, okay, so that covers that. AMD. Okay, am I expecting AMD to beat, miss earnings? Am I expecting the stock price to go beast? All that good stuff, okay? Listen. It's very important you understand history regarding AMD, okay? And when I say history, I'm not talking about 20-year ago history. I'm talking about the last few years, okay? This shows you the earnings history of AMD. What do we notice? They almost never miss numbers, okay? The only quarter they missed was like this quarter back in 2022. They missed EPS by 3 cents and they missed revenue by $83 million. Okay. So first off, if you're expecting a miss on either line item, extremely low probability. The chances are they're going to beat their earnings per share. They're going to beat their revenue. Now, is there one you could be more confident in? Absolutely. The one you could be much more confident in is revenue beat, right? Like, look at the revenue beats. There's some quarters where AMD will not beat the earnings per share. Now, I think it's pretty probable for this quarter and future quarters that they're going to beat not only revenue, but they're also going to beat earnings per share as well. Here's why. They're going into a high margin chip cycle now at this point in time. It really started kind of with the 355, but the 450 is going to be blow off the top. That really goes into major production this summer, right? And so that's going to be likely some of the highest margin chips AMD's ever sold, right? And so I'm expecting margins to be better than folks expect really over the next couple years, right? Earnings per share to be better than people expect over the next couple of years, and revenue to be better than people expect over the next couple of years as well, right? So we should kind of get a, an overall, let's call it very kind of positive momentum going for quite some time here. If we look at what analysts are expecting for this quarter, 132 is their estimate for EPS, which is 21% growth. I think that's a little low. I definitely think that's a little low. I think I would expect closer to a 30% number. And as far as revenue growth goes, 26% in this quarter, only 25% next quarter. I think both those numbers are low as well, right? But the quarters I really think is way too low. Is like, look at the June and September quarters, 31%, 26%. You gotta understand, like, we're gonna be likely into some sort of production, if not major production, for 450 series by here. And I just think analysts are way too low. So now, with that being said, what do I think is going to happen with the stock price of AMD? Well, first off, the stock price could go down Monday, right? It's no guarantee, but it's very possible. Like, if you continue to have money sucked out of Bitcoin, Ethereum, the silver collapse and gold collapse continues, you could see more sell-off on Monday, right? Maybe even into Tuesday. Like, we'll see, but a lot of that's going to depend upon, is there even more damage in the commodities market? Leverage has to come out, those sorts of things, right? But I think after the earnings, let's call it Wednesday and after, unless, of course, the market's tanking or something, I think, if anything, the stock's going to go up pretty significantly. The fact that it's selling off before earnings, I think, is actually a good thing rather than a bad thing. So that's my opinion on that. With that being said, am I going to play call options or something like that on AMD? Absolutely not. No. Who knows? Like, the stock could go down to 200. You never know. I don't need to stress myself out with trying to, think if I'm going to be right on AMD. Like, I'm going to place call options because, if the stock goes down Monday, Tuesday, it might go up because they're going to beat earnings. Like, who knows? Like, Wall Street's crazy. Like, they could sell the stock off more, right? And go down $200. And you're stuck with all these call options that expire worthless the next week, right? Like, we don't need to play that game. Big investor in AMD. I have over $1 million in that stock. If it goes down the short term, it goes down the short term. If it pops big on earnings, like I think it probably will, but it might not. But it probably will. Great, I'll make a bunch of money. I don't need to stress myself out with call options, and the stock needs to be a certain price by a certain date. And oh my gosh, no. I don't need to do that silly foolishness of gambling, right? Like, you want to make it to the big boy leagues, you got to make big boy moves, and you don't make big boy moves by gambling on call options, okay? Okay, let's get into Tom Lee.
Have you, Professor, I'll start with you. You call this an excellent choice of Mr. Warsh, your first pick. Why?
He's the most experienced. I think he did a great job during the financial crisis. He's gotten, as you know, praise across the board from central bankers, not only those on Wall Street. Certainly he likes a lot of Trump's policy, but he's not going to be a lackey. He's not going to be a toady. I mean, look at the dollar jumped. I think it was a lot of international concern. Trump was going to put someone in that's just going to lower interest rates. Well, that's not happening. I think he picked the most responsible, qualified man here. And I think that's a very positive for Wall Street and the dollar.
Wow, interesting commentary there, Professor Tom Lee. You agree with that? And what do you make of the very trades that I highlighted at the very top of this show? Because it's so dramatic. Silver's rollover today, as was the run-up that we've seen.
Yeah, I think it is a good choice for Fed share. And the move in gold and silver today, it's an interruption. So clearly the market is rethinking the implications of a new Fed share. I think the timing was a surprise because it all kind of came out last night. And I think it's very healthy, actually, for silver and gold to be seeing some profit taking, because that was a juggernaut trade that I think in many ways was like a vortex sucking risk appetite from everything else into those two trades.
You think those two trades are done?
By the way, what's interesting about that gold and silver move is people are like, the silver shorts are making so much money now. Dude, the silver shorts have been getting obliterated. Like, they kept having to try to go in and short silver. Like, look at the 6-month move. It's up 121%, right? So you go in, you're like, the silver move's way overdone. You short it, right? And it goes up more, right? And then you try to hope it goes down. It goes up more, you short it. And you're like, crap, it's going up more. I got to cover that. And then you try to re-go. Like, dude, you could have tried to enter this silver short 5, 6, 7 times over the past 6 months, if not 10 times, right? And, okay, you finally won. Dude, you know how many times you got called out on this? Like, you probably got liquidated. Your whole portfolio's probably gone by the time you even got the chance to finally make some money on this silver short. So, no, the silver shorts have not done well. They have not done well. they've gotten obliterated. Maybe there's some guy out there who got super lucky and, went in when it was 100 plus and, has cashed out a big profit. But dude, I can tell you, most of the people that have been short on silver, like the past 6 months, has gotten absolutely wrecked and probably lost their entire portfolios.
I mean, you talk almost as if you think this is merely a pause that might refresh. The velocity of the move out of silver today is somewhat startling to look at. The market's not supposed to act that way.
Yeah.
I don't care what happened back in 1980 or whatever. It's not supposed to do this.
That's right. I think there is some fundamental reasons for silver to be rising, and gold is, of course, now should hold a place in someone's portfolio. But those were parabolic moves. I think you're right that could look like blow-off tops similar to 79.80. We won't know with the fullness of time.
Okay. Professor, what do you make of those trades?
100% disagree. In regards to Scott's opinion, like the market's not supposed to do this. Yes, that's what the stock market does, Scott. You know this. It does stupid things. In the financial markets in general, like silver goes up, 150 something percent and then drops, 28%. Like, dude, that's just what the financial markets do. Like, stocks are crazy. Like, should Palantir run to 200 plus? As a Palantir shareholder, no. I don't believe it should have. Should Tesla right now be 450 or whatever price it is, 430? No, absolutely not. But stocks do crazy things. Absolutely ridiculous. Should Meta went down to $88 in 2022? Absolutely not. Should Palantir went down to $6 in 2022? Absolutely not. But it happens. The financial markets can be extremely irrational on the upside and the downside moves. Stocks in different financial assets in general will go way higher than they should have. And they'll go down way more than they should have. Like, that's just the financial markets for you.
Often talks so heavily about stocks, and we will, but these are the moves that have grabbed everyone's attention. Gold, silver, dollar, probably find a few other things too.
I agree with Tom. When you have so many momentum players that join gold and silver, just playing that trend, this is exactly the type of reaction you get, that parabolic move down and then any little piece of news, a little selling, and maybe just the confidence, hey, Russia's not going to debase the currency. That's enough to trigger this sort of reaction. This could be the high for quite a while, but I still think that, I agree that, having a sliver of gold or some gold in your portfolio is probably still a good idea. I mean, it is a good counter-cyclical asset. It does diversify against risk assets.
Okay. So, Tom, your call on the market has consistently been that
if I had to say, like, let's say my mom was an investor, which she certainly isn't, but let's hypothetically say my mom came to me and she's like, Jeremy, should I buy gold or should I buy silver? Silver. All day, every day, baby. Silver. 100%. Silver just has so many real world use cases, and with technology and the way technology is developing, it seems like silver just has way more applications for it than something like gold, right? Obviously, we know gold for jewelry, but silver is also big in jewelry, but that's no. So I definitely would prefer silver over gold.
I think we're going to have what you describe as a three-phase market. You have...
But that opinion has not changed in years. That's the way I've been for years. Like, years ago, I bought a bunch of silver. I could have bought gold, but I preferred silver. And silver's been a much better asset over the past few years. Much better.
To the year, and in all respects, we've seen that. We've hit record highs this week again on the S&P. You're going to get a drawdown. You've even used the words bear market. And then we're going to get a nice ramp into year end that you think can get us to 7,700 by the end of the year on the S&P. Explain.
Well, it has been a good start. And as you know, many people kind of follow what markets do in January because that sets the tone for the year. And we're on a positive start. Plus, the first week was positive. It's a good omen. So I actually think our 7,700 is probably low. I think the S&P could maybe even do 8,000. We're not sure. But we also know that there's a few things that need to be digested. 3 years of good gains. A lot of good news is priced in. There could be a policy shock. There's been a lot more, and maybe part of it is the White House picking winners and losers in front of the midterms. And the third is that we have a new Fed that the market is going to test. And I mean, today's a taste of it, right? That we have an announcement of it, and the market's already picking winners and losers among commodities or assets or dollar. So I think those can contribute to a drawdown. Last year, it was a policy shock that took us down 20%.
Professor, how does that summation from student Lee sound?
Yeah. Tom is gutsier than I am in making short-term predictions. He has actually a fairly good record. I would like his opinion. I mean, we do see rotation. I mean, the AI phenomenon is magical. Might this be the first year in 3 years where we see the other 493 stocks outperform or not? I'm calling. I wouldn't be surprised if the S&P only did 5 to 10% this year, but the non-Meg 7, the rest did 10 to 15 or even more. It's really hard to say when that might come, and AI is still booming, but I think. I would like to know his opinion. Is there more competition, more doubts about adoption, more fear that there could be a technological breakthrough that might penetrate some of the moats of these great stocks?
Do you want to answer that? Because you're pretty bullish these names.
Yeah. Well, one, all of them are linked to the importance of AI, and as the tentacles in AI grows, they all benefit. I think a lot of the progress in AI is invisible at the moment. That's why markets are kind of questioning things like what Microsoft reported. But I think that those invisible gains then lead to productivity. But it's at the same breath, this year, I think the market is broadening because we've seen a lot of other trades work besides the Mag 7. And it's not a bad thing. I mean, that to me is not late cycle. A broadening of the market is as a mid-cycle phenomenon, right? Because basic materials are doing well, small caps are doing well, a lot of industrials and healthcare. So that's a sign of a broader market, which is the other 493.
It's a sign, I guess, Professor, of what some...
Yeah, the market's... I think the market's very confused. Market doesn't know what's going on regarding AI specifically, okay? And here's how you can tell. Stocks like Nvidia, stocks like AMD, right? Let's say you're super huge, like ultra bull on AI, and this is all game changing, and we're changing the world forever. We're changing humans forever because AI is going to be so big and the super intelligence and all this stuff. Okay, so you're like totally on that wavelength, and like this is going to be fundamentally disrupt countless business models and countless economies around the world, and like this is the biggest thing to ever happen in human history. Okay, Nvidia and AMD should be dramatically higher than where they're at right now, if you truly believe that. Okay, dramatically higher, because those are the two hardware companies at the front of this revolution, right? And they're not. Like Nvidia should be $300-400 stock right now. AMD should be a $300 or $400 stock right now, if you truly believe that. Okay, I'm not talking 5 years. I'm talking right now. Those stocks should be that. They're not. So the market's still not even necessarily convinced in a super huge way that this is an absolute game changer, right? Then Nvidia is trading at a forward P right now of like 20 something, if I recall. 20 something for Nvidia, and you believe this is like changing the world forever, and it's at a forward P in the 20s? Well, that doesn't make any sense. Come on. So there's that. Okay. But then you look at all the software stocks selling off huge because AI is supposed to be this huge disruption. I guess it's going to disrupt Salesforce, and I guess it's going to disrupt ServiceNow. It's going to disrupt Adobe and Intuit and all these great companies that have some of the best business models we've ever seen in history. It's going to disrupt them all. Then why is Nvidia and AMD not dramatically higher than they're at right now, right? So the market doesn't know what's going on. The market is doubting the AI revolution, which is fair. You can doubt the AI revolution if this is actually a game changer for humanity and for economies and for the world forever. Okay, it's doubting that clearly with AMD's and Nvidia stock prices. They should be dramatically higher than they are, and it's also like thinking it's real and it's going to just totally disrupt all these SaaS plays, and it's like so the market's just confused right now. It doesn't know what to believe. And so that's why you have this phenomenon where AMD and Nvidia are trading way too low. And you also have a phenomenon where, like they both can't be true. They both can't be true. One's true and one's not, right? Maybe this isn't as crazy of a game changer as we thought. Like maybe AI is cool and it's going to add to productivity some, and it's going to add to, it's going to hurt, help with certain things, right? And cancer diagnosis and things like that. And it's going to help, right? But it's not like, oh, this is fundamentally changing and disrupting the entire global economy and all these companies, right? If that's true, then these SaaS plays should not be selling off the way they should. These stocks should actually be appreciating greatly because they're actually going to make money from AI, right? So the moral of the story is it's doubting both, and it's like you can't doubt both. One's got to be true and one's not. If AI is nothing, then, or it's just a little something, then, dude, the fact that these SaaS plays are selling off is ridiculous, and these stocks will double up or triple up in the next 36 months.
Describe as a run-it-hot economy that is a run-it-hot stock market, and all those cyclical areas are the ones that would do well. Now, normally after we would get a few of the mega cap earnings reports, I would ask you, well, what did we learn about the mega cap stocks this week? But I don't think we learned anything, because I think the group shouldn't be discussed anymore as a group. And we learned whatever we did about Microsoft, and we learned something different about Meta, and thus the stocks reacted differently.
I've never seen, the Mag 7 react so differently. They usually just go together, and we think of them as a group. But continuing on what Tom said, I mean, really only 15 to 20% of firms have really even begun to use the potential of AI. And I mean, those are the ones that I think really have a great opportunity to really raise their profits. And we might see layoffs, et cetera, and so on. But that's part of a cost cutting in a technological boom. And that's why I think in some way they have the potential to outperform the Mag 7 this year. When you start out at 17, 18 times earnings, you don't need much above expectations at all to really have a good move with a profit increase.
Let's talk about earnings real quick before I let you go. We start out with the shrimp cocktail. The bank started out, and then we get the meat potatoes, and we're starting to get the entrees. Like this, the company's.
Before we go into earnings, I want to show this because they were just talking there about these stocks usually go together. In all due respect, Professor Jeremy Siegel, in all due respect, sir, that's not accurate. These stocks do not just move together. They really don't. I pulled all the way this up from, where the stock market bottomed in that fourth quarter of 2022, right? Look at how dramatically these stocks are different, right? You have Nvidia up over 1,000% since that time. Meta's up 543%. So already you got an insane divergence between Nvidia and Meta, right? Then look at how big the divergence is. It's like a double up divergence here as well. Between the third stock, Google's up 246% since then. Then look at this, how big the divergence is between that and the next stock. Amazon's up 156%. Then you have Tesla up 135%, Apple's up 75%, and Microsoft's done the worst of the bunch, and they're up 73% since then, right? These stocks are not equal. You can put them in the basket just because they're all like $1 trillion plus type market caps, but they are not equal. They are not equal.
Really matter. Estimates are high. We're exceeding them to this point. What's interesting to me is the price action has not necessarily matched the reporting. Reports good, price action not so much, even among those that have done well, Meta excluded.
Yeah, the numbers played out. If you compare this quarter versus last quarter, companies that are beating are rising a lot less. Basically 0.5% now, 5-day gain versus 2% last quarter. But the ones that missed were falling 5.5% last quarter. They're falling 3%. So the market is almost taking the edge off on earnings results. But I think you did point something out that's true. I think it's the first time ever that Meta and Microsoft had a divergent move. They've almost always moved directly on the same day, and one was down 11%, one was up 11%. Or I'm getting the numbers wrong, but that's like a 3 or 4 standard deviation divergence.
Professor, lastly to you, are you confident that earnings can live up to the hype? Because they really have to. It's where the growth, so to speak, in this market is going to come from. It's not really going to come from multiple expansion anymore. It has to come through earnings. What do you make of that?
Well, it certainly has to come through earnings for the Mag 7, but, I don't, the non-Mag 7 are still selling at 18, 19 forward earnings. And, I think that's extremely reasonable. Certainly, the outlook, listen, let's hope we got this government shutdown taken care of. A really good Fed pick out of the way. We have one little more speed bump to go. We need to know what SCOTUS says about tariffs. That's going to come, at the end of February. And after that, let AI do its work. I think the skies look clear for a really great year in 2026.
All right, we'll take your forecast for now.
Oh, that bothers me. That bothers me, man, when they're talking about, sky's clear, it's going to be a great year. Because, so many Wall Streeters went into this year. That's the one thing that gave me pause about 2026. I'm like, gosh, man, everybody's so bullish. Oh, it's going to be a great year. That bothers me. I like it more when people are like, I don't know about this year. Like, this year scares me. Like, we got a lot of potential problems this year. Like, I like it when people are cautious. When I hear this, I think it's going to be a great year. I'm like, now I'm doubting it. Now I'm doubting if it's going to be a great year, right? So, anyways, it is what it is, okay? I appreciate y'all for joining me as always. Thanks for being here. Thanks for smashing likes. Thanks for being subscribed to the channel. Additionally, main channel, financial education. If you haven't got to check out these 2 videos, make sure you check them out. I just bought a new stock, $60,000 spent 2 days ago. 115,000 people have gotten to watch it. And then this one, age 36, net worth 40 mil, every single investment I own. 95,000 people have gotten to watch that so far. Pin comment down there today. If you're looking to apply to our private stock group, private wealth group, we'll send you Steel membership cards in the mail to your house once you join us in there, including our new 2026 private group card. I still got this baby in the plastic. And when you join us on a lifetime basis, we'll send you your black card, your lifetime membership card. Appreciate you. Much love as always, and have a great day.